Welcome to the final day of Venturing Capital. Now, for some of you, this is day one. So welcome, and you're about to get a bit of an introduction as far as how the day is going to go, a little bit of an introduction about WI. For those of you that are joining, and this is your maybe third day or fifth day, I hope you're enjoying the content so far. And by now you would have realized how far we've actually gone to make this an experience for you, and also how far we've gone to provide you with some of the greatest minds in the venture space so far. And then today, obviously leading into the digital assets area. Today is proudly sponsored by Mind Digital, allowing you to buy and sell cryptocurrency with confidence. And also we've got the founder and CEO Grant speaking at a later session. So make sure you go to the agenda and look at the session that he's going to be presenting in, and make sure you tune into that, because I think what's really interesting about the exchanges is they get an insight into what's happening from an order flow perspective and what's happening from an activity perspective, which can provide insights for you going forward. Also, as a corporate partner, we have Rocking Horse Finance, who do an incredible job of assisting growth companies in accessing their R&D financing earlier. Now, today is all going to be focused around digital assets and technology. The opportunities presented today are obviously within the crypto space, fintech, blockchain, and also crypto funds management. Now, we're very fortunate to come across some absolute experts in this area, and today we have gone all out in bringing them together for you, because the whole thinking about this for us, we know it's a new class of asset, right? We also know that even though it's been around, even though the famous sort of Bitcoin white paper from 2008, it's been around for some time, it is still incredibly early. And we also know that when it comes to adoption curves, it's also still incredibly early. The fact there's only a couple 100 million wallet addresses is testament to that. But also understanding that right now, the crypto is growing at a rate of 130+% gives you some perspective compared to the internet, which was growing at 67% in 1997. Now, if I've got these stats slightly wrong, apologize, but you get the idea. It's growing incredibly fast. Now, we're very well aware that this last 18 months has been a bull market for crypto. And people get excited, there's a whole bunch of hype, there's all sorts of stuff that goes around. Disregarding all that, said what we're always looking at is from a macro perspective and what is the greater opportunity. Crypto is going to go up and down. We've literally seen that over the last couple of weeks. But this opportunity that sits in front of all of us, whether it be from an investor perspective, whether it be from a founder's perspective, whether it be from an industry perspective, everything is changing before our eyes at a rapid pace. And today what we've done is we've broken the sessions right down into key areas as it relates to what we're seeing. So first one is blockchain technology itself and the transformational effects that it's having. Then session two is around the trends in actual cryptocurrencies and digital assets, as far as what's the investment aspects, what's the network effect that's taking place right now, and also how are exponential opportunities being created. And you're hearing directly from crypto fund managers themselves, right, who are some of the leaders across ASEAN. And we're bringing them to you direct, and you've also got an opportunity to network inside our event at Brella. Also, if you think about what's been created just in the last couple years alone, we're helping you understand and give you insights into the opportunities and challenges in regards to security tokens, NFTs, and DeFis. Each of those are going to become or are already becoming incredibly prominent, but they're also just beginning. Session 4. This has been one of the most important transformations since the 2017 boom, is the exchanges and infrastructure. There has been so much investment into exchanges and into the infrastructure of this new economy that sits inside the digital asset space. And we're bringing the people that are leading that charge, the people that are early players, to give you direct access to their insights and what they're seeing from their perspective. And obviously one of those is also our sponsor, Mind Digital. Now, session 5 is then the fund managers, right? This is where you can hear from the guys that are managing anywhere up to 100 million plus in crypto funds, what they're investing into, what their thesis is, what their approach is. They're also building ecosystems, and they're doing their best to share their knowledge and share their insights with you guys as an attendee. So we have gone all out as mentioned, but more than that, we want to make this as engaging as possible. So Inside the Brella app, there is your opportunity to engage and network with the investors, right? It's your opportunity to engage with the companies that are participating. Now, I said we have got some really incredible blockchain and crypto and technology related companies from around the world being featured today. Some of the most exciting projects, which investors are sort of coming to us and bringing to us with. I said that's also been featured. They're also inside Brella, and you can chat with them directly. You can learn more about their projects, etc. So that is my introduction for the final day of Venture and Capital. This is one of the most exciting days that I've ever had the opportunity to put together with our team and what we can bring for you from a conference perspective. Enjoy the final day of Venture and Capital.
Hi, my name's Cameron Story and I'm the Director of Sales at Rocking Horse. I want to welcome everybody here today tuning in and say it's a pleasure to be presenting for you. At the very top line, we like to say that we provide smart investment to clever innovation. How do we do that? By providing R&D finance up to $30 million for high potential innovative firms undertaking eligible R&D activities. That's it in a nutshell. So who are we? Rocking Horse was created in 2015 in order to help innovation in Australia by leveraging the R&D tax refund so that businesses could meet their capital needs without raising equity. By 2018, we had provided 200 loans and we received our first institutional funding from National Australia Bank. By June 2000, but this year we brought in new institutional funding, which has meant we can lend much greater value than previously in a much more streamlined and less expensive fashion. To date, we have provided more than 400 loans. Most of the companies we lend to are startups or early stage, most pre-revenue and on the road to raising capital. But as you all know, it always takes more money than you think to realize your goals. And being pre-revenue, there are not many big banks handing out money. And most are at this point reluctant to hand over chunks of their company before it's valued somewhere near what they know its potential is. And that's where we can help. Should you be eligible for an R&D advance, then there are a number of reasons debt is much better than equity. Firstly, Rocking Horse, as a lender, has no claim to equity in the business. So debt does not dilute the owner's interest in the company. Secondly, the lender has no claim on any future profits of the business. So the owner reaps a larger proportion of any future awards than they would have if they'd sold stock to fund their growth. Thirdly, principal and interest obligations are known amounts which can be forecast and planned for. Interest on the debt can be deducted from the company's tax return, lowering the actual cost of the loan. Lastly, by keeping that control of their business, the company doesn't have to send periodic mailings to large numbers of investors, hold periodic meetings of shareholders, or seek the vote of shareholders before undertaking certain actions. So, why should you finance your R&D? With the way we work, you can draw down multiple times through the year, and access to new cash flows can significantly accelerate R&D plans and growth. What this means is you can get access to that extra bit of cash needed to hit that milestone you're so close to. Obviously, there are markers and targets you want to hit before going to market, and this is where this boost of finance can help. It's so much better to hit these milestones ahead of any capital raise. Financing with an R&D advance therefore helps you increase your valuation ahead of any capital raise. So often companies can be forced into a capital raise before they're ready, before they've shown exactly what it is their company can do. With Rocking Horse Finance, you can get to where you want before you sell equity, and your business is worth more because of it. The process itself is extremely streamlined and very simple. We require a small amount of company information and contact with your R&D tax consultant. And once the boxes are ticked, we can lend the money in a matter of days. As far as timelines go, we have either short-term funding or longer quarterly loans. The short-term funding is along the lines of a 3 to 6 month loan. We can lend up to 80% of what your expected R&D rebate will be. You can borrow that money towards the end of the financial year when you have a better idea of what that spend will be. However, clients get the most benefit from our quarterly funding. We can lend at the end of each quarter based on that previous quarter's spend, and we repeat the process each quarter throughout the year. This gives businesses a chance to reinvest straight back into more R&D, which subsequently means they get a bigger rebate at the end of the financial year. In a graph format, it looks something like this. This is a simplified explanation, but the principles are all there. A company expects to spend, say, $500,000 in R&D over the year. That's $125,000 each quarter. That means at the end of each quarter, they can borrow $43,500, which is 80% of that expected rebate amount for the quarter spend. If they reinvest that for the quarter, it means each quarter spend will be $168,500. So they accelerate growth and commercialization through the period. And then at the end of the financial year, their rebate is far bigger as well, $293,000 or thereabouts, compared to $217,500. So again, that's it in a nutshell. We fund innovation. We help you accelerate commercialization. We let you retain control of your own business. We can help you hit milestones ahead of capital raises, and we get the finance approved quickly. So if this is of interest to you, please do not hesitate to reach out during the conference or head to rockinghorsegroup.com.au to find out more. Thanks very much for your time, and I hope to hear from some of you soon. Good luck in all your ventures going forward.
So very good morning, afternoon, evening to everyone globally out there in the world. And today we will be covering venture and capital event on the topic of blockchain technology and its transformational effects. We have a really distinguished panel today that's highly global, highly diverse, and we're looking forward very much in the next 30 to 60 minutes on how we're going to cover some exciting topics. But before we jump into that, let's get a little bit of a view on some of the background of our panelists, and I'll just be calling out some names on what I see on the screen, and probably can give a little bit of background on who you are, what you do, and basically a bit of introduction on yourself. So starting first, Gillian, would you be able to share a little bit on yourself?
Well, thank you so much. I'm delighted to be here. I have to say that a number of years ago, I lived in Sydney for 3 years, absolutely loved it, adore Australia. And I spent 2 years in Singapore after that, actually. So I'm delighted to be back in this part of the world again, if you like. I'm Irish, as you may or may not be able to tell from my accent. I've been working in Fintech for 30 plus years. I started off my career at JP Morgan in London after I finished my degree in Ireland, in Trinity. And since then, I've been working in the Fintech industry. I started off as a programmer, then I moved to Australia and I went into Fintech PR, so switch sides if you like. And then about 20 years ago, I moved into more writing again and journalism. So right today, the last 4 years, 4 years ago, I discovered blockchain. So I'm a recent convert in the industry. I adore it. I have an activist past, long story, won't go there now, but I fought the banks and the governments and all the rest of it, and I kind of won in the end, I think. But anyway, I have a deep appreciation and passion for this space, and it's led me to, as a result, pre-COVID, I was traveling the world, chairing conferences, and also interviewing people and talking to people. So it's been a great privilege for me to be a journalist in the space, in an industry that I am passionate about, and to talk to people who are making a difference. So I'm very happy to be here today. Thank you.
Thank you, Gillian. And Daniel, would you introduce yourself?
Yes, I'd love to. Well, I've been in the technology market for 30 years. I've seen a lot of changes. Actually, as a kid, I started out with a Commodore 64 and programming in BASIC. And, it seems a long way back, and dial-up modems and things like that. So actually, I've been involved in blockchain for about 7 years. I had the great privilege to work with MIT University for 18 months marking papers on the blockchain course that they had, which was through a company called Get Smarter. And that was really amazing experience to see all of these people that have signed up very passionate about blockchain, and then finding out that most of their papers were about their own business idea, which was fantastic. So I got to really see a lot of different ideas from people around the world. So at the moment, basically, I am in charge of 2 different companies besides International Blockchain Labs, where we really do research and development. I'm the CEO of Speed Dragon, which we're launching as the world's fastest crypto exchange. So that's 1 foot in the centralized space. And then on the decentralized space, I'm the CEO of ZK Tube, which is a leading layer 2 solution using zero knowledge proof. And yeah, again, I think like Gillian, I'm very passionate about blockchain. You know, when I first joined, everything was about decentralization. And then I realized that, you know, this is not really the case. You know, most of the exchanges and major business applications were using centralized systems and private systems. And I think now, particularly seeing, you know, Ethereum being developed further with layer 2 solutions and the new version coming, I think this is going to really bring big business to the Ethereum network. So I'm very excited about that. I've sort of been waiting for Ethereum to take off as a business application platform, and I think now is you know, the time that this is going to be happening. So I think we're at a very exciting time now where that shift from centralized to decentralized is starting to make a lot more sense, and that the ecosystem has developed a lot further. Some very smart players and, you know, excellent brains in this blockchain space, and especially having good journalists reporting what's going on as well. So that's it for me.
Thank you very much, Daniel. How about Jason? Will I introduce yourself?
Yep. Hi, my name is Jason. I'm currently the Chief Operating Officer for the Algorand Foundation. And the Algorand network is a public permissionless protocol. And we have the Algo token as well. So part of my role as the foundation is we have the Algo tokens that are in our stewardship that we run programs on behalf of propagating the Algorand ecosystem. So we run grants, accelerator, bounty programs, and also invest in companies and support the organizational growth of the Algorand network and the foundation. I also sit as a board member to Blockchain Australia, the peak industry body for Australia to advocate blockchain technology. And also I'm involved in a number of sort of industry groupings in the ASEAN region, formerly a banker, recovering banker, Standard Chartered Bank in the Asian region, and also a fintech startup co-founder, and then moved into the blockchain space like many of you about 3 to 4 years back, and have not looked back since. So very fascinated as we talk about our past background to now look into the future of what the world of finance will look like. Thank you.
Thank you very much, Jason. Nakul?
Yeah. Hello, everybody. My name is Nakib Mohammed, and I have a shorter stint in blockchain, 3 years plus. All my career, 12 years plus, I've been a core IT technologist. I've worked on telecom and big data analytics sector all my career, delivering solutions half the globe. Like I've been traveling. That was part of my job, working with different tier 1 telecom operators around the globe on big data analytics and customer experience management solutions. When I ventured into blockchain, it was more on the enterprise side, and that is where I came across early startups like Hashgraph and Algorand. Algorand was just starting at that time. Jason, I'm a very early supporter of Algorand and one of my most favorite platforms out there. Yeah. So when researching like more into the enterprise sector, I looked into Hyperledger and all, and this was where I was implementing and developing solutions. I started into the financial side of blockchain and then into DeFi and crypto. When working into that, we realized that the DeFi is definitely meant to be borderless. Borderless is something I always borrow from Algorand, great word. So DeFi is meant to be borderless, but it is not yet inclusive. So that is where we conceived the idea of Marhaba, which is coming up as the first inclusive decentralized financial platform. We are building an ecosystem together. Most of it is blockchain agnostic, chain agnostic. Yeah, so happy to be in this space and happy to be part of the conference. Looking forward. Thank you.
Thank you very much. And Lenore, would like to introduce yourself?
Yes, thanks very much, guys. And it's a pleasure to be here with you all and learn more about your backgrounds. My name's Leo Groen, and I'm a partner at a Swiss-based venture capital firm, Blockchain Valley Ventures, or BVV. We've been actively investing and deploying capital into the ecosystem for 3.5 years now, and set up really with the idea of trying to bridge the traditional financial world with the emerging market opportunities, not necessarily on liquid trading strategies around crypto, but really very much actively involved in supporting projects, early stage companies, and the future pioneers in this digital asset ecosystem. So we really focus on Europe, Asia, and Australia cross-border opportunities, and that's where we really spend all of our time. So I've spent the last almost 2 years in Singapore, and currently back here in Switzerland, where we're basically brought together our two strategies now. One is on the equity side. We're investing in companies, bringing this whole industry forward, including cybersecurity, data, and all of those other bits and pieces which are not directly on the chain, but really facilitate that ecosystem, as well as our crypto native strategy, which is really crypto venture capital to its core. So coming in early, backing early stage projects and helping them on their journey to pave the future of this industry. So pleasure to be here with you all. Thank you.
Thank you. And just a very quick background myself, I'm Blim, a founder of Vision Group. We focus very much in areas of future tech, specifically technologies that will mature in the next 3 to 6 years. So we look very much at implementing AI, blockchain, and cybersecurity for companies that want to future ready themselves and eventually look at how to turn their vision to reality. So really excited today with such a distinguished panel, global experience and highly diverse. And I'm going to kick off the first question on what is your view on what will the world be like in 10 years and what you think will change in the financial world from now till then. Open up to the floor and any views that you might have.
Yeah, I'm happy to kick it off. I think that the finance world will be transformed, reformed, and take a new form altogether. You know, in the way we trade, transact, and store value, which I feel will be reorganized in a whole radical way. To quote a financial thought leader, Chris Skinner, he said that thousands of years ago, we invented the money. We still have money. Hundreds of years ago, we invented the banks. We still have banks, which now facilitates the transaction of money. And decades ago, we invented the internet. And with money, banks, and internet technology coming together, stacked on top, we're now giving access to billions of people on this planet the opportunity to transact and finance, not just on the traditional 9 a.m. to 5 p.m. basis, but 24/7 real-time trades. And we are still yet to see the full implications towards what the future of finance will look like in the next 10 years. So if you ask me where finance will look like and how it would change, we will see the stacking of money, banking, internet, and there's just a sliver of a groundswell of innovation that will happen in the way we see the world of finance. So I guess this is a bit of an opening that I'd like other panelists to share as well in where that 10 years would look like.
I was going to just add to that. I think it'll go slow, 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 and then very fast, because I know Chris Skinner too as well. I interviewed him recently. But if you think about it, here in Ireland, we have public holidays. We still call them bank holidays. You know, there's that legacy is still there. And the whole idea of banking is only recently, you know, banks used to close for lunchtime. You know, and they would open at 10, you know, so the opening hours and the access and they weren't open at weekends. They totally dominated our lives unnecessarily. Well, not necessarily, but they had control and they kept us by the short and curlies, to use a euphemism. But it's going to change because people, you know, young people, you know, Generation Z, and even old folk like me, we don't really like the banks because of what they've done, and there needs to be a change. So I think it'll be like the smartphone. You know, we had it. How old is a smartphone? Is it 12, 15 years, whatever? We had it, and then all of a sudden our lives changed. We didn't notice it changed. So I think it'll go slow, 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 and then bang. And it'll, unlike the smartphone, which has the double-edged sword, I suppose, in terms of the screen time stuff, but it will only be for the better. It absolutely will only be for the better.
Yeah, and I think, I mean, just to add to that, right, there's some more tangible applications within the industry. I mean, we've very much taken a mindset, and our thesis around it is that the ecosystem players such as the Coinbases, who have really profited from the growth of and adoption of, retail investors and participants coming in and getting behind, what was initially Bitcoin. And I think we've seen in their second quarter results now, I mean, Ethereum trading is actually now the biggest revenue driver for them, or trading volume that they're putting through in terms of growth rates and people, what people are trading. I think that these are the players who are, taking, exactly as Jason said, that evolution of internet banks and money, and putting that into practice as a new age counterparty for all three of those things. So digital money with a digital service provider, enabling you to do digital transactions. And when I think of a kind of Coinbase versus a Revolut and some of those neobanks, which have been growing, losing a lot of money for the last 12 years, if I can say so, versus a company like a Coinbase, which has 50 million plus retail users, profitable since day one, and is turning out billions of dollars in profits on a quarterly basis. I think that the competitive landscape of this space is just, it's a perfect storm for these massive giants now to go forward with their vision of decentralized future applications within blockchain. And I'm incredibly excited and bullish on what they'll be able to achieve, given their resources, given their proof of concept and what they've been able to do, and the scale in which they've already achieved over the last 7, 8, 9 years.
Great thoughts. Certain things to add to what Jalen said, because I can relate to exactly the problems that I've been facing. Like since the last 8 years, I was based in Saudi Arabia, and Saudi Arabia has a weekend of Friday and Saturday. My home country, India, has a weekend of Saturday and Sunday. So if there's an urgency that I need to send funds across from Saudi Arabia to India, and if I do it post 3 o'clock on Thursday, it reaches India on Monday, because Friday being an off on Saudi Arabia, and Sunday being an off on India. So I mean, the way we have been evolving in the banking sector, and the way we have been evolving due to the applications of blockchain and cryptocurrencies, this has been changing the finance world altogether. And this is a certain aspects the economists don't even understand the progress that we are into. It's totally technology based driving that's going on. I mean, the finance 2.0 or the fintech 2.0 that we are going into is driven completely by technology. As Leo said, that moving from centralized to decentralized and then moving back to centralized, this is what exchanges have been doing. I mean, we take money from the banks, we convert it into cryptocurrencies, and then put it back into exchanges, which is again controlled by centralized entities. So it doesn't solve the purpose. So decentralized finance in real sense is fulfilling the vision of what Bitcoin. I mean, Bitcoin in real sense is the real decentralized currency. But the way it went in the last 5 to 6 years in the blockchain space, it totally destroyed the concept. But due to this advent of decentralized finance-driven applications taking up the market, I don't see enterprise blockchains anymore making the news. It's all decentralized finance and financial-based applications. And this is where I think the world is moving across.
Sounds good. Daniel, do you have any inputs on that? You're on mute, Daniel.
Sorry about that. Yeah, a lot's been said. I think basically it comes down to we're removing a couple of dimensions. Basically, time is being removed. People have touched on that. Physically having to wait until the stock market opens. I mean, that compared to what's happening in the crypto world, where everything's 24/7, 365. And actually having bank hours. Today I had to transfer 100,000 US to a company, and I needed to physically go into the bank, and I had to adhere to their hours. But I see the future as that first of all, time will disappear, and that everything can be done 24/7. And second of all, location. Not having to physically go somewhere to do something. And I've worked on some projects with law firms, for instance. We're talking about banking, but just talking about contracts, where rather than you having to sit down with somebody, everything will be done through a blockchain system. You've got dispute resolution. So a lot of these things will also go over to the banking world. Actually, it was fantastic. Setting up an account with the Commonwealth Bank in Australia took 5 minutes for a business bank account to be opened, and I didn't need to go in there. You know, a few years ago, that would have been unheard of. So, you know, we've seen disappearing branches, you know, locational branches of banks disappearing. There are banks in Australia now that are functioning without any physical locations, but purely online. So I think, yeah, essentially we're getting that borderless, the promise of the borderless world that we've been looking for, and also, you know, everything just going to 24/7.
Yeah, exactly. So it's really interesting, right? Not only are huge numbers of technology disruptions coming faster and faster, but more so the adoption of people adopting these new technologies as well. Right? I think there was a survey that literally states that for 25% of the US population to adopt the technology, it was like 45 years for electricity, a personal computer was 30 years, the internet was like 15 years, and Pokemon Go was just 19 days. So imagine now with new technologies, how fast will people adopt that, right? And looking very much in the next 10 years, I think it's really good items that we actually brought out in our first question, where we talk from transforming to reforming to taking a new form, or how we stack money, banks, and internet together, slow, and really becoming very fast. And looking at how technology-based driven economies might eventually change, removing the items of time as well as location. So we bring it a little bit closer to the current timeline of where we are today. In the year of 2021, the blockchain and in a way the crypto space has went through a roller coaster ride very much in the last number of years. So what do you think might be some things that hold and stick, you know, from what we had from ICOs to STOs to now the DeFi, the NFT movements and the likes, and it's also in the blockchain space where enterprises are now adopting very much more the technology and the underlying core technology. What do you all think will really hold and stick in year 2021 and the upcoming very close near future?
Yeah, I like your question about what would hold and stick, because I was just talking a couple of days ago to a top lawyer from an international law firm based in Singapore, and she said that she has not seen an ICO agreement the last 2 years. And I know you mentioned about ICOs, initial coin offerings, STOs, security token offerings, and the space has evolved completely right now. And I think the hot topic of this season is decentralized finance, NFT, non-fungible tokens, and also a bit of conversation on the Metaverse, right? Virtual reality taking place as well. I would want to sort of add one point that I feel would hold and remain, which is in the world of stable coins, which is a tethered version or a stable currency of a national currency itself. Just even within the Algorand network, we're seeing stable coins, not just in the US dollars, but the Turkish lira, the Brazilian real, the Canadian dollar, and many more. And the reason that stable coins are unique and interesting is because they offer a pegged value to the currency. It excludes the volatility out of the traditional crypto sense of price movement. And also, the interesting world of decentralized finance is that stable coins also allow you to participate in what is commonly traditional, like lending, borrowing, earning interest, but in a very unique way as well. So this is sort of one area which I feel would hold and remain. And again, the transaction speeds are fast, it's borderless, and there's no middleman. So I'll just stop here. I know the panelists would have other points as well.
Yeah,
I was nodding. Just quickly, quick thing, I was nodding furiously at the Metaverse. Is totally with you on that one. And stablecoins. I'm going to add NFTs, DAOs, and tokenization. Keep over to you. They're my predictions.
Yeah, I mean, look, you said moving from the acceptance of decentralized finance, financial applications, and the enterprise blockchain. So look, the way I entered into the blockchain field was actually when I looked into the way Gartner had predicted the cycle of the next emerging technologies, that everything in the future, the industry 4.0 would be actually driven on top of blockchain-based technology as the underlying layer. And this is how I started into enterprise blockchain as one of the first entries. I mean, I had listened to different speakers on YouTube. They say that if you don't know Bitcoin and you enter and you know enterprise blockchain, then you don't know blockchain. And that was what exactly my situation was. I did not know much about Bitcoin, but I knew a lot about Hyperledger and about what enterprise blockchain does. And going forward, I really noticed that the enterprise sector is not really picking up because people are still waiting for the maturity to happen on the enterprise sector. Because I mean, usually the blockchain hardcore supporters and the Bitcoin hardcore supporters, they don't consider enterprise blockchain to be blockchain at all, because in real sense it does not fulfill the criteria of decentralized system. But then again, decentralization itself has a lot of definitions, and distributed technology itself has a lot of different explanations. If we call Uniswap to be truly decentralized, then we have seen the news in the last 2 weeks that Uniswap took a step to delist some of its tokens. So that means it is in control of what's happening in its platform. So decentralization itself and control itself has a lot of different definitions across different fields. But the way that this has been moving is, NFTs and the Metaverse is definitely driving the adoption forward. And the way the celebrities have started accepting cryptocurrencies as the form of payments, and Ecuador being one of the first country to make Bitcoin a legal tender, probably this is the biggest win that Bitcoin had since its inception. That the bank that was the biggest mocker of this technology actually announced its acceptance, JP Morgan. So people might consider that Ecuador making Bitcoin as its legal tender was the biggest winning for the Bitcoin industry. But actually, in my opinion, JP Morgan accepting Bitcoin and making it feasible for its investors was the biggest win for decentralized money.
Mm. Yeah, I think that's right. That's some really good points there, Nakib. I think 2021 is the year of the regulator. Have you noticed Binance have been kicked out of about 10 different jurisdictions in the last, maybe 60 to 90 days? Binance as definitely, one of the major leaders, not just in have them launching a very successful ICO, the world's largest centralized exchange, but also what they're doing in the decentralized world. That's a company that is trying to innovate and trying to diversify. They're being kicked around by regulators. So it sort of shows that taking a leadership position in this market, doesn't always seem to make you the hero. But the regulators are really becoming strong and more united. I think they're starting to look around the world at what's really happening and trying to standardize. I've noticed that, in applying for licenses in many different jurisdictions, that now things have become a lot more standardized. It's the same questions. They want to see the same types of things out of the systems and the people behind the systems. It's very big about the policies and the procedures that are going to go with those things as well. So I think definitely 2021 is the year of the regulator. From a technology point of view, with Ethereum, 2 coming, I think this is going to really legitimize the decentralized world. Years ago at an event, people were asking me about the future of Ethereum. And I said, well, these guys are early players. I think there's going to be so many other players that they're going to get drowned. Right now, it's still the number 2 highest value cryptocurrency coin. And most people that own Ethereum really don't know much at all about the business application potential that it has, and about layer 2 solutions and the different companies that are playing in that ecosystem. So as was mentioned with IBM and Hyperledger, I've been looking at these wonderful use cases with IBM and Hyperledger as a partnership. You've got Nestle, you've got TradeLens, there's just so many, Johnson & Johnson, so many excellent use cases. But I think a lot of people would agree that, yeah, that's not what we would consider to be traditional blockchain. It's not decentralized. This is permissioned, and basically it's a corporate system like SAP or Oracle. So now it's time for the businesses to start looking more seriously at the development of Ethereum and say, well, hang on, this is sticky. It's not going anywhere. The journalists are starting to say that Ethereum will be the most highly priced cryptocurrency, which means that it's got to overtake Bitcoin, which is a massive margin that it has right now. But with layer 2 solutions really solving the scalability issue, the speed issue, Ethereum has inherently been very secure. I think that now you'll see a lot more of the test cases coming over to the Ethereum platform with layer 2. Vitalik had mentioned a couple of months ago, ZK technology, zero knowledge technology, being probably the biggest winner in the end. Which is why I got involved with ZK Tube, doing these things. But I think definitely decentralization can really now start to get some legs in 2021. At least the regulators are not focused on Ethereum right now.
Sounds good. And Leonore, do you have any inputs on what do you think it's hot right now and upcoming, and what will stick and hold?
Yeah, I think, a lot's been said, and I would just add, right, we're very much focused on DeFi. There's a lot of hype around NFTs and all of these topics, but I think the input layer is what's most relevant. And what Daniel mentioned with Binance kind of facing some regulatory topics in many countries, I think that's, the natural response for regulators is to control the kind of gatekeepers who support or enable the money inflows and outflows of the ecosystem. But what's, I would say, probably nowhere near being done at a meaningful enough scale is regulating what's happening within, let's say, the ecosystem once it's in there. And all of that I include as stable coins, and I think USD stable coins have had a tremendous growth in terms of adoption and use. And we talk about how do you actually get $100,000 into someone's bank account today versus tomorrow. That does look like a fundamentally different process. And I think that these types of things, once we have established, pools of money and value, which is inherent to everyone and their counterparties, not the Commonwealth Bank of Australia, but is the Coinbase or Binance Bank of Australia, whatever that means, has a digital access to a wallet. What can you then do with their money? And I think that that's really where we see most of the applications. And what I would consider is moving away from this idea of customer to counterparty, or even the last 10 years, we've seen a huge growth in peer-to-peer crowdfunding, investing, lending. Where we're really moving to now is a pool-to-pool mechanism. So all of the value can be spread around and moved around to the places where it needs to go for the purposes that it needs to be. And we are all in control of that. And I think that that's really the next frontier, and where we're actually spending most of our time deploying capital at the moment is in projects that are facilitating these pool-to-pool mechanisms. Once the money's in the system, once it's already in a stable coin, then what can it do and why is it doing that? These are many of the questions that I think will shape and continue to drive the dialogue over the next 3 to 5 years.
Yeah, and I guess that very much as regulators start to kick in, that's when they start recognizing very much this as a mainstream, or becoming a mainstream so-called instrument, as well as a specific area that people are really looking into. And that's why regulators are coming very much harder. And there's so much more movement in the technology space in terms of advancements. So let's deep dive a little bit into one of the key trends in the areas of DeFi. And what do you think DeFi might look like coming up in the next couple of months, or even next coming 1 year? It's been really, really hot, and there's a lot of movement and advancements within that space. What's your thoughts in DeFi? Open the panel.
Yeah, I'll maybe just continue the train of thought that I started, really. And I think the reason why, we basically launched a fund to really get involved and back entrepreneurs in this space, crypto entrepreneurs and projects, for the exact reason that we see the opportunities that we have today is what we characterize as the composability of liquidity, right? So we always talk about composability of projects, and you can cross-chain, multi-chain, all of the fun terminology you have in the way in which protocols are interacting with each other. When we take a step, 12 months, and we really look at a 3 to 5 year horizon when we're considering what does the world look like. But it's really, okay, so we have a base level of applications and operations which are facilitating a crypto infrastructure, which has proven to be incredibly resilient. Then the specific verticals, which enable us to, let's say, move forward and provide interesting financial products. This is really where we see that happening. And that's what I think I referenced with the composability of liquidity, which is me as a retail investor. We always talk about, wouldn't it be nice if markets were 24/7? Factually speaking, most of the world's population is not interested in being able to trade 24/7. Right? There are people who like to do that, and most people don't care. Reality is, though, as soon as you give people the opportunity to be responsible for their money, to simply choose different products, providing different, risk-adjusted or risk-return profiles of savings accounts, credit opportunities, and all of these in the one place, and be able to make a very simplistic decision around how to allocate their funds, not into 10 different managed funds and products, or whatever superannuation fund you're being sold by your employer, etc. I think this is really where you have an interesting thing. And the reason I'm so bullish on this is because from a conceptual perspective, I don't think it's that hard at all. I mean, what we're doing here is not necessarily that revolutionary on a first step, right? That next step we're taking. It's getting existing assets and resources that people have today, putting it and applying it into more efficient ways. And that's why I think the catalyst and growth opportunity for DeFi has been so explosive, especially compared to many of the evolutions over crypto over the last 10, 12 years. I mean, this is something that in the last 18 months has really exploded exponentially. I think we're at about 5% of wallets today who are engaging in DeFi of all the total universe of crypto wallets created. So we're still very much at the beginning of this process. And as soon as we have, let's say that inflection point when 51% of wallets and let's say market participants in this universe are participating in this ecosystem, you have a huge financial infrastructure, and that will dwarf basically most other asset classes in terms of what you as a retail investor are allocating into and how you're controlling your money. And I think that alone, those applications that people are creating to facilitate that flow of money is incredibly interesting, and really where I think the next 2 years is going to be dedicated to. And then once you have that money there, being able to move it around and do all sorts of fun things on top of it, that's really where I see long-term bets being made today. And Algorand, many projects that we look at are on the Algorand network and are really very much at the frontier of not just the next 6 weeks, but really the next 6 years of infrastructure developments.
Mm-hmm. Yeah, some good points there. And I think DeFi is one of those things that is the catalyst for the use of decentralized platforms. Looking at decentralized applications before, it was almost like people are forcing the use case for it and not being able to solve the inherent issues. But now, I always say that, where there's smoke, there's fire. And in this case, where there's money, there's going to be opportunists. And I think a lot of people have seen that, decentralizing finance, you're bringing that money to that decentralized platform. This is going to be, I think, what's going to launch so many rockets, in the next couple of years. What do you think about that, Gillian?
Good pass. I was going to say two things. We were talking about the wallets, 5% of the wallets engaging in DeFi. Now, DeFi is massive. Last year, the summer of DeFi, watching everything and all the pancakes and the sushis and everything that was crazy. And then those flash loans, it was just mad. Yeah. But I think, so you're right, in the short term, it will move over there. But the big problem for me is, and I think for most people, it's DeFi is not pushing mass adoption. If you're in, it's very exciting and you're taking advantage of it. But it's like, the reason why I mentioned NFTs is that I think that is grasping people's imagination outside the industry, because it's easy and it's low cost too as well. You're not going to lose your pension if you engage in, well, what you're buying, but you can dabble and play. And I really think it's the whole thing about, DeFi is amazing and I absolutely love it. And I love all the stuff that's going on there, but we need to make it simpler. We really need to make it simpler. So it needs to be as simple as using a social to do something. And then the other point was, I think, Leon, you said people don't want to work 24/7. Of course they don't. I'm in this industry. I don't trade. I'd like to still do something with my money, but leave it, because my interest is not finance. My interest is writing, life, courses, I don't know, whatever. And most people are like that. So I think it has to be easier. That's why the NFTs, I think, are pushing mass adoption faster. So sorry, to summarize. Yes, internally, the move towards DeFi is massive because people who are in this industry can see it. But externally, we need to make it simpler. That would be my tuppence worth.
Yeah, agreed.
Well, I don't like to put so much of stress in this area because that's not my field. But personally, what I've been observing, and this is what is making it obvious as well, the gaming area and the metaverse area, this is what is actually pushing the adoption forward. And the esports industry has always been forecasting that our industry will be the one to actually bring blockchain-based awareness to the mainstream. And this is what exactly is happening. All those traffic jams we have experienced in Ethereum has always been due to the new launches of CryptoKitties and Axes and Alices and everything. And today, it is today's morning. Daniel, I think you are a very hardcore supporter of Ethereum, and it deserves the support as well. But the exchanges, the centralized exchanges have experienced all-time low on Ethereum reserves. So this itself means that people are, I mean, this is the next level of awareness that just converting money from fiat to crypto and storing them in exchanges, they're actually trying to own it now. So they are moving it out of the centralized exchanges. They're putting it on dexes. They're putting it on games. They're putting it on NFTs. So this is where the traffic is moving, and this is how things are. And I mean, just this last week when Messi announced that he would be accepting his part of his payment in social tokens, the NFTs that were created was actually sold beyond what his annual payment was from the club. So this clearly says that how much people are actually willing to accept these new form of payments and new form of applications that's trending on a daily basis. And obviously, I mean, Leo is into that industry where he's actually the fuel behind pushing the application forward. So yeah, I mean, definitely this is how the trend is moving ahead.
Nakib, I have a good question for you. A few years ago, I was at a blockchain conference or a fintech conference, and next to me was a gaming company, and they said, we are a blockchain gaming company. And I thought this was amazing. So I went over and I asked them what it means. But at the end of the conversation, all it was a traditional online gaming company that accepted crypto payment. And that's not a blockchain gaming company. But could you explain to our audience what's changed since then with gaming?
Right. So look, I'm advisors in one of the blockchain gaming projects that's coming up, so I can give you a little bit details of that. But personally, I'm not a gamer. I don't play games. So blockchain-based gaming and the adoption that's taking up is more of creating your digital assets, owning those digital assets in the real world. For example, I'll give you a very real example of one of the projects that I've been closely looking into. So these guys are they own licensed arms, weapons. So what they are doing is that they are creating an NFT version of those weapons, and they are creating the assets inside the game. So when you are actually playing those games, you are creating the NFT, you're owning the digital assets or the digital twins on these real world assets, and you're trading them inside the games, you're playing with them, and you are exchanging you are increasing your assets. Games like CryptoKitties, games like Dino Land. So where these ancient creatures that we used to read in our school books, they are coming alive. You crossbreed them, you make a world altogether. I mean, this is a whole metaverse that's going on. I mean, all those interests that we had as kids, I think it's still there in the back of our mind. And when we are getting an opportunity to play with them in the real world as grown-ups, we are putting all our money into it.
Yeah.
And that is where NFTs and these card transactions and all those things that we used to collect as kids when we used to buy bubble gums and biscuits.
Yeah.
So it's just converted into the digital sense. And we as adults are I mean, these are few applications of NFTs, but NFTs have real world institutional use cases as well, where governments are looking into creating the deaths and birth certificates as NFTs. Companies like IBM are issuing the patents as NFTs. On the Islamic fintech space, the compliance certificates and the bills, they are being issued as NFTs. So there are a lot of institutional applications as well. But what is actually creating pushing these things ahead is those little games that you used to play on pen and paper in our little rooms. They have been converted into digital versions, and they are like forcing the movement ahead.
Can I add something? I interviewed Sarah McKenna 2 days ago, who is the co-founder of Alien Worlds, the biggest game in blockchain game. And in answer to the question too as well, Daniel, so everything's on the blockchain, so it's all transparent. And Alien Worlds, I'm not a gamer either, by the way, but it's 7 worlds, 6 of which have their individual DAOs, distributed autonomous organizations. So people come onto the game, and then they earn their trillion, which is the coin in the game, and they can stake it they can choose a planet. And because it's a DAO, at the moment it's like in transition. So I think, I'm not quite sure when it reaches a point, whatever, where the DAOs become truly autonomous. Then because Sarah was very keen to say, it's not about playing to earn, although that is a huge thing. We've seen that with the Axie game over in the Philippines, but it's about people living in a metaverse, choosing a planet, staking their money, and then choosing how the planet does its rules. So people are going to be living in these metaverses. Is this a good thing or not? I don't know. But it's amazing how it's just this next level. What can be imagined can be done.
Yeah, absolutely. The Matrix has arrived.
Scary stuff.
Yeah.
Jason, if you don't mind, can you just brief on what the metaverse activities are really going on the Algorand side, because it's something really to be heard about.
Yeah, no, I think we're still early days in the whole concept that the metaverse, I think once popularized by Neil Stevenson in his book Snow Crash. But right now, the metaverse is essentially an evolution of NFT. So in the NFT world, it's not just about acquiring a non-fungible token, but in a way, a virtual reality of what is to be as well. So I think I'll keep it high level as it is right now. And then maybe pass it back to Lim for additional questions. But it's a very interesting space to explore. So if any of you are interested in the sort of the venture and capital space, that's somewhere to definitely look into. Yeah.
Seems like some very exciting and interesting stuff coming up in the next number of months and years as well. But I guess one of the things is that we're talking about all the DeFi, we're talking about NFTs, and that's very much driving a lot of traction within the space itself. But let's talk about traction. And there are still many people that might not have been within this space. There are still many companies that are still building their solutions that of blockchain, of that. What's your view in the areas of what do you think might be stopping the traction and adoption of the masses onto this space? And for a lot of our audience out there who might be running their own startups or their own business, do you think that this is the way they should go to adopt blockchain technology, or even be so-called somewhat related in the tokenization space of the likes? What's your view on that, on traction, and whether it's a technology that they should adopt as a must-have in the next number of years?
Yep, I'll probably answer that and just start it with a story. Okay, my late grandfather actually brought in the first black and white radio and televisions into Malaysia, and it was German European brand, sturdy and good. And as the evolution of the radio and television went, the Japanese efficient, cheap, cost-effective one came, and he didn't really want to switch over because he had good European relationships back in the 1950s to 60s, and that actually led to the demise of the business, unfortunately. And that's because he didn't keep up with how things have evolved. And in the whole world of decentralization, we've seen that because of cars and planes, we've actually decentralized movement in travel, right? Where you don't have this big centralized headquarters, but now hubs across the world. Because of the internet, we have decentralization of information. We used to all, in the early days, huddle over a radio or television set to get our information. And now it's all decentralized through social media and different means, and even through the communication right now across the world, right? From Switzerland to Ireland to Australia altogether. So same way, we will see that, but they will be the classic adoption curve, right? So I guess all of us in the room are sort of the leading the adoption curve, and soon enough more would follow suit. So to those listening out there, I guess it's where you'd like to place yourself in the adoption curve. And I think, as mentioned, the adoption curve is shrinking, and I believe that if you're listening to this, it's about getting into the curve and understanding where it goes to, it's moving towards, and sort of be part of that journey altogether. So that's where the traction is going. Yeah.
Look, in the initial discussion, Gideon highlighted a very important point that this year is the year of regulations. Regulations is something that the blockchain enthusiasts don't like. They don't like this word at all. But the fact is, unless you cannot skip the law of the land if you want to create an adoption in that same area. So this is not possible. So the traction will actually come when the creators in this industry, the builders of this industry, build ethical and transparent applications. Look, blockchain, the technology itself is transparent, but the transparency has to be from end to end. So this is really important. And that you go hand in hand with the regulators, not in a way of overstepping them, but in the terms of working along with them, supporting them. You cannot have, it's not possible, I assume, for a global adoption the way that that we have in our mind. It's not possible to have it without the support of the law of the land. So regulations skipping is something that should never be looked into. The traction will definitely come when the builders are working hand in hand with the regulators, with the lawmakers, to build applications for the general benefit of the society. So if we are working on projects which are typical pump and dump schemes, okay, we create a fork of SushiSwap and make it Burger Swap. No, okay, Burger Swap is an application. Okay, we make it any swap, and then you create a tokenomics which is really appealing to the investors. You are getting all the vesting done in 6 months, and everybody is being rewarded in the first month. You will be successful in raising the amount that you're looking for. You will be successful in selling off your tokens as well. But what it really means is that after 1 year, the builders will have their own place in the world making a living, but it will actually leave a bad taste in the mouths of the regulators. So it is very important that we work together as a team, as a combined force, to look into applications that really benefits the society. And if the society has been benefited, the common men are being benefited, then only, the developers, the teams, the technical teams behind it, they would definitely be part of it. Daniel, your regulations part.
I was going to really add, I totally agree with what you're saying. However, the other little side of me that says need overcomes traction. And if you look, for example, at the African continent, where they went straight from, they didn't have villages don't have landlines. They went straight, the telecommunications went straight to the smartphone, and they use minutes, telephone minutes as a means of value to exchange. There's two things going on. There is the regulation, of course, but there's also what people need to do and the needs. And we see it because of climate change, because of what's happening in Afghanistan, access to money for refugees around the world. So I think that I'm not quite sure who will win. Will it be the sheer force of a population doing something because they have to? I was reading an article recently, and the chap's name eludes me now, but he was in a refugee camp in the Netherlands, and then you're not allowed to have a bank account or anything until you're actually in the system and you actually have your asylum. But he suddenly remembered, he had some Bitcoin, so he ordered pizzas to the refugee camp, and everyone's like amazed because how could he do this without money? So I think there's two things going on. There's the needs of a population, of a world, and we live in a very changed world. We're all here virtually, and then the regulation, and there needs to be a balance. I don't know what it is. I don't have an answer to this, but I can see them both sort of butting together, and it's going to be an interesting fight.
Mm-hmm. Yeah, it would be nice to think that this revolution is going to benefit everybody, but for years I've been seeing these projects banking the unbanked and giving access to people. But if we look at, one of the big trends right now, NFTs, that's just driven by greed. And, as Mark Cuban says, the joy of ownership. And, suddenly you've got all sorts of people coming out of the woodwork as, NFT artists now, people that may have been bankers, may have been welders, may have been a starving artist, and now suddenly they're selling, NFTs for millions of dollars. So I've
Chillen is an NFT artist. Yeah,
I've actually started to dig out some of my old photography and think, can I spruce this up as an NFT? So yes, unfortunately, the world does work in demand, and we can't control what that demand is or how clean or ethical it is. But I think you're right, Jillian, coming back to need, and there's no need for NFTs, but there's a need for people to feel good about owning them or selling them. And so somehow that does, again, fit into some type of need.
Yeah, I guess we have really, really exciting discussion today. In such a short time, we cover so many years in the future, what's happening in the past and what's really happening right now, and all in a really, really short span of time. And I guess the audience would really be excited to hear more, but unfortunately, we're running a little bit out of time. If there's going to be one key takeaway that you think would be beneficial to our audience, and you think that would be the key essence, what would be one key thing that you would like to say to everyone out there? Open to anyone. Sorry? Hodl. Okay, that's a nice one. And the rest of the panel?
I have one thing to add. It's interesting, privacy. Now, I know people would accuse people in the cryptocurrency world, oh, it's criminals, and they put that slant on the privacy, like it's anonymous and all that stuff. And we know it's obviously pseudonymous. But what is interesting is I did some work recently with a company involved in privacy. And what is interesting is that, you know, the most big thing is, oh, if you've got nothing to hide, you can let it all out, nothing to hide, whatever. But that actually negates the whole reason a democracy works, a democratic world works on the basis of our vote, which is private, and governments do not need to know everything about us. So I think sometimes the cryptocurrency world is accused of, lots of things, FOMO and to the moon and Lambo, but that privacy is a huge concern in our modern world. And I think that the cryptocurrency world is actually bringing it up to the fore and saying, hang on, guys, look at China. The rating system that's happening there. It's like something from the Broken Mirror, the TV series. But what's happening in China is quite scary because you're being rated on your actions. Because they know if you buy vodka every week, or if you eat 20 noodles, or if you're overweight, and your child can't go to the right school. So I think that's something that the cryptocurrency world is bringing a lot to the world. And privacy would be one of my things I would say is interesting.
I would just add to that. I think, blockchain is much more than just crypto and all of these applications. And Gillian, I couldn't agree more. Privacy and the way in which, information itself is secured and managed. That's a key area. And the most recent deal we actually just closed last week was into a confidential computing company, which, is nothing to do with crypto itself, but is really an enabling technology for all of the fun things that we think are happening on top of that, and enabling that to become the de facto way of doing things, right? So couldn't agree more. And I think from my side, it's really just final word would be to say that this is still early days, right? And I think there's a lot of hype and momentum, and it sounds like most of the people on this call have been in the industry for at least the last 3 years, so have seen at least one cycle come and go, and some of us even 2 or 3. So I think, momentum aside, depending on the day of the week, this is really something that at least many of the investors out there, and I include ourselves in that group, we're here for the long term and really backing kind of moonshot ideas to get us to where we think there is an opportunity to do things better than it's currently being done today. So you don't need to follow the Bitcoin prices every day to feel confident and comfortable that some good things are happening in this industry. And sometimes it's worth digging a bit below the surface and the latest NFT hype or bubble to feel comfortable that people are really building some interesting solutions that can affect and change the world.
Great. I'll just add up by saying that things are going to move really fast. This conversation, as you're watching it now, may be outdated by then, already looking at the trends now. So keep up to date, and you won't regret just putting yourself in this space. I think all of us here can agree. I guess it's more of understanding how the times and seasons change and continue to be aware and move along with it. So that's on me.
Yeah, and this area is driven by passion, and this is what keeps everybody alive. Everybody, I assume, and who's part of this industry is part of this industry because of their passion and not because they had a living to make. So, yeah, as Jason said, probably by the time when we meet next, everything that we have said would be outdated, and there would be so many huge things coming up. Daniel is doing great things on layer 2. Maybe there would be layer 3 and layer 4 we would be talking about by the time we meet next. So, this is how things are evolving every second as we speak. So keeping up to date and keeping yourself as aware as possible is the only way to I think, survive in this industry the best way.
Yeah, agreed.
Change is constant. Daniel?
Yeah, no, change is constant. We're ICO, STO, IEO, IDO, EIEIO. This is just constantly changing. And for people watching, if you want to know what's happening in the blockchain world, just hit those popular websites. Look for Gillian's writing. I spend at least 30 minutes to an hour every day reading the sites and just seeing what's going on and forwarding things to people that I know within the industry for comments and seeing what they think. But yeah, I mean, this is a space that, we talk about blockchain time. That blockchain time is completely different to normal time because there's so much constant change. So I think, just encourage people to try to stay up with it, stay interested, don't write off new ideas too quickly because they may be, the next form of mass adoption. So, as we talk about the metaverse, NFTs, DeFi, stable coins, all these things we've talked about today, it'll be interesting to see in 12 months time, how hot these things are and how they've evolved. But yeah, change is constant and, people just need to keep an eye on this space.
Totally agree. So from holding to privacy to speed of change, as well as how things will constantly change, I would say that's very much just a matter of time when things come by. It'll be really interesting to see, as what Daniel said, in 12 months, where are we in this current state and where we will be 12 months later. With that, thank you very much to all panelists for your really passionate sharing and your insights. I'm sure the audience has greatly enjoyed this session and be looking forward to more sessions ran by Wholesale Investor as well as our venture and capital event. Thank you very much to everyone globally out there in the world, and good morning, good afternoon, and good evening. Thank you. Cheers.
Thank you. Excellent moderation, Lim. Thank you.
Yeah, thank you. Fun conversation.
The venture capital market is notorious for its illiquidity. Unlike that of public markets, investors don't have that power to buy and sell with speed and transparency. As an investor with existing equity in a company, this means 1, it's harder to restructure and rebalance your portfolio as you would in public markets, and 2, it's near impossible to liquidate equity ahead of the business's intended exit. Essentially, your cash is stuck in stocks. On the other side of the coin, there are investors who are looking to enter later stage opportunities. However, those opportunities have already closed their doors to funding rounds, and if they do reopen, they're usually reserved for venture capital firms, existing investors, or private equity firms. This means there is a high and expensive barrier to entry. So, with both these problems in mind, we have worked to launch the WY Capital's secondaries platform, utilizing our network of 30,000 plus high net worth and sophisticated investors and combining that with the crisp software, an underlying technology that helps streamline and facilitate these transactions. And it's already working. We are open for business and our clients are well underway in establishing their own secondaries markets. So, if you're looking for options to sell existing equity in a company, or you want to see our most recent catalogue of secondary investment opportunities, feel free to contact us via the email on screen or reach out to us via the Brella booth for the remainder of the VNC conference. We're at the finale, day 3 of the VNC conference. And in line with the talks of the global community, we've decided to dedicate this entire day to crypto and blockchain. Lined up, we have a series of opportunities in this space, all open to investment, as well as multiple expert panels who are all ready to take your questions in the Brella breakout rooms. Enjoy.
My name is David Kay. I'm the Executive Chairman and Chief Investment Officer of LitiCapital. LitiCapital is the next generation of Fintech. We are private equity for the blockchain. Now, the best place to start is at the beginning, with my background and the background of my partner, Jonas Ray. For the better part of the last 10 years, I was one of the founding partners and portfolio manager for $1 billion plus private equity firm based out of New York and focused on litigation financing. Jonas is the founder and owner of the largest private asset tracing and intelligence firm in Switzerland and one of the largest in Europe. And at its core, that's what this investment is. It's a private equity investment where you would be investing with experienced managers, managers who have acted as fiduciaries and ultimately generated returns for investors for the better part of a decade. Now, one thing that's worth noting is we're also one of only 3 companies that have regulatory approval from Switzerland to list our shares as tokenized equity. Said another way, your investment in the Liti token is regulatorily compliant in Switzerland, which is where the company is based. Let's talk for a minute about litigation financing. Is the highest performing asset class in the last 10 years. It's beaten out private equity generally, real estate, credit, and hedge funds. And again, at its core, that's what this investment is. It's an investment in litigation financing. As a Liti token holder, the minimum return that you would be entitled to are the cash flows that come from the investments and the portfolio that we create, curate, and ultimately monetize. And as an investor, just like in any private equity firm, you would be entitled to 80% of any profits that the company makes. But here's where it gets interesting. Here's where there's a big differentiator. And here's why we're very excited to be publicly listed on the blockchain, is your investment in LitiCapital also comes with 2 additional things. The first is a one-way crypto optionality. What does that mean? What that means is that our token is denominated in Ethereum. That is the underlying currency of the token. So if Ethereum goes to 0, or Bitcoin goes to 0, or those get regulated out of existence, what happens to your investment? The answer is nothing happens to your core investment. Your core investment is in a private equity company, and the underlying assets that we create in the portfolio, and again, monetize for you, you would still be entitled to your pro rata portion of those proceeds. Here's where it gets interesting. And here's where it's a one-way option. Now let's say that Ethereum goes up to 15,000, about 5 times above where the price is today. Then what happens? Then, even if we as managers don't make any money for you, and the investment is a break-even investment from the perspective of the portfolio, because the underlying currency denominations in Ethereum, the value of your investment would go up 10 times. So downside protection is the private equity investment, but there is a massive one-way upside in crypto, a one-way upside option in crypto. And that's one of the things that we're most excited about. So let's talk about one of the claims. We have invested in a number of claims. We have 3 claims already on the book, and we have an owned portfolio of 5 more. Now, one of the claims that has gotten a bunch of attention is we are representing a group of 700 traders in a claim that they have against Binance. Binance, as you may know, is one of the largest trading entities in the world, and certainly the largest crypto trading entity in the world. Just to date, through the end of June, they've done over $5 trillion of transactions. The 700 traders that we are looking to represent, in fact, it could be thousands. We believe thousands of people were negatively impacted by Binance's actions and unactions around what's called the May 19th event. You can see on your screen some of the press that we've gotten, and I would really encourage you to click on the link so that you could take a look at my CNBC interview and my forecast interview with Angie Law. Let's talk a little bit about valuation and liquidity. If you look on your screen, you can see some of the core statistics. Since LitiCapital went public, we have more than tripled our token price, and our current market cap is about $40 million. Most importantly to me, our liquidity is somewhere between $1 and $6 million a day, which means that in private equity and litigation financing, another downside that's really rectified by being able to participate and be listed on the blockchain is illiquidity. One of the reasons that litigation financing gets such high returns is because the assets are generally illiquid. By investing with us, not only do you have a one-way crypto optionality, but you also have liquidity on what generally is an illiquid investment. I also believe that we are fundamentally undervalued. We do have a $39 million market cap today, but with just the 3 cases that are in our portfolio, we believe that the potential asset value is in excess of $250 million. We own 20% of $1 billion plus case. We own 10% of a $200 million plus case, and we own 30% of the Binance claim, which could be in the hundreds of millions. Even when you discount those potential rewards backed by risk and time, we very much believe that we are fundamentally undervalued today at a $39 million market cap. So what's the ask? A couple of asks. The first is, check us out. Take a look at the Binance claim, take a look at some of the press articles and interviews so that you can get an idea of who we are as managers and the quality of the underlying assets and frankly stewardship that we would give to your investment. The second is, I'd like to expand the portfolio. My goal in the next 6 months is to get to 10 to 12 cases under management. And that's a size portfolio that makes sense, and it's a portfolio size where I feel comfortable that I will be able to generate the same returns that I have over the last 10 to 12 years, which is 30 to 50% cash on cash returns each year. To do that, we'd like to raise $30 million. Now, wholesale investors who we've known for quite some time, they've negotiated a discount on the current trading price for their investors. So to the extent that you are interested in investing, please let us know and we will give you a discount to the current trading price of Liti tokens. And we would love very much to have you join the Liti community. I hope all of you are having a wonderful day, and I hope that you reach out and continue to do some diligence and ultimately join us here at LitiCapital.
Hi, and welcome to today's presentation on Cashero. My name is Barnaby Procopio, and I'm the co-founder and CFO of the company. So who or what is Cashero? Cashero is a blockchain-based payment ecosystem that provides a secure platform for high-yield savings, multi-currency wallets, and instant fee-free internal and cross-border payments. Cashero recognizes the appeal and requirement for cash savings, but that inflation, high remittance fees, and payment friction are a problem for individuals and businesses across the globe. Cashero was founded in 2020, following 2 years of idea conceptualization, research, iteration, and development to solve these problems. We're now in launch phase and will be available for public use later on this year. Now, as a team, we've been involved in blockchain and cryptocurrency technology for over 10 years and have brought our combined experiences and knowledge of banking, finance, and technology together to solve a global savings problem and a transfer problem, both of which were highlighted during COVID-19 pandemic and have and continue to remain a particular issue in developing countries where reliable financial infrastructure is, of course, still lacking. Now, at present, approximately 2 billion people remain unbanked or underserved, meaning that a whopping 31% of the global adult population still has little to no access to banking. This is an issue that Cashero can alleviate, and a demographic of people that Cashero can service where other people have failed to. As we all know, inflation has a disastrous impact on savers, as interest rates offered on savings globally has reached an all-time low. In many cases, the real rate of inflation is greater than the rate of interest offered. Cashero thus has been built to remedy this issue for savers and investors globally, and Cashero is also addressing the outdated fee and charge-based model pushed by many of our competitors. So, what's our solution? Our solution is an all-encompassing, safe, secure wallet ecosystem that services individuals, businesses, corporates, and charities with a high-interest saving account offering between 2 and 5% APY, where users receive and view their inflation-beating interest in real time. A platform that offsets local currency volatility and devaluation risk for users, with less stable currencies giving them access to reserve currencies like the US dollar, the pound, or the euro. Instant, no or low fee internal and cross-border payment transaction systems with no hidden charges. A digital payment system that allows users, businesses, and charities alike to send, request, and receive money globally with full transparency. And ultimately, an offering that provides full flexibility with no minimum balance required, no monthly fees or penalties for withdrawals, and of course, no minimum time period as well. Now, of course, there is a mature and sound reasoning in why we're providing all of these features and services at little to no cost. And that is ultimately to drive users to our platform. With users comes transfer volume and deposit of funds or funds under management. And it's on these funds that Cashero can create an interest and derive a profit. Now, using a combination of blockchain technology, smart contracts and lending protocol, we're able to yield farm and create an interest safely and securely for users and the platform itself. Now, with a demand or a need in the decentralized finance space for over $42 billion, Cashero therefore acts as a liquidity provider and lender in this space to create interest that is ultimately passed down to the user. Now, when we come on to market size, the available market size or available market is absolutely huge. It stands at over $29 trillion as it spans over 4 core service sectors: global remittance, instant payments, multi-currency exchange, and high yield savings. With Cashero operating once live in over 120 territories across the globe, we geographically diversify and alleviate the risk of earnings for businesses and also for investors, as events like Brexit or COVID take little or no effect on the business. In fact, there was actually an acceleration of e-commerce business across the globe during the pandemic, with 9 out of 10 e-commerce businesses seeing double-digit revenue growth in 2020. And over $960 billion in transactions conducted on mobile payment platforms in 2019 alone. Now, of course, there are competitors in each of these 4 fields. However, most of our competitors focus on 1 or 2 of the services, not all 4. But that doesn't necessarily mean that we'll be successful or unique. What makes us unique is the way that we actually operate the business. And we argue that the competitor systems and the software that they use is archaic, outdated, and costly, which is why they operate this fee and charge-based model. Now, global remittance, depending on the provider, can cost the sender anywhere from 1 to 13% of their funds, and currency exchange anything from 1 to 3%. Now, by using new era technology combined with conventional banking principles, we're able to strip back these costs, saving users money on their fees, whilst giving more back to their user in interest, rewarding them effectively for lodging their savings with us. Now, not only are we alleviating payment friction, we're also revolutionizing the way banking is viewed and conducted, driving consumers and businesses to our platform, and also increasing the potential for a company buyout from another financial services provider. Now, since March this year, we've actually rejected 4 buyout offers. These offers have come from royal families, telecom providers, and other banking platforms. For more information on our revenue metrics, we've provided low, medium, and high summaries on our pitch deck, and more detailed financial models can be made available on request. Now, of course, it's all well and good to have a nice idea or concept, but that's not all that a business needs. So where are we today? So we've taken much of the risk away from investors as the platform's now built. So the development risk has been reduced for new investors, and in fact, will only be iterated and adapted once new partners or cash on-ramps are needed to service developing countries. Therefore, much of the risk or focus now rests on raising the awareness of the platform itself to attract users, and that's where the bulk of the investment is going. And we're operating 2 main strategies with tried and tested providers and models that have existed for decades in financial services. So we work and have worked with Ladder and HVSEO, our CMOs, for over a year pre-launch. These providers have been responsible for the user acquisition for Monzo, Credit Suisse, Travelex, Aviva, and Chime Bank. These data-driven providers have analyzed the spread between iOS and Android users, which demographics to target, average deposit sizes, the percentage difference between download and active users, and cost per acquisition across over 50 territories. We've also spent this year, 2021, developing agency and white label versions of the platform to allow us to partner with existing businesses and corporates, such as financial service providers, gaming and gambling companies, insurers, and wealth managers to bring their existing user base to our platform on a revenue share model, therefore catalyzing and adding to the user acquisition projections that we have. Now, this neatly brings me on to Cashero's business goals and targets. Our target paid user base is anywhere from 3 to 16 million users globally by December 2024. Our target assets under management or depositors funds is around $5 billion by December 2024, and our target is a listing on the UK main market or NASDAQ by December 2024, or trade sale to a competitor or challenger bank between the months 18 and 24. Now, for references and metrics, all user acquisition and AUM models are available to investors, and they're visible on our pitch deck. We also currently have 10,000 pre-registered users and committed contracts that will begin once we go live and launch. Now, with Cashero now in launch phase, it really is an interesting and exciting time for investors, which is why I invite people to reach out, read more, and connect with us. You can view and download the app pre-launch on iOS and Android stores. However, I should point out that it's not yet available in all 120 territories. I should also point out at this point that the window of opportunity to invest is narrowing, with our pre-seed and seed round being internally funded between March 2018 and February 2021. We're now closing our Series A investment round at the end of September. For interested investors, we'll be honouring the price of £1.10 a share for those who register their interest before the closing date. For further information, please connect with us via our deal room on Crisp or email us directly at invest@cashero.com. Thank you for listening. Thank you for your time today, and we hope to welcome you on board as an investor in the near future. Take care.
Hi, my name is David Vincent. I'm a director of Enegra Group Limited. Standard disclaimer for this presentation. Enegra is an international mineral commodities trading business based in Malaysia. Our dynamic team has expertise across the entire trade cycle of physical, logistical, and risk management functions of international commodities trading. Over the last several years, Enegra embarked on a unique journey of building trusted relationships with local mid-tier miners in Indonesia, who are often exploited on price for their commodities. This effort has now rewarded Enegra with lucrative mining offtake agreements, providing the company with exclusive access to 1.8 billion tonnes of thermal coal and nickel sands. After several years working among mid-tier mining communities in Southeast Asia, it became apparent that these miners lack the scale and commercial maturity to leverage the full value of their commodities. On their own, they are often exploited for up to 30% to 50% of market prices. As a consequence, they are unable to source favourable financing terms to allocate resources and capital effectively to compete globally. This makes supply chain management, commodities trading, and marketing extremely risky and complex for these miners. Enegra sought to solve this problem, where over the last several years we built unique trusted relationships across 16 mid-tier miners in Indonesia. Enegra is now partnering with these miners under a unique offtake agreement, enabling them to scale and compete globally for the very first time. This effort has rewarded Enegra with exclusive access to 1.8 billion tonnes of thermal coal and nickel sands. Enegra's team possesses the necessary global expertise to ensure successful execution of this unique opportunity. Our partnering approach with mid-tier miners provides them with long-term, stable revenue streams, enabling them to allocate resources and capital more efficiently. This ensures enduring social and economic outcomes for these mining communities who are otherwise exploited on price. The coal offtake agreement provides Enegra with exclusive access to 1.8 billion tonnes from 16 mid-tier mines. The offtake is watertight with a fixed price margin and no price floor. The valuation of the offtake asset provides Enegra with an audited net asset valuation of $28 billion. The majority of coal will be traded on the London-based Global Coal Exchange. This will be supplemented by a supply contract to deliver 500,000 tonnes of thermal coal per month to a national power company. This provides Enegra with a combination of fixed, contracted, and market trading revenue streams. The structure of this offtake ensures highly scalable unit economics, robust free cash flows, and sound price risk management, with a 32.5% fixed gross profit margin per tonne with no price floor. With a low fixed cost structure, this ensures approximately 27% EBITDA margin on every single trade. Profitability is expected from year 1 to 2, from as low as 20% trading capacity of just 1 million tonnes per month. Full capacity is expected by year 7 with 5.7 million tonnes per month. The nickel sands offtake agreement provides Enegra with exclusive access to an initial amount of 500,000 tonnes per month. This is expected to ramp up to a total of 1.3 million tonnes per month by year 7. The initial tonnage will be monetized via supply contracts to Indonesia-based nickel smelters, with which we are in late-stage negotiations. This level of trade produces a net present valuation of $225 million. The structure of the nickel offtake is also expected to be profitable from year 1 to 2 at just 25% capacity. Full capacity is expected by year 7 at 1.3 million tonnes per month. A key value driver of Enegra's nickel offtake and supply contracts is a short 28-day trade cycle. The combined trading reveals the extent to which the structure of our offtake agreements deliver a highly scalable business model to generate value accretive margins and robust free cash flows, even at suboptimal capacity during ramp-up. Full capacity is expected by year 7, producing over $4.6 billion revenue per annum and over $1.5 billion EBITDA per annum. Enegra's economic moat that truly sets it apart from its peers is a unique combination of, firstly, our local trusted relationships with mid-tier mining communities built over several years. And secondly, the unique offtake agreements this has rewarded Enegra with. From a peer comparison perspective, this reveals the potential for clear outperformance, particularly in the top 2 sections of this table, with regards to the key valuation fundamentals associated with, firstly, our 32.5% fixed GP margin per tonne of coal with no price floor, a low fixed cost structure producing, secondly, approximately 27% EBITDA margin on every single trade. It is noted the fixed cost structure of Enegra is significantly lower than our peers, given we assume no mining exposure risk. At Enegra, we don't accept the costly and distracting inefficiencies of traditional capital markets exchanges. This is why Enegra is proud to be one of the world's first companies to issue equity-backed digital security tokens to shareholders under security token code EGX on the Polygon blockchain. Enegra is therefore issuing 2 million EGX security tokens via private placement with an offer price of $65 per token to raise up to $130 million. This represents an 80% discount to Enegra's audited net asset value of $28 billion, which is equivalent to $329 per token, As previously mentioned, this has been audited by Crowe LLP, a global top 10 audit firm. Funds will be used to monetize Enegra's highly lucrative offtake agreements. Of the total funds raised, approximately 95% will be used as cash security for bank trade finance facilities, such as letters of credit, which is an industry standard requirement to facilitate trade between global supply chain parties. The remaining 5% will be allocated towards insurance and working capital. Investors can therefore take comfort in that most of the funds raised will not leave Enegra's balance sheet. It is expected that once Enegra demonstrates its ability to generate free cash flows, our trade finance bank will release cash security, enabling us to invest in additional projects. Enegra believes that overcoming the barriers of traditional securities exchange listings provides a significant opportunity to crystallize the favorable valuation fundamentals given by the company's highly scalable business model, along with a significant discount associated with the token offer price. By focusing your attention to the chart on the right of this slide, it is evident that the private placement offer price of $65 represents an 80% discount to Enegra's audited net asset value. As discussed earlier, the audited net asset value is $328 billion US, audited by top 10 audit firm Crowe LLP. This is equivalent to $329 per token. This provides significant headroom to ensure a successful listing at $150 on one of Asia's most active and liquid digital security exchanges in late October this year, where the proposed listing price will represent a 54% discount to Enegra's audited net asset value. Enegra has gained support from this particular exchange and has already commenced the process of listing. Therefore, the listing price ensures longer-term valuation fundamentals for longer-term investors seeking to further bridge the 54% valuation gap, along with an opportunity for shorter-term investors to achieve a profitable exit. We believe our efforts building such unique relationships with mid-tier miners in Indonesia has created a rather exciting opportunity, and we invite investors to come along for the journey. Thank you.
Hey everybody, this is Mitchell, the Managing Director of OzMerchant. I'm here to show you a little bit about our company, what we've done since inception and where we're going in the digital currency marketplace. So this is OzMerchant. That's a little preview of our wealth management portal. We're looking to be the future of money. Just to speak to the company purpose, it's really to be a facilitator of bridging the gap between traditional finance and digital finance. We see these two parallel financial systems working cooperatively in the future, and we want to be a catalyst for that. So to begin with, we started by building an aggregated digital asset brokerage system. So we act as a broker and facilitate liquidity for all of our high net worth individual and business and merchant clients, and offer a simple custody swap solution, which is the foundation of our wealth management portal. Very quickly, we recognized an opportunity in the market to be a business-to-business service provider of digital asset financial services. So we went about navigating this vertical and have since onboarded some quite substantial anchor clients, such as luxury goods, sports car dealerships, jewelry, real estate agents, boat brokers, and law firms, software companies, etc., to build out this merchant trade network and give them the ability to accept cryptocurrency as payment to our custodial wallet system and the choice to convert that to Australian dollars, or to hold it as digital assets with future features such as decentralized finance integrations in the future. So the other aspect of AusMerchant is a managed investment scheme. This is a authorized representative ASIC regulated vehicle where we invest in digital assets on behalf of a network of high net worth individuals and provide the payouts in Australian dollars. And this is sort of speaking to bridging that gap between traditional financial products and digital assets. And we're looking to really become a reputable partner in the digital asset financial services and investment space. So the problem that we're solving, of course, is the demand for cryptocurrency and institutional money buying into this new financial system is to hedge inflation and various other opportunities blockchain offers, being in my opinion, the internet of value. However, of course, another problem is the complexity of the technology acts as a significant barrier to entry. So AusMerchant is looking to provide a simplified wealth management portal with various integrations into the digital asset space and ease that transition for the Australian business community into accepting this as payment and leveraging the benefits of holding and trading cryptocurrency. To speak to our solution, we of course have the ability to buy, sell, swap cryptocurrency through an aggregated over-the-counter trading book. You can hold your assets in a custodial vault. In the future, we'll offer DeFi integrations to earn yield. Of course, our merchant trade network allows for us to help merchants accept cryptocurrency as payment. In the future, there will be also the option to take out loans against your cryptocurrency and various incentive structures to receive crypto cashbacks. So to put that in a diagram, we have the brokerage solution at the top that directly integrates with the merchant settlement and blockchain back office accounting solution for merchants. And then in the middle is our wealth management portal, which is the custodial solution for both businesses and investors to securely hold their assets. I guess the market opportunity is to support businesses and institutions to enter, understand, and leverage the benefits of cryptocurrency markets and get access to this emerging wealth class. An opportunity that we have navigated through is offering charities the ability to accept donations in cryptocurrency. And this is done through our commerce platform, similar to the AusMerchant Trade Network. Of course, it's a good opportunity for charities given that fundraising is becoming even more difficult during these times where face-to-face fundraising is nowhere near as profitable. So opening up their fundraising efforts to accepting cryptocurrency is an opportunity a lot of charities have been speaking to us about, and our wealth management portal and commerce blockchain back office solution helps facilitate this. The market size, of course, 87% of Australians don't own Bitcoin, and we're looking to really push that number down as more people enter the market. Bitcoin's price appreciation speaks to itself. Being a new global settlement layer for money. And we only expect for this total market capitalization of digital assets to increase over time as this parallel financial system starts to get steam in the traditional finance sense. To provide a case study of AusMerchant, one of our anchor clients is Graziani. It's a sports car showroom in Sydney, and since onboarding to AusMerchant, we have helped them settle just over $4 million worth of transactions in sports cars as payments. So you can sort of see the list there, and they're very happy with the service. And now they have customers seeking them out specifically to pay for their luxury goods in cryptocurrency. This dealership also leverages the automated settlement into AUD. So then they're able to run their business, however, open up their customer pool, allow for their customers' choice in payment options. So here's a quick preview of our our commerce platform, which gives you the ability to invoice to your customers, receive payment in cryptocurrency, however, at an Australian dollar cost basis. This is a non-custodial commerce platform. It allows for our customers to audit their digital asset wallets in custody, provides that Australian dollar cost basis, and export all of this data into a zero readable format, for example, to help them transition their traditional accounting systems into accepting cryptocurrency as payments. Of course, there is a competitive landscape in Australia specifically. A lot of the industries and markets that we are looking to enter are fairly nascent. However, there are a few here which I can show. There's the crypto payment gateway on one side. A lot of these crypto payment gateways, they're non-custodial. So that's our point of difference. And then, of course, the professional brokerage speaks to our aggregated over-the-counter order book. Digital currency exchanges are also competitors, but they are also partners of AusMerchant, considering we're a broker and source liquidity from many of these providers. And then more internationally, there are custody providers for digital assets that we're looking to sort of emulate in the Australian market. Many of the markets here, I see digital assets starting to sort of penetrate these industries and will become, many of these industries will have a blockchain backend to a fintech front end, to provide an analogy. One of the products AusMerchant provides to allow for that transition is a managed investment scheme. Of course, it's an authorized representative. We have over 25 years worth of experience in trading crypto among all of our team. We're looking to launch a Bitcoin only and an Ethereum only perpetual fund. Right now, we're running a discretionary trading fund. And that currently is annualized at 400%, or in the last month, a 30% increase. This is so then we can, I guess, get runs on the board in the regulated financial product space, because we fully expect for decentralized finance to become regulated at one point, and we want to be a seat at the table for that discussion on how it is best regulated. AusMerchant is also, as a custody provider, gives the ability for institutions and businesses to hold NFTs in their portfolio. And this opportunity, we recently did a case study where we helped a musician group, Flight Facilities, launch their NFT on OpenSea, and it was really quite successful as a brand and promotional strategy, and have since gone to launch or conceptualize Culture Vault, which is a custody NFT platform that allows for artists, musicians, and brands to collaborate and create NFTs, mint these NFTs, and then this will use a layer 2 solution for distribution and a mobile app for a marketplace for NFTs. And so we can help reduce the friction of private key management. There will be a creative agency to help artists collaborate on generating NFTs. And then Culture Vault will have this layer 2 solution, as I mentioned, for distribution. Of course, there are many competitors currently emerging in the NFT space. However, I think the ability for us to be not only a custody provider of NFTs, but also a minter and a highly curated marketplace in Australia offers a niche and opportunity among these competitors. We have various compliance and governance system. So we use Bron ID as our AML CTF KYC provider as a platform. Fireblocks for our digital asset custody. This gives us the ability to create a unique vault for every customer, which we can then integrate with various smart contracts in the future. Of course, we have ESV as our business accounting and advice, and Elliptic for blockchain monitoring for AML CTF reasons. And currently have a financial services lawyer on retainer, a in-house counsel with MJF Law, and then of course our employment legal on retainer too. Ozmerchant has many partners and counterparties. As we are a broker, we source liquidity from various providers. Of course, Fireblocks is our custody. We're part of numerous industry bodies such as Blockchain Australia and Fintech Australia. Gilded Finance helps with our merchant blockchain back office commerce solution, as it is white labeled from them. We use Maneuver for our Australian dollar banking and many of these exchanges to source liquidity from. AWS is what we host our platform on, and we have quite an experienced CTO managing those integrations. The Ozmerchant team has significantly grown in the last year. It started off with my co-founder, Sean. Very quickly, we onboarded Nikhil as our lead developer and technologist. He's helped us build the platform. Darren Abrams is our fund manager. Samuel Linas runs the NFT platform and is also a broker. Benji is our financial controller. Matach, who is a full stack developer. And Gavin DeBron is our CTO. Colin does COO and sales. He's from an FX background. Millie does communications. Annabelle, compliance. Michelle is the creative strategist for Culture Vault in collaboration with Susan and Gage. Alex helps us with our charity partnerships. Zach is business development, and we have Seren for algorithmic trading, and then a musician for the Culture Vault aspect. And of course, many external legal compliance partners. So the Ozmerchant ask for this capital raise is a 2-year runway of 5 million Australian dollars, 3-year runway of 10 million Australian dollars. And what we're looking to spend these funds on is, of course, facilitating a trading float, development of our technology, wages. There's plenty of legals, cash flow and expenses. We have an office in Grosvenor Place in Sydney, and of course, marketing to get this platform out into the general market, out of stealth mode now. Just as a general recap on the business, we have 30 current customers as a closed network. 20 of them are high net worth individuals in the last 6 months. We've seen significant growth in the digital currency space, in both price appreciation, but also attention from various large institutions internationally. To get started, our private investor helped us raise $3 million, and a lot of our blue chip clients are large and sort of a diverse offering of verticals in the luxury goods industry. So we've got sports cars with Scuderia Graziani. MJF Law is a law firm who accepts crypto as for invoices. Long Reef Yachts for boats, Rubenstein Group for real estate, and Watch Exchange for jewelry. And of course, among these verticals, we have other clients that we're looking to onboard. So yeah, that's Ozmerchant. I hope you enjoyed our presentation, and look forward to hearing when you reach out.
Hello, everybody. I hope you're having a great day. My name is Naif Dega. I'm the founder of Qubix, and I'm here to present our Series A pitch deck. Qubix is an automated cryptocurrency purchasing app with a clear focus on user experience, helping introduce people into the exciting world of cryptocurrency. Our company purpose is to become the leader in making all things crypto and investing easy, allowing anybody to feel comfortable to get involved and learn. The opportunity is to enter a rapidly growing market, create a user-friendly experience, simplify decision-making, make it so that anybody can use it, and provide flexible investment schedules so that people can sustainably invest. The features and benefits of Qubix are: we have a streamlined onboarding process. We provide preset mixes to simplify the decision-making process for our users. They're also fully customizable. and we have a low capital entry, which means users can invest from as little as $9 per transaction. And it's also designed to be a complementary add-on, designed to complement other investments or other investment apps as well. Even be your primary app. In regards to our competitors and our market enablers, we've got a list here which highlights the key differences between ourselves and them. We provide over 11 different cryptocurrencies compared to the crypto-focused recurring investment apps like Amber and Bamboo, which have 1 and 2. In just under 12 months, we've managed to get our app in market and have over 600 user signups already, have $1.1 million in funding secured to date, JV with an incubator like Digital, which has helped us accelerate our growth and have also helped us keep costs very lean to get the product to where it is today, and attract a wealth of advisor experience from members of boards like Fintech Australia and publicly traded ASX traded companies like Hub24 and Challenger. Our customer success story is very, very strong considering we just launched, with average customer portfolio growth by more than 34% at the time of writing. And just in our second month since launching our marketing campaign, we've had over $70,000 in monthly transaction volume. In regards to our market size, we've had users from the age of 18 to 72 sign up, which means there are over 13.15 million Australians that we can address. And our potential market is over 1 billion people when we expand into other emerging markets and existing markets like North America and the United Kingdom. With the support from our Series A, over the next 12 months, we plan to have over 25,000 active users, offer more cryptos, set up to enter other markets, engage to build out and license a Qubix ETF, obtain necessary licensing to / legal clearance to offer our users yield on their holdings. So they can either deposit crypto and earn yield through our app or earn yield on crypto that they're buying on their recurring investment schedule through Qubix. We've also developed a comprehensive roadmap over the next 18 months to highlight that we have a clear direction of where we want to take the business, and we have timelines and goals that we want to achieve those things in. Please feel free to reach out to me regarding the roadmap if you have any questions or would like any more details on how we're going to achieve certain things and how we plan to achieve certain things over the next 18 months. Now, in regards to our revenue model, it's very simple. We earn a spread on all sales. And with growth reports predicting a 56.4% compounded annual growth in the crypto market from now to 2025, we've estimated our customers to be worth over $105 a year. We'll also be using funds from the Series A raise to get legal clearance to introduce new features that will act as additional revenue streams and cut costs. Things like introducing new payment methods, staking fees, and ETFs. In regards to our key growth metrics, we've got volume growth, user growth, and recurring revenue growth from recurring investments. All of these figures account for a churn and a conservative based off early stage growth figures. They do not account for growth that will come with brand awareness and confidence. We plan to smash these figures out of the water, and we've got a calculated approach on how we're going to do this. The team has over 40 years experience, with myself having 5 years experience researching, building, and developing relationships within the crypto industry. And my co-founders, Mark and Ross, have got over 20 years experience crafting innovative and immersive product design solutions. We've also managed to have Paul Rogan join our advisory board. Paul Rogan is a current board member for Hub24, which is an ASX traded company that has a valuation of over $2 billion. He was also an ex-board member to Challenger, which has a market cap of over $4 billion. Pool will be helping us operate our business as if we're a publicly traded entity and helping us with capital allocation to make sure that we put the money in the right places. Paul Kang also has joined our advisory board. Paul Kang is the co-founder of Entersoft Security, a global award-winning cybercrime security company. He's also a board member for Fintech Australia and has provided his services to many leaders in this space. Paul will be assisting us with the expansion of Qubix into new markets and advising Qubix with complex projects in the future, involving blockchain and smart contract technologies. With our fundraising to date, in September 2020, we founded the business and we raised $110,000 cash and $500,000 worth of sweat equity. In February 2021, we raised $150,000 via a safe note before deciding that we wanted to do a crowdfund in the spirit of crypto and get the crowd involved in our business in the early stages. In April 2021, we started that crowdfund and raised $340,000. Those customers have acted as well as our early users to help us grow our business and learn. Now our business is ready to scale and we're looking to do a Series A. We're asking for $1.3 million to $1.6 million. Those funds are going to be used on application improvements to help us develop the app further, build out new features, and make the experience more delightful for customers. We'll also be using the funds for marketing and influencer programs to help us get reach and really scale and drive users into our application and execute on our vision. The funds will also be used in regards to operational costs like accounting, security, hosting, insurance, and compliance, salaries to grow the team in-house, legal and licensing to obtain the necessary licensing for staking, ETFs, and expansion into new countries. And we'll also be using part of the funds as a float. The investment highlights are we have an in-market product, we've got traction and growing rapidly, $1.1 million invested to date, the team has over 40 years experience, and we're fast moving. We've also got a top tier advisory board. I look forward to hearing from you all soon, and thank you for taking the time to listen to our presentation.
I'm Jeff, the founder and CEO of Monochrome Asset Management. I'm also a passionate advocate of digital assets since my introduction to Bitcoin in 2013. Whilst adding Bitcoin into an investment portfolio can be navigated by most individuals, it is still not straightforward and comes with its own challenges. And additionally, for majority of SMEs, family offices, SMSF, and even large institutions, there's a range of specific hurdles when it comes to implementing a digital asset treasury or investment strategy, mainly revolving around compliance, strict acquisition procedures, and custody challenges. The Monochrome Bitcoin Fund was established to fill a significant gap in the Australian wholesale market, enabling sophisticated and institutional investors to gain exposure to Bitcoin without the compliance and security risks associated with engaging with new technologies and, most importantly, digital wallet custody. My prior experience was co-founding and leading Australia's largest and most liquid digital asset exchange as its CEO. And through that experience, I founded Monochrome after feeling a strong industry push for a product that properly caters to Australian institutions. In just 12 years, Bitcoin has matured from a niche digital experiment into a globally recognized asset class by some of the largest financial institutions in the world, such as Goldman Sachs, Morgan Stanley, BNY Mellon, and more. With over 100 years of combined experience in traditional financial markets, funds management, and digital asset investment, here at Monochrome, we believe that sophisticated Australian investors should have the right to get exposure to Bitcoin through a safe and regulated investment vehicle, starting with the Monochrome Bitcoin Fund.
Well, Bitcoin's clearly been a highly volatile asset over the last few years. It's a nascent asset class, so one would expect its volatility to be reflective of that. Now, what we've done is done a simple monthly rebalancing of Bitcoin inside a 60-40 portfolio, whether it be at 1% or 5% allocation, but bringing back that allocation at month end to the starting allocation, be it 1 or 5%. And that's a reasonable, traditional way to manage a highly volatile asset in a portfolio. So up until about 12 months ago, Bitcoin has had a very low correlation to traditional assets. In the last 12 months, since the onset of the pandemic and the central bank responses to the pandemic, there's been a bit of rising tide all lifts all boats. So the correlation Bitcoin to other assets has gone up in the last 12 months. But how I view it at this moment in time is there is still some uncertainty as to how Bitcoin will perform in a deflationary environment relative to those other assets. And I think that's a function of leverage. So how easy is it to leverage into a particular asset class? And it's pretty easy to leverage into equities, and it's pretty easy to leverage into property, whereas it's not so easy to leverage into Bitcoin. So for that in and of itself, we'll tell you that Bitcoin's not as heavily geared as an asset class as some of the more traditional assets. So probably, I mean, this is conjecture, but it's uncertain as to how it will perform in a deflationary or falling asset market environment.
The Monochrome Bitcoin Fund is a wholesale investment memorandum fund, minimum investment of $50,000. What it actually does is takes an application through a regulated, understood vehicle that investors, accountants and self-managed super fund applicants can use, and then securely invests in Bitcoin through our custodian. The Bitcoin is then held in cold storage. It's a very safe way for people to get exposure to the currency in a way that's regulated. We operate under an AFSL. We have authorised representatives within the team. You can access our fund by going to our website, and you press on the invest button, and it will then take you through a logical process to get you through the application process. Because it is for wholesale investors, there is a little bit of time required to meet the requirements of being a wholesale investor. So we recommend that if you start on the 21st of the month, you'll be completing that process before the 25th. You can find us at monochrome.co, and once you get to the website, you'll find that you can press on invest or subscribe, or our email details and phone details are on the website. Our team is standing by and is looking forward to talking with you.
Hi, my name's Dan Pickering, Chief Investment Officer of Listed Reserve, a digital asset manager based in Sydney. I'll take you through what our fund does, how we approach digital assets, how we performed since 2018, and most importantly, what we're looking for from the next 5 to 10 years. Firstly, why invest in digital assets at all? I think there's two components here. Firstly, macroeconomic drivers. Secondly, technology. The macro drivers are really, we don't see monetary policy settings changing. We think the money printing continues. We think the population dynamics as well are favourable to us. Younger cohorts accept digital assets as valuable. They use them. And as they get older and wealthier, we expect more of their money to move into this ecosystem, which should benefit us. Secondly, technology. The whole world really is going digital. We're seeing it with work, with entertainment. And originally the internet never really had money until Bitcoin came along. It's now trivial to transfer money around the world. It's cheap to do so, it's secure. And we're seeing that technology move into other sectors like video gaming in particular, we're interested in, and also financial markets, transferring different types of assets around using this technology
is becoming more and more prevalent, and we think that growth will continue over the next decade. Thematically, our fund is about stores of value in digital terms. That's really Bitcoin. I'll touch on each of these a bit more later. Decentralized finance, which really means any product you might have encountered with a bank or an insurance company, rather than be provided by them, will be provided by computer code going forward. And finally, digital ecosystems. The best example I can give there are video games. They are great places for digital assets. They're their own closed loop economies. Within them, you can have money, sell digital assets, which can be validated by the game itself. And they're really made for this type of asset. So we see that as a particularly big part of growth going over the next decade. Touching on each store of value, really Bitcoin represents that. It's been the best performing asset for the last 10 years. It's a big component of our fund. For a long time, it's been ignored by institutions. That's starting to change this year, and we welcome them coming on board. I think we'll get an ETF in most developed economies in the next couple of years, which will make a big difference to Bitcoin. I think also it will reveal to people just how scarce Bitcoin is when that happens, and that institutional money really starts to flow. It's secure, it's scarce, it's been a big part of our fund since we launched in 2018. I expect it will be a big component going into the future as well. Decentralized finance, example here is the digital asset exchange Binance. The best performer in our fund. It's returned 800% since we first invested in it. Their development team is outstanding. They've launched the lending, borrowing, leverage products and derivatives. Really a fantastic set of products. Word of warning on the whole DeFi space, I think regulation is coming there. We position size accordingly, and we select assets that we think will best cross the regulatory hurdles that are coming. So well-financed businesses at scale should be able to cross the hurdles in the next few years. But there'll be a few bumps in the road for DeFi, no doubt, as we go forward. And then digital ecosystems, I gave the example of video games. There's another one here, Decentraland, which is a closed economy. You can walk around it with your avatar on your computer, meet other people, play casino games, have meetings, build offices and buy land. The currency of this economy is mana, which has performed extremely well. Land prices have performed extremely well. The graphics here aren't very good. I think it's just a great example of what you're going to see in entertainment systems going forward. And when we get a big and more developed video game start to launch its own currency and its own digital assets, it will be absolutely enormous, because that sector is $1 trillion economy on its own, and digital assets are really made for these types of ecosystems. So we're extremely keen on video gaming and these closed loop ecosystems that lend themselves really well to digital assets. When we're selecting assets, what are we looking for? Well, liquidity, first of all, most important, particularly when the market isn't good. So in 2018, our liquidity controllers really saved us, and we did, we did quite well in that time because we were careful about liquidity, and we continue to be. The use case of the assets, is it useful? Is it fun to use? We test them, we use them, and we make sure they do what they're intended to do. And finally, asset economics. So in digital assets, asset economics means really how many of them are there, how many of them can there potentially be, and finally, what are the economic benefits of holding the token? Are they enforceable? Can the rules of the game change? So we look at all of those things. Since 2018, we've looked at over 300 assets. We've only ever invested in 8. We take a very conservative approach to what we invest in. We're comfortable with that. We'll keep doing that, and it's served us well since we launched. Investing with our fund, and what are the benefits? I think security is number one. We have a top tier custodian in Gemini, and they have a custodial license in New York, which is a very high bar. It's a hard thing to get. As secure as the assets can be, they are, and we're comfortable with that. The fund has daily unit pricing, so entry is simple and straightforward. monthly redemption, so there's no lock-in. And perhaps second to security in terms of importance is pricing. Our digital asset pricing is based on over-the-counter trade, so we don't buy from exchanges. We're beating what you might call retail pricing on exchanges anywhere from 5 to 7%. And if you consider that on the way in and on the way out, it's a significant difference between what perhaps an individual could achieve. Our track record has been good. At the end of July this year, we were up 565%, but I think it's really early days and the whole ecosystem's only really getting traction now. So we're looking for exciting things going into the next 5 or 10 years as the technology creeps into other sectors like finance and entertainment in particular. That performance is after fees, I should point out. And we've modeled here a portfolio, 95% ASX, 5% our fund. You can see it's additive. The performance is twice as good with the allocation to our fund. I would point out 2018, where our sector had a sort of 50% drawdown. You can see in 2018 there that this portfolio dipped, but only slightly. So we think over time, with the right time horizon, it's additive to portfolios. Our investment committee, myself, Paul Rayson, Managing Director of Comsec, formerly the Commonwealth Bank stockbroking arm, and Ari Klinger, venture capitalist, launched LitiCapital and Founder Co. Nice blend of people that have worked in traditional finance, VC, and digital assets. So between us, we're selecting the assets. And further details on our website, listedreserve.com. Also in the deal room, you'll find this presentation. You will find our monthly fund reports to investors, so you can look at the sorts of things you might receive as an investor from us, explaining the performance each month. Also on the website, our research notes, if you want to know more about the ecosystem. We've got some great research notes on Bitcoin and other parts of the fund, so go and have a look at that. And other than that, thank you for listening, and I look forward to hearing from some of you over the next few months. Thank you.
Hello there, and thank you for joining me. My name is Patrick Tan, CEO and General Counsel of Novum Alpha, a quantitative digital asset trading firm, and I'm here to share with you a little more information about the Novum Alpha Global Opportunity Digital Asset Fund, as well as the opportunities in cryptocurrencies and digital assets, and how they might fit in your portfolio. So without further ado, please allow me to share my screen and tell you a little bit more about Novum Alpha, as well as the digital asset space in general. Over the past 18 months have been characterized by unprecedented central bank intervention, low interest rates, and asset inflation. Advancements in technology such as trading apps like Robinhood are shifting the balance of power between different investing segments, with retail flows and the assets which they invest in becoming increasingly significant. Regulatory changes are also rapidly shifting the goalposts and tax burdens, especially with the developed economies of the West looking particularly tax-hungry to cater for their massive debt burdens. Demographic shifts, such as longer lifespans against a backdrop of inflation, are increasing the retirement obligations faced by both pension plans and individuals. This investment landscape is then conspiring together to create the perfect setting for a new sort of asset class, which is cryptocurrencies. And that's why cryptocurrencies have had a big year since the pandemic first landed. Whilst initially confined to the tech fringe, a growing number of institutions are looking seriously at cryptocurrencies and deploying resources not just to study the space, but to also find out how they can profit from it. But while digital assets represent tremendous opportunity, they are hardly the easiest markets to navigate. Firstly, digital asset markets are susceptible to manipulation by whales with large holdings and market makers, where volume and order books are not always accurately represented. Second, data noise means that price information and data points are often inconsistent and opaque, which means that algorithmic trading strategies alone will not be able to cater for dynamic conditions, stopping out positions prematurely or entering them ahead of time based on historical data which may not necessarily reflect reality. Third, the widespread use of automated bot-led trading contributes to non-material price factors which often catch out a purely automated algorithmic trading approach. And this is why, after years of using both quantitative and discretionary strategies to trade the cryptocurrency markets, we have found that the most reliable method to approach the market is to apply the best of both worlds. Our quantitative tools pass the cryptocurrency universe to identify inefficiencies and to discover price dislocations. A discretionary overlay allows for human intervention to compensate for imperfect data quality and externalities. And our comprehensive approach combines in-depth research into underlying blockchain technology with factor models to generate above benchmark returns. As far back as 2012, Novum Alpha's founders started dabbling in Bitcoin. I myself first heard about it from my own brother who lives in San Francisco and works in tech. Like many others at the time, I too dismissed Bitcoin as being nothing more than a scam, but after having been convinced to read the Bitcoin white paper, decided that it warranted further investigation before I then took the leap of faith and bought some in on Bitfinex, one of the few cryptocurrency exchanges at the time. The process was not easy, and it was from then that I knew cryptocurrencies would take years to develop as a market or even as an asset class. In 2014, we experimented with statistical arbitrage and inter-exchange arbitrage strategies, which exploited inefficiencies in the cryptocurrency markets, some of which still exist today. In 2017, we developed quantitative strategies based on blockchain flow data. Simplistically, the more cryptocurrencies that were flowing into exchanges that could be seen from the transparent and openly searchable blockchain, the higher the likelihood that traders were looking to sell, and the higher the likelihood that prices were likely to fall. In 2018, we offered a blend of these strategies that had been developed to our first clients through managed accounts, trading for clients automatically and remotely via API through their exchange accounts. In 2019, we experimented further and explored deep learning and machine learning algorithms and increased our managed accounts to USDT 12 million. Now, USDT is Tether, and that's commonly used to buy a range of derivatives, futures, options, as well as spot products on various cryptocurrency markets. We stopped receiving new clients around this time in preparation of the launch of our fully regulated and licensed cryptocurrency hedge fund, which I'm here to speak to you about today. The Novum Alpha Global Opportunity Digital Asset Fund is a combination of years of experience learning how to trade cryptocurrencies the hard way so that our clients don't have to. Utilizing a blend of the best and most consistent strategies that we've developed over the years, we're proud to share that we've managed to achieve over 1,500% annualized returns, a Sharpe ratio of 2.36, the low beta of 0.314, as well as a 16-time return on investment, with around $160,000 return for every $10,000 invested, and with an alpha of 774.84 over the Bloomberg Galaxy Crypto Index, which we use as the benchmark. Key to our returns has been a willingness to keep adapting and to constantly learn and innovate when it comes to our cryptocurrency trading approach. We are also proud to work with some of the best service providers to ensure that our clients have an institutional grade experience in their first forays into cryptocurrencies. We use the world's largest law firm, Dentons, in both Singapore and the Cayman Islands, as well as Finn Dixon and Hurling out of the United States. Our administrator is Lantern, an award-winning fund administrator based out of Singapore, and our tax and audit functions are overseen by Baker Tilly, a global accounting firm. The fund also enjoys the custodial services of Copper Technologies, a London-headquartered custodian that recently received the HFM Award for the Best Digital Asset Custodian. Clients can therefore invest with the fund knowing that they are in the hands of some of the best service providers in the fund industry and the digital asset industry. Fund investments start as low as US $100,000 and are limited to accredited and institutional investors. There is no fund lock-in, and management fees are 2% per annum with a 30% performance fee and a high watermark. Now, thank you for taking the time to listen to my short presentation. Now, there's a lot more I could cover with you, but I want to be respectful of your time. As long as you're interested, I'm more than happy to speak further. It's been a privilege and a pleasure to share this information with you. And if you'd like to find out more about our fund or get more details as to our strategies and our people, please visit our website or email us at the email seen on your screen now. I look forward to hearing from you. Thank you, and see you soon.
Welcome to Venture and Capital. Today's session is Trends in Cryptocurrencies and Digital Assets and Understanding the Network Effect and the Exponential Opportunity in this space. I'm John Dean. I'm the CEO of TCM Capital. I'm also the CEO of a company called Trovio, which is a technology company in blockchain. And I sit on the Digital Finance CRC board, which is a government-funded research institute into all things around digital economy. We might go around the room and maybe I'll pass first to Daniel to introduce himself and then we'll kick off the session.
Yeah, hi everyone. I'm Dan Pickering from Listed Reserve. We run a managed fund. We've been investing in digital assets since about 2018. We've returned about 600% to investors since then. So interested to catch up with everybody about what we're doing and how we're doing it and what's going on in the space at the moment.
Thanks, Daniel. Maybe Jeff?
Hey guys, so I'm Jeff Yu. So I'm CEO and founder of Monochrome Asset Management. So we are a managed Bitcoin fund in Australia and offering that convenient and regulated and secure access to digital assets for wholesale investors like you. Most people know me as the former CEO and co-founder of Binance Australia, which is Australia's largest and most liquid digital asset exchange. I'm also a very passionate advocate of digital assets in Australia for many years now, since I heard about Bitcoin in 2013.
Great. Thanks a lot, Jeff. Hendrik?
Hi, everyone. I'm Henrik Andersson. I'm the CIO of Apollo Capital. Apollo Capital is one of the longest running crypto funds in Australia. We are running two strategies, one long crypto fund, where we have had a strong focus on DeFi. We've been one of the pioneers when it comes to DeFi investing, and we're also running a market neutral strategy at Apollo.
Great, thanks, Hendrik. And Yael?
Hi, everyone. I'm Yael Tamar. I'm the co-CEO, co-founder of Solid Block. So we specialize in digital securities that are backed by property. We work with DeFi companies and provide a platform to collateralize real world assets and have access to the DeFi world, and also a place where crypto investors and crypto funds can place some of the investments in a more secure, in a more I would say stable environment with a stable asset class behind it, if there is such a need. So I come from a financial world, from Wall Street and then M&A private equity world. Going into blockchain with that background and working in the real estate industry.
That's great. And maybe that's a good way to start, Yael. I mean, obviously you're in this space, you come from the traditional background. Could you maybe elaborate on tokenization and what you think the future of tokenization is for businesses, I guess the real world application?
So that's a great question, John, because everybody's asking when are we going to see this space soar like it was predicted in 2018, then 2018, 2020 again, right? So what's preventing the tokenization from really becoming the norm? On the other hand, there are many assets that are tokenized on the back end, and you don't hear about it. They're not available to the public, but most of it, most of these assets are actually bought by funds, right? In private transactions, so the main benefits of tokenization is, of course, liquidity. So we do need to see liquidity in the market. On the other hand, exchanges and the secondary market players are not ready to start trading securities, right? So we have obviously largest exchanges, like Coinbase and Binance that need to step up and join the game, right? But on the other hand, it's risky because there is a lot of regulation, and it possibly is not as profitable as doing that for crypto assets that are much more easily traded, right? Digital assets that are more traditional, like funds and crypto. So in my estimate, tokenization is going to take a little bit of time. And I think this year and possibly 2022, when each, all of the big exchanges are going to finalize their regulation, processes to get the secondary market going, that's when we're going to see everybody jumping on board. That's the question on all of our clients' mind. That's the first question. Do you see liquidity in the secondary market? I actually would like to hear possibly from Jeff what he thinks about that.
Thanks, Yael. Yeah, I do agree that you need the whole industry to really keep on par with the services that we want to sort of see mature. Obviously the liquidity on DeFi, liquidity on the spot market, and even the futures market for the top digital assets have been significantly improved over the past cycle. When we say cycle, we mean like every 4 years, referencing to the halving. So it is definitely still a nascent industry, but what I would like to see is more industry participants offering various support and as a whole sector. I'm a big proponent for regulatory clarity. I think that will help, not just for more operators to step up in the space to offer more services, more high standards of services, but also for investor clarity for them to be comfortable entering this space.
On that space, I mean, you talk about regulation. Which asset class, maybe back to you, Albert, do you think will go first in regards to like sort of mass adoption from a tokenization standpoint? Like you could look at real estate, the St. Regis, obviously in Aspen, which was like a tokenization project a couple of years ago. What are you seeing and where do you see the growth?
So we were the technical partner on the Aspen deal, right? So we technically did the first smart contract in the industry. And, real estate is a prime candidate, but surprisingly, what I'm thinking is going to go much faster is the metaverse and possibly real estate in the metaverse, just because, most of the crypto industry and the gaming industry intersect. And the gaming industry is huge and it's very fast in adoption of new technologies, much more the traditional real estate world. So it might be funny, but I think that this market is going to grow really, really fast. But then there's also a lot of players from oil and gas industry, and the reason why that industry is a prime candidate is because of the taxation benefits to private companies, right? And actually, that's what might be driving tokenization industry in the long term, is that some companies just don't want to go public. So, and tokenization offers them an opportunity to be private and tradable.
Yeah, okay, very interesting. Daniel, you've called for greater regulation in cryptocurrency. And, there's obviously been quite a few different inquiries. Senator Bragg's been doing quite a lot in this space. How do you think regulation plays out in crypto, and why do you see it as a major beneficiary to the space?
Well, I think particularly for institutions, I think people are really looking for clarity, right? So where do they stand as far as the asset class is concerned? And you need to kill off the fear that the whole thing's going to be banned. And I think, if you look at Australia, most recently, the announcements from ASIC around the requirements that we're going to have to, the hurdles we're going to have to jump over to get a Bitcoin ETF live, for example. I think they were very sensible, right? They weren't asking for anything that you could reasonably deny an investor. So I thought, their suggestions were perfectly reasonable and they thought about it quite hard. I think contrast that with what happened in America a couple of weeks ago. You're tagging legislation on the back of other legislation. They were asking for things that weren't reasonable, that weren't well thought out. And I think, if we get sensible regulation, then we're going to get sensible products quite quickly. And the first sensible product in my mind would be a Bitcoin ETF. I mean, I see that happening in Australia probably next year, perhaps before America jumps. But I think the Americans are really, certainly Gensler at the SEC is embarrassed really that they're behind the curve on it all. The Canadians have got an ETF. Why don't the Americans? And clearly there's a demand in the market for it. So to answer your question specifically, I think the first thing that will benefit will be Bitcoin. I think there'll be other assets that perhaps struggle in the short term, particularly those that are classified by the SEC as securities. I think you're going to find a bit of pain across the asset class for some of the sector. Other parts of the sector might do better in the short term. But it's about clarity, really. I mean, no one really wants reams and reams of regulation, but people want to know where they stand before they hand over their money, and I think that's fair enough.
Yeah, maybe that's a good lead in into sort of the institutional space. You mentioned that a couple of times in your response there. Like, do you think institutions can play all the way down the curve in crypto, or is it going to be a case-by-case basis? Like, if they start regulating Bitcoin like the CFTC did as a commodity, is Bitcoin then going to be part of their portfolio, or is it all encompassing and you can grab, it's more based on market cap?
Well, I think you would look to Bitcoin first, because we can be, fairly comfortable in most jurisdictions that it isn't classified as a security, and that makes life a lot easier for everyone. So I think Bitcoin moves first. Are they going to go diving into altcoin number 994? No, they aren't. And I think, over time, you'll see them extend their wings into DeFi and other options, but I think it'll be the major assets that benefit first. Probably Bitcoin and Ethereum will lead the way. It may be years before, and by years, I mean 3 to 5 years before they're really getting involved, further down the food chain.
Yeah, okay. Maybe that's a good segue to you, Henrik. You've got one of the best performing funds in Australia in crypto. I know you're quite active in the DeFi side of things. How do you consider your fund, one, at the institutional level, given that sort of comment from Daniel, but then two, when you're looking at returns and sort of how you allocate risk?
Yeah, sure. I mean, I agree with Dan, right? So institutions, they will first look to Bitcoin, right? And I think, these days, many institutions, are starting to get their heads around Bitcoin, and there are futures, traded on regulated markets like CME, right, on Bitcoin, where institutional investors can get that access. I think increasingly this year, institutional investors are starting to recognize Ethereum as an alternative asset as well, and an asset that offers something different than Bitcoin. So in Ethereum, we have kind of that real utility use is like this powering this new infrastructure, financial infrastructure that is DeFi, decentralized finance. I think that is becoming quite recognized increasingly among institutions. So I think Ethereum is increasingly becoming an asset that is recognized among institutional type of investors. And so I think is DeFi. So we have seen, for example, a number of call them traditional venture capitalists or private equity firms starting to invest directly in tokens, in DeFi tokens. And obviously that is attractive because we are seeing that enormous growth in the DeFi space. By some metrics, the DeFi usage or utility have increased by around 100x in the past 18 months when you look at the activity across DEXs and the lending space, etc. So I think there's increased focus on that. And then, like what was touched on before as well, the NFT space that is increasing in pace as well, and you're seeing a lot of sort of people from retail interest in the NFT space, and that can really bring in a lot of people into crypto through gaming, through collectible and digital arts.
On the NFT side, do you see there's a big investment opportunity there for people on this call, or is the play more on Ethereum when you look at things like NFTs?
Yeah, that's right. So Ethereum is the biggest infrastructure for NFTs. So it's a little bit harder, I think, to find these kind of specific infrastructure investments perhaps around NFTs. But most of the NFT activity is happening on top of Ethereum.
Yeah, okay. And then how do you, this is maybe a question for everybody, but when you look at things like DeFi and coming back to the regulation question, and obviously DEXs and the fact that, from a KYC AML standpoint, how do you see that developing over the next really 6 to 18 months? Because obviously the application of the technology is fantastic. And when you took what Yao's doing on real world tokenization, it could be applied across many different assets. How do you think that will play out?
Yeah, that's obviously a really interesting question. And we have seen some debate around it with the infrastructure bill that was discussed on this call as well, where kind of you put a regulation in place that might not be DeFi protocols or non-custodial services might not be able to comply with, right? So that could potentially pose a problem, especially in the States, if that regulation is going to take effect. But what you might have to see in this instance is that you have unstoppable software running on blockchains like Ethereum, and I think what we have seen so far is that you have perhaps geo blocks. So maybe there is a Uniswap front end that is not available in the US, or you have censorship, on certain front ends to those kind of dApps. So that could be one way forward, I think.
Do you want to add anything on that? Yeah.
Yeah, I believe that NFTs right now are a temporary solution to the regulation issue because the regulation hasn't caught up with NFTs. And there are a lot of securities that are passed for this new animal called NFT, and the market is booming precisely for that reason. So it kind of reminds me of the ICO era. On the other hand, the standard itself, NFT, has a lot of promise, and I think is a great way to indeed sell and market most assets, especially those that are difficult to track or difficult to sell. Even real estate, right? So apartments, for example, buying real estate abroad is a cumbersome process. So you can solve a lot of these things with NFTs, and I believe that will happen. Now, there are some use cases for NFTs that really are going under the roof of a utility token, and that's fantastic. So in real estate, for example, timeshare. Staying in hotels, right? And it could really revive the hospitality industry, have people order rooms in advance or experiences or tickets. This could really go well, especially, you can probably kind of speculate on which places in the world will bounce first, which places in the world will become really hot, so NFT could really be useful. On the other hand, in the United States, if you do want to issue a utility token, you have to get registered. You have to get it registered. So there are other places, of course, outside the US where NFTs will play an enormous role, and when used correctly, as a non-security, could be a huge market connecting real-world assets to digital. And now, again, the same things could be applied to Metaverse, right? The rights to use certain assets or certain attributes or characters or whatever. So my prediction is that NFT is going to go through the roof in the Metaverse, in the gaming world, and follow as it normally does, a little slower in the traditional world. But I think NFTs are definitely here to stay.
Yeah, maybe that's a good sort of transition then into the other sort of, I guess, hot topic in crypto, which is ESG. Obviously, Elon Musk has been out previously talking about the environmental impacts. He then was on the B word, stating he has strong support for Bitcoin and he holds it within on his personal balance sheet, Tesla, as well as SpaceX. Given that China banning mining for Bitcoin, how do you see ESG as a component when investors are considering investing in crypto in general? Like, is that something that, maybe this is better at Daniel or Jeff or Henrik, but like when you guys look at investors, is that on the tip of their tongue and concern, or is it not something?
It's a question they ask, but I think as far as Bitcoin's concerned, which is probably the ultimate proof of work token in terms of its energy consumption, I think it's reasonably easy to answer, because particularly post-China, when you look at Bitcoin's energy consumption, well over half of that energy consumption now is renewable. And almost by definition, it has to be, right? A Bitcoin miner has to pursue the lowest cost energy, and that tends to be surplus renewable energy. So you can't really find any country other than Iceland with a higher renewable rate than Bitcoin, right? So not many industries compare in terms of their renewable footprint. And there's lots of instances where Bitcoin mining is actually solving environmental problems, right? So the flared gas solutions, rather than, you know, burn your carbon monoxide, you mine Bitcoin with it, and it's a net environmental positive. I actually think the Bitcoin industry as a whole did a good job in responding to that Elon moment, because a lot of these facts about, you know, just how much energy Bitcoin uses and how much is renewable and what the direction of travel is, and the metrics weren't really understood in the market. So it was a bad moment when he did it, but I'm glad that he did it, because, you know, most of the arguments from the naysayers about power consumption have really been taken away. I mean, Jeff, I know you're across this too. I don't know what you say to your investors on this point, but we don't have much of an issue batting it away, to be honest.
Yeah, I share very similar views with Daniel on this one. Like, you know, the view on energy on anything, the problem with energy consumption in this day and age is not about criticizing the usage, but really criticizing the production. The world that we run on currently, you know, produces something like 120,000 terawatt hour of energy, and 50,000 terawatt hour energy is just wasted in the form of, you know, wasted, untapped, unsalvageable, you know, stranded energy. And the problem is that how do we solve that problem? How do we solve that 50,000 terawatt hour problem? And just stop focusing on Bitcoin's measly 120 terawatt hour use of that. It's like a fraction of what the big problem the world right now is facing. And also, you know, to criticize the energy use of a innovation without actually weighing the pros reminds me very, you know, there's a Forbes article in 1999 criticizing that the internet uses too much energy and should be shut down. That's a very similar mindset to think about, right? Bitcoin using energy, for those that don't understand it, it is securing the network. It is used to secure your Bitcoin, your holding, and the ones that come before and after that. You know, if you tell me that my bank's vault has more concrete or uses too much concrete, I'm actually happy about it. If you tell me that for ESG reasons, the bank vault is going to be, you know, 50 millimeter thinner or whatever, to save concrete, I'm actually going to be worried, right? If you think about it that way and balance the view out, you can actually see that, you know, look at this way, weigh the pros and cons, and understand it from your point of view. At Monochrome, what we do is that we have a research department that is coming out with content and, you know, to back up, you know, what I just said, essentially to have that educational flow and sort of guiding light in the noise in this cryptoverse to clarify why is something so in this space, and why Bitcoin uses energy might not be a bad thing at all. It might actually be a good thing. And that's kind of the thing that we try to sort of, you know, send the message across to more people, whether they are already invested in Bitcoin or other crypto assets, or haven't yet pulled the trigger.
Jeff, just on that, and talking how you talk to your clients, how do you address volatility of the asset class with your clients versus traditional markets?
Yeah, look, volatility definitely is something that a lot of traditional investment managers or advisors tend to focus a lot of attention on. Given that Bitcoin is a nascent and free market driven asset class, which is going through its early days of price discovery process, you know, the price is by design and nature has to be volatile in its early days in this period of time. You can't engineer stability into a technology that is not supposed to have any central arbiter and couldn't have any central bank sitting on top of it. Despite that, we're seeing institutional players coming to the space. You got even other than our clients, you got even overseas, you got Tesla, PayPal, Square, even traditional financial giants like JP Morgan, BNY Mellon, State Street are offering products into the space. And it shows that the demand is there. It shows that the demand is there, despite of what people would think of the volatility issue in terms of Bitcoin. You just got to view and price it differently than how you view how you value other financial assets in your portfolio. It's very important to take a long-term strategy view when you view Bitcoin's price action, because it's such a nascent asset class. It is definitely going to be volatile for the next decades to come, but that's not necessarily the bad thing. If you look at the long-term price action, every 4 years, there's a thing called the halving. Typically, the excitement of the price, rushes before and after those events. And what the halving is the halving of the mining reward every 210,000 blocks, or roughly around 4 years. I think Hendrik or Daniel can attest to the performance of Bitcoin as an asset class itself over time, and how volatility has impacted the view, maybe in a good way or bad way. They might be able to shed some more light on that as well.
Yeah, I think one way to approach it is position sizing, right? So that goes for the investors into the digital asset space. So obviously it's a very high volatile asset, but like if you position it right, and I think for most investors we are talking about 1, 2, maybe 3% of their assets in something like crypto that is highly volatile. So I think it comes back to kind of what is the position size you're putting on relative to the volatility of the asset, which I agree will remain high for the medium to long term.
But of course, I think the worst time to invest in Bitcoin will be when it stops being volatile anymore. And so people have got to bear that in mind as well. I agree on the position sizing. Actually, I think that that range is exactly what we say to people also. But be glad that it's volatile, because that's where the returns and the performance have come from. And people, I think, on the way in, just condition yourself that along the journey, if you're holding for 5 to 10 years, you're going to have 40 to 50% drops, which sounds extreme to people. But when you look at the overall performance, it easily takes it in its stride. And if you're mentally prepared for that on the way in, that's the way to do it. And, size your stake accordingly.
So John, I want to kind of weigh in on the previous topic a little bit, because I think it's important. In terms of the ESG, there is a component for ESG for underlying assets as well. So things like real estate have ESG component, and we have lots of assets on the Solid Block Marketplace that are rated as ESG, so, have a ESG certification. So if the funds are looking to increase their participation in ESG product to balance out cryptocurrency or other digital assets that don't have that rating, they have an opportunity to invest in security tokens with the ESG rating. So I think it's one of the things that the crypto world may not be aware of, especially the taxation benefits that come together with this. And I just wanted to make sure that we touch upon that.
And I'd like to add something to that debate as well. I think when you talk about ESG, like we always talk about the E, but it's very easy to forget about the S and G, right? There's 3 letters in ESG, and I actually think crypto, score quite well across, E, S, and G, right? So the social aspects, like with the economic freedom that DeFi enables around the world. I think that's something to think about as well, with the governance aspects of crypto networks as well, with the open nature of the networks, and how governance is made in crypto networks. I think that's really interesting aspects as well.
So just back on that, Yael, in relation to, I I guess, tokenized securities and what it could offer. What do you think are the biggest trends in non-crypto, so tokenized assets side of things, like, FTX, Binance obviously have tokenized stocks and there's some tokenized commodities, and generally it's just when they're moving, they list them. Do you see that as the future? Like, are we going to see all things tokenized?
Well, unless there will be something new created, right, by the regulators, some new asset class that's between private and public, right, as a kind of retaliation, which I don't foresee that happening, just because regulators are always behind and not in the forefront of the industry. So for now, tokenization is a fantastic opportunity to trade assets without them going public. Part of that was allowed through a regulation in the United States called the Jobs Act, which was created to encourage small businesses by allowing liquidity and peer-to-peer trade of private assets. The other countries followed suit in terms of allowing secondary market, but did not follow suit in terms of solicitation and marketing. So that's what really holding up this industry. When you talk about most digital assets, well, you don't need to do a lot of marketing, for the assets themselves. By exchanges, for example. Funds, of course, is a different story, and it costs a lot of money to put one together. So what I think is next really is, the funds industry is really, really interesting. I would like to see tokenization of funds, so that we are able to provide these products also at lower thresholds. And actually, we've been approached by quite a few hedge funds recently. There's still some limitations in terms of tokenization of funds, just because of the sheer number of investors that you can put in each special purpose vehicle. But I think next we're going to see tokenization of hedge funds, so that traditional investors can also put some money in. Not traditional. Regular accredited and maybe even sometimes retail investors can benefit. And on top of that, as I mentioned, the Metaverse is a place where we'll see a lot of trading coming out of all kinds of assets that we have there. And of course, I strongly believe in real estate, just because in real estate, tokenization is a fantastic solution to a real world problem.
Do you have, obviously CBDCs, central bank digital currencies is another one. Obviously the ECB is looking at it. China is, pretty much live with it. US is working with MIT. What do you think the impact is of CBDCs and to the space in general? And how do you see that playing out?
So I can jump into that, or if that's okay, for a minute. So CBDCs, when they came out, a lot of people said, well, crypto's dead, long live, CBDCs, and or even cash is dead, long live CBDC, right? So, and the reality is that it's going to take a long time for the governments to roll them out and regulate them and so on and so forth. And there is space for crypto, which as Henrik said, offers a lot of benefits to people, in a way that other assets that are regulated by governments do not, because they cater to everybody's interest. So, but CBDCs are super interesting as an emerging field, and I would be really interested to hear what everybody else here thinks about that.
Sure, I can add to that, Yo. Like if you guys know me, you probably know what's coming. So much of the problem you guys see that people confuse crypto and CBDC, and will CBDC replace crypto or Bitcoin, comes from the fact that, it shows that how people don't understand the different innovations or product tranches within the entire cryptoverse, right? There's so many things in this space that are so distinctly different than the other stuff. Like CBDCs are a complete different beast than Bitcoin, which is a complete different beast than NFTs and DeFi and tokenized real estate. And they all come with their own unique, technology, their use cases, and most importantly, their target audiences that sort of backs that, adoption and backs that value behind it. So, for Bitcoin, digital assets like Bitcoin is on track to be a security base layer or, base layer technology for a lot of decentralized technologies. Similar to how Ethereum provides that speed for programmable layers on top of it, Bitcoin offers the security aspects of that as a priority. And because of Bitcoin security and predictability, it's a leading role as a long-term investment consideration, as well as a technology-based layer. CBDCs, on the other hand, like what I just said, doesn't really even make sense for CBDC because it's completely different. So it's definitely a form of evolvement of, say, digital government money, which is like e-money in our bank accounts. Makes it more, I would say, some people think it's more controllable by the issuer of the currency for the user. Some people think it's more liberating. Some people think it's more restricting. But the topic that I want to bring back is that we have to, as operators in this space, as leaders in this space, have to start calling for better and clearer labeling in this sector. Everything is so different. Everything is on pros and cons and should be valued on its own merits. The last thing we want is for people to exploit the ambiguity and hurt investors in this space.
Thanks, Jeff. Did you want to add anything on that, Henrik or Daniel?
Yeah, I mean, I think with the central bank digital currencies, really, there's no difference. It's just a new, this is just, my perception is that it's just a new weapon of control for the government, right? You're handing over programmable money to the government. So all manner of different things are now available to them. So, for example, we're going to issue some money, but only to people under 25. We're going to issue some money, but only to particular postcodes. There's all sorts of things that they can do with their programmable digital money, and I can see why it's highly attractive to them. But it still has an unlimited supply. The trajectory of the value of a central bank digital currency is downward, and it will carry on being downward. And likely it will go down faster when it's digital because it's so much easier for the government to manipulate it in whatever direction they want to go. If you look at the situation now around the world, COVID and all the rest of it, if they'd had digital currency to sort of airdrop money into people's wallets a year ago, I think they would have used it much more frantically than they did. So actually from the perspective of what it does to the values in the digital asset space, well, I think scarce assets get more valuable as the tools the government have to issue money become looser, and central bank digital currencies make them looser.
Yeah, I wouldn't forget real-time taxation as well. So obviously they can do real-time money drops, but they can also do real-time tax.
Absolutely, it's a vaguely sinister technology, because at the moment you've got the banking sector in between the issuer and the individual. It's not clear that banking sector will be there. Like, will we all have accounts with the central bank? Like, how's it going to work? It's interesting, but I don't think it means good things for the population at large. But it does mean that the value of currencies is going to fall more quickly.
I think, within our business in TCM, one of the things we're always challenged with is, breaking apart currency, the word cryptocurrency, right? And obviously what the utility is of each underlying token. Bitcoin obviously serves its purpose. A lot of people talk about it as digital gold or a potential, actual currency, right? It's obviously finite supply. But when you go looking at things like Ethereum, and this is probably directed at you, Hendrik, when you talk about your asset allocation and how you decide on what the right investment is, how do you view the intrinsic value of a token and how it will appreciate in value?
Yeah, so I think you're right. So Bitcoin is becoming this digital gold, right? It doesn't necessarily have intrinsic value, but it has a huge potential because something like a store of value like Bitcoin has a very big potential, right? But when you introduce smart contracts, and that's Ethereum, but there's also other blockchains. You have more possibilities what you can do, right? So with Bitcoin, you can transfer value or you can hold value, right? That's pretty much it for Bitcoin. That's a huge use case by itself. But when you introduce smart contracts, you introduce more use cases. And one of those use cases is this new financial infrastructure, which we call decentralized finance or DeFi. So that's one, where we identified as a low-hanging fruit for smart contracts fairly early on. and that has really played out, especially in lending markets like Compound and Aave, these permissionless lending markets, and also in decentralized exchanges. So DEXs like Uniswap and Curve and others, they have seen huge surge in volume. They're around 60 to $80 billion, traded on DEXs now on a monthly basis. So those are some of the kind of sectors within DeFi that have found a product market fit so far. I think the next big wave in DeFi will be something we call on-chain derivatives, so trading futures, options on the blockchain itself. I think that's perhaps the next big wave within DeFi. When it comes to the valuation, you actually have a cash flow on these protocols. So most of these protocols, they have a protocol fee. So they actually collect the cash flow that flows to the governance tokens for these protocols. So you can kind of apply more traditional valuation metrics to the DeFi assets. So I think that's another feature that makes them quite attractive for institutional type of investors, as it is perhaps easier to calculate the fair value of something that generates hundreds of millions of dollars in revenue. That some of those protocols are doing today, versus something like Bitcoin where you don't have any really cash flow happening.
And Hendrik, I mean, this is another one which I guess is quite topical, but is USDT Tether. What's your view on USDT? Does it stick around? Is it a systematic risk, or is it all just a bit of fluff?
Yes, it's a great question. So Tether obviously have been the major stablecoin in the market for a long time now. Market share of Tether has gone down recently. So if you look at Ethereum, USDC is pretty much at the same size as Tether now. I think everyone likes to see more alternatives because that's good for the market if we have those alternatives. Tether is still a major pair to Bitcoin and other assets, but we have seen other coins take market share, and I think that's probably positive. We also see a lot of innovation when it comes to decentralized stable coins, so things like DAI, which is backed by ETH and other assets. There are also things like Terra USD, there are SUSD by Synthetics and other decentralized stablecoins like Frax out there. So there are a lot of alternatives to Tether today. Yes, there are definitely concerns around Tether. On the other hand, they are being more transparent now than they have ever been in the past. So we actually have transparency reports coming from Tether these days. So I think a few years ago, maybe the concerns around Tether was were bigger than they are today for two reasons. One, they're more transparent today than ever been before. And secondly, the market share has been going down lately.
Okay.
Yeah, I think I want to add to Henrik's sort of point on Tether as well. Like on a different note, we mentioned volatility in early part of the call. Other than sort of allocation strategies when it comes to a volatile asset class, a lot of portfolio managers look at the underlying volatility of that asset, despite even 1%. A lot of traditional portfolio managers take the view that something that is volatile mean that it's bad, but not necessarily, because look at Tether. Tether is the most least volatile asset class, but the risk, the risk of it going to zero is higher than Bitcoin going to zero, frankly. So that's something to think about when we speak about volatility, and Tether is a really good example of that.
Yeah, that's interesting. So our investors, we have a lot of institutional investors on the volatility side, view the volatility as a really capital efficient mechanism, right? So i.e. the amount they need to have allocated to the space is obviously proportionally less to get the same sort of returns they'd get in other assets. So they view it very much as obviously as an alternative, right? It forms part of their portfolio. It's decorrelated with other assets, all this sort of stuff, right? It's, a lot of the time they don't even look at the intrinsic value. They're more considering it from a portfolio composition standpoint. So I do think there is definitely a play there where the volatility is a net positive, not a negative, as you mentioned, Jeff. One thing I want to get onto before we sort of wrap up is the infrastructure bill in the US. Twitter was exploding with, obviously a couple of people sort of trying to push through reforms, obviously to try and rip out the miners and all the software developers on the back of, what would be all encompassing in what got pushed through in the end. What's your view first, maybe Yao, on how that's played out and whether this is going to be a negative for innovation in the US?
Yeah, I think that definitely it will have an effect on the market. In terms of the crypto market, I think we've seen that most of these new changes are anticipated by the market, and what I'm worried about is stifling of the industry in the US, right? So I feel like a lot of the industry players may move out of the US, and the US is the biggest financial market in the world for these assets or other assets or traditional assets, like the one we're working, the industry in which we are working with Solid Block, primarily real estate. So at the same time, what we're doing specifically with Solid Block can be really helpful to, in some ways, in some cases, deferred taxes, for example, right? If the taxation is going to go up steeply for crypto investors, they're actually able to invest in certain opportunity zones in real estate and defer taxes, for example. So we present the opportunity for those investors. Now, the assumption here is that the opportunity zones themselves, that's basically a terminology used in the tax world in the US, that the opportunities will remain, right? Every time there is a big change in the US and the government, we anticipate big change in terms of taxation. And that's the primary driver for innovation and investment in a specific area. So I am personally concerned about those types of advantages, tax advantages, that I hope will stay. There's another term used in the tax world in real estate in the US called 1031 exchange, and we can actually use those to trade digital assets backed by real estate. So if that tax advantage will stay, then we'll be able to help the crypto industry even further, right? So I think that the smart investors that will stick it out and find ways to operate will find our industry very, very helpful to them, kind of combining the traditional and the crypto. On the crypto side, on the crypto trading side, on the mining side, I know that you guys here in this conversation are much more knowledgeable, so I'll defer to you.
I mean, I just as far as the US situation goes, I think in politics, right, when it's a toss-up between a conspiracy and a cock-up, it's normally a cock-up, right? And I think they've added legislation in a race at the last minute. And did they intend to capture Bitcoin miners? No, I don't think they did. Did they intend to capture individual custodial wallets? No, I don't think they did. And I think as it works its way through the system, it will come to a more workable solution when it comes out of the other side. So I'm not sure we've seen the final form of the legislation. And I take a lot of comfort from Gensler at the SEC, right? Although he says some negative things, he does understand this sector very deeply. He understands how they work. He's got a clear view on what is and is not a security. And I think ultimately we'll get something sensible. And what happened last week was basically a political balls up that they'll unravel as we go forward.
Yeah, if it improves, that's more likely to clarity. It's good for US, and trickles down, good for Australia. But if it's something that is impeding, it will just drive innovation out of US, and Australia stands to benefit from it, given that we're such a big hub for innovation in this sector on top of the rest of the world. So we have very similar battles here and at home as well. Like with ASIC's recent CP343 consultation paper, it underlines, how good thing that that consultation paper was pretty well written, from the perspective of a fund manager. I think it covers a few topics and best practices really well. Monochrome, did submit a response to the CP 340 paper, which highlights the recent best practices to handle crypto assets in exchange traded products. Because it's no secret that Monochrome is exploring alternative products to our existing Bitcoin fund to provide our client best-in-class treatment, and doesn't exclude the Bitcoin ETF. Because it's really simple. Holding Bitcoin in ETF, it's a simple and familiar way for everyday and institutional investors to gain access to the asset class. With an ETF, you get instant integration with web programs, web platforms, and making the consumer experience smoother. And more importantly, and this is something that a lot of regulators around the world are trying to sort of get it right, which is custody. A Bitcoin ETF shifts that operational and custody risk from unregulated or underregulated managers into to professional issuers and managers. It doesn't just lower the barrier of entry into the asset class, but also make it more robust and ultimately a smoother way for a wider range of investors to introduce Bitcoin and other digital assets into their into a diversified portfolio.
Great, thanks, Jeff, and thanks, Yael and Daniel and Hendrik. It's been great having everybody here. Really appreciate the time. Obviously, COVID lockdown and everything else going on, and the time of the evening, so it's really appreciated. Maybe everyone could just go around the room and tell the audience how they could connect with you or your firm quickly, and then we'll wrap things up. Yael, you want to start?
Sure. So we're Solid Block, www.solidblock.co. You can find me anywhere on social media. I love connecting to people on LinkedIn, Yael Tamar, or on Twitter at Yael Tamar. I'm happy to talk to anybody who'd love to explore its organization.
Daniel?
Yeah, you can find us listedreserve.com. We're on LinkedIn, Twitter, all the usual social places as well. We've got an office on Gloucester Street in Sydney for those people based in New South Wales. Do come and say hello.
Great, thanks. Jeff?
Yeah, you can find us at monochrome.co. So it's just, there you go. Monochrome.co. So you can drop us a email inquiry, or you can visit our office at Central Plaza here in Brisbane. Maybe even give the racing sim a go. It's a F1 cockpit for you to try on, whoever wants to visit the office. Big F1 fans here. Yeah, we look forward to hearing from you.
Thanks, Jeff. Hendrik, sorry.
Yeah, so we are on apollocapital.io and Twitter, LinkedIn, etc. We are based in Melbourne, but we have people in Sydney as well.
Great. Well, thanks again. I'm John Dean, as mentioned, from TCM.capital. And thanks to the audience for listening in, and hopefully catch up again soon. Thanks, guys.
Right, thanks,
Thank you.
everybody.
All right, thanks. Bye-bye.
Hi, my name's Pete Percy, Executive Director at KPI-AI, and I'm here with my fellow Executive Director, Dan Rowan.
Hi, everyone. Thanks for joining us.
And we're here to share with you the extraordinary opportunity, which is KPI-AI, our business, and our interim funding round. All right, so essentially what we've done is we've built a money-making machine. It uncovers a river of opportunities on global financial markets, but this river is moving too fast to be executed by humans. You need machines that can execute and exploit these opportunities with speed and precision. And that's what we've built. Our tech has been battle hardened through 12 months of live testing. It's working for us 24 hours a day. It's working while we're talking now. It was working while I was in the surf this morning and while we're sleeping tonight. We've spent 3.5 years and $2.5 million building this technology. We're extraordinarily proud of it, and now it's ready to bring it to market.
Thanks, Pete. Yes, and now that the machine is working for us and we've got the stability that we were looking for, the accuracy that we were looking for, we recently hit a major milestone on the 1st of July where we started our track record on our first futures product, which we're 2 months into this track record now. 6-month track record is traditionally what's required to take a product like this to market. In the 2 months it's been trading live, we have generated a real return of 3.2%. That 6-month track record, of course, will, because of the frequency of our trading, include around 250 trades a month. It's going to be pretty solid, and we've got established distribution channels that are ready to take this to market. Really good relationships with people who have good relationships themselves with clients for us. And that's when our fee revenue will begin, and that's a key pillar of our business model, is generating fees on funds under management. But that is really just the tip of the iceberg. That's our first product of what will be many, many products. We have an incredible capacity to create products, initially of our own design and ultimately potentially bespoke products that meet investor needs. Our analysis works across all liquid markets, across all time horizons, and it's very flexible.
Yeah, that's right, Dan. We're currently in the process of building an energy futures product. Remember, we've got an equity index product ready for market now. We're building metals futures, foreign exchange, equities, and of course, the exciting world of crypto, which we'll get to in a sec.
Well, let's get to it right now.
We're here already. The crypto revolution, look, this is, in our opinion, is the biggest opportunity in financial market history. It's a rare new asset class. It's growing rapidly as it gains credibility with more and more institutional participation, but it's still immature. It's very directionally volatile, and there's inefficiencies to be exploited. Just to give you some background, Bitcoin, since its inception 10 years ago, has returned an average annual return of 120% per year. It's extraordinary. And these markets trade 24 hours a day, 365 days a week. That's 30% more trading time than the foreign exchange markets, which trade 24 hours a day, 5 days a week. That equates to 30% more opportunity to profit as well. So crypto, look, our models are producing extraordinary returns already. They love directional volatility, and that's what the crypto market is. In fact, we consider them the most directionally volatile markets in history. And most people have made their crypto fortune so far on the upside, but our models make 50% of their returns when the market falls as well. So they're directionally agnostic. They make as much money when the market goes up as when the market goes down. So this is a tremendous opportunity to generate proprietary trading returns. But of course, the market, the sector has never been hotter, and we consider there's a huge demand for product that can harness this directional volatility of the crypto markets and give people an entry point into this, tremendous opportunity.
That's right, Pete. And so we think, looking at the product we're sort of now on the cusp of launching, that we're building the track record for, we can be profitable on fee revenue alone early in the new year once we've got that 6-month track record up. But the truth is, we think we can be profitable a lot sooner than that by monetizing the tech. We're currently underutilizing our money-making machine. So we're coming out with an equity sale now in order to help generate revenue immediately, speed this up, supercharge our organic growth. And in pursuit of that objective, we're offering 7.5% of the company, KPI-AI Proprietary Limited, for $1.1 million. And that's our offer to you at the conference in a couple of weeks, and we hope to see you there.
Yeah, that's right. Thanks, Dan. So look, in a nutshell, we've spent 3.5 years and invested $2.5 million to build a money-making machine. But it's not just about the extraordinary growth potential or tremendous returns. This is an innovative, exciting business to be a part of. We're leveraging artificial intelligence. We're poised to benefit from the crypto revolution, to capitalize on the crypto revolution. And look, we're working with an amazing group of people as well. There's never been a better time to be involved in this business. And we're just looking for the right investor, as Dan said, to supercharge our organic growth. So love to catch up with you at the conference. Thanks very much for your time, and we'll see you there.
Thank you all.
I'm Dermot Butterfield, founder and CEO of Wych. A recent study showed 49% of people are unprepared for economic downturn. 40% have no emergency savings, 25% are unable to focus on their financial goals, and 20% believe their goals are unachievable. Wych Money is GPS for your finances. We show you where you are, we work out where you're going, and then we help you get there. Personal financial management has been around for a while, yet money is still the leading cause of stress. People are overwhelmed by choice, confused by the details, they can't afford to make mistakes, and so they're afraid of getting it wrong. Wych does the hard work of finding the waste. We identify opportunities to save, simplify the jargon, tailor the options, and then automate the savings. By partnering with insurers, utilities, financial institutions, and retail businesses, we enable the acquisition of new, engaged customers, reduce the churn of existing customers, all by providing customer and market insights and trends. We use our AI, automation, and data skills to build a platform that consolidates open data, analyzing the options, and removing the guesswork, then automating the goals, removing the hard work. At Wych, we believe financial management should be as easy as using an elevator. Step in, select your destination, and arrive. Previous tools are rear-facing. You can't change the past. We're forward-looking. We help plot the course to people's goals. We focus on what people want to achieve using our 7 steps to financial success. As an open data platform, we're more than banking. This allows us to deliver continuous real-time comparison, connecting businesses actively looking for better and more cost-effective ways to engage. Wych brings business and customer value together on our platform. By taking this unique approach, we will be able to deliver value from day one and build on customer satisfaction. Our business tools provide our partners with an insight into their customers, and the market insights help them deliver greater customer value. The high barrier to entry, the international capabilities and flexibility of our platform make Wych Money difficult to reproduce. Let's look at an example. This is Jack. He wants to buy a home. He needs to save a deposit, but he doesn't want to give up on smashed apples on toast. This is where Wych can help. We can show the true cost of ownership, including the affordability of the mortgage, the deposit required, the impact of interest rate changes. Then highlight the cost of bills like insurance, power, or even his commute. Finally, we can compare it to other locations. The opportunity is substantial. We have built a platform to serve Australia, New Zealand, the UK, and Europe. And with the US executive order on financial competitiveness, that opens up North American market. A recent survey showed 41% of people are comfortable sharing their personal information if there's a benefit. We're targeting 100,000 users over 3 years, with 8% having 1 or more subscriptions. Businesses are actively looking for a competitive edge. We already have partners coming to us. We're aiming for 100 businesses in the first 3 years. We have partnered with Microsoft to accelerate that acquisition. Our pay for what you use feature-based pricing lowers the barriers of entry, encouraging customers to upgrade for less than the price of a coffee a month. Our business pricing enables partners to choose custom integrations, co-branding, support and development options. Our go-to-market plan is a dual acquisition strategy based on partnering with service providers and directly pitching to customers. By initially targeting investment and superannuation providers, we aim to help their customers free up the money to invest in their products. By swiftly delivering a user their goals, we aim to capture and engage users. Utilizing our app marketplace and digital channels, we can upsell and maintain engagement. Finally, by leveraging referral incentives, social proof campaigns, and by targeting the millions of monthly comparison site searches, we will build on the active community for our digital village. The founding team brings extensive experience, from startups such as TommyZone, Mako Networks, and Nine Spokes, to international enterprises such as Intel, Vodafone, and Tower Insurance, all the way to mass consumer retail, including eBay and ASOS. The founding team are joined by notable advisors, including Vanessa Rowland Pierce of Antler and Gartner, Siobhan Casey of ACS and Hashchain, Murray Knox of Wex and Mako Networks. Wych is looking to raise $750,000 on a $4 million pre-money valuation. We're using these funds to expand our team, accelerate our market entry, and expand on those base capabilities. You can reach out to us now via our crisp deal room. We'd love to chat. Thank you for your time.
Hello, everybody. My name is Doug Morris, and I'm the CEO of Sharesight. Thank you for your time and attention today. What I'm going to do is give you a quick background on our business and kind of our backstory, and then I'll run through a quick demonstration of the software platform as well. So Sharesight, we service over 250,000 investors in over 100 countries. We've actually been around since 2007. We were founded in Wellington, New Zealand, but have since expanded over to Sydney as well. So the bulk of our business is concentrated in Australia, New Zealand, although we are growing quickly in the UK, North America, Hong Kong, Singapore, and various other sort of retail investor-friendly markets around the world. We number 50 people today across our organization worldwide. And actually, we've done the bulk of our capital raising has come from our user base. You know, we figured we provide a portfolio tracking product to self-directed investors. Typically, they sort of range towards the more sophisticated end of the investing spectrum. And so we figured we'd leverage their knowledge and their insights and their dedication for the product and use that to continue growing on a global basis. So what I'll do now is I will just change over to the software and take you on a very quick tour. Okay, so this is Sharesight. As you'd expect, it's a browser-based application. Everything you see on this page is all calculated in real time. So anytime a trade comes in or an adjustment is made or a dividend, everything is updated automatically for investors. I think it's important to kind of understand what we do and what we don't do. So Sharesight's not a broker. We don't give advice. We don't provide any sort of recommendations or things like that. What we do is we help investors aggregate their data across different portfolios and asset classes. We then help them understand the performance of their investments. So we use an annualized money-weighted performance calculation methodology. And then we allow them to run tax reports as well. And I'll give you a quick look at those in just a second. We also believe in kind of a connected ecosystem of investor applications. And so we do a lot of work with online brokers. We have a great connection with Xero, where we send in the trades and dividends into Xero for the accountant to make use of that tax time. And so we really believe in this kind of connected system of applications to service self-directed investors. So what you're looking at here is just a sample portfolio that I have. You're looking at a performance chart since my first purchase back in 2013 in this case. And in this case, you can see I've also activated the benchmarking feature. And so this is kind of a combined look at multiple portfolios that I maintain, both locally in Australia and overseas in the US. And I've chosen in this case to benchmark myself against an ETF that tracks the S&P 500. So you can see my portfolio's performance there in orange, and the blue is the benchmark. And so what we do, I think, a very nice job of is we actually decompose the return profile for investors. And so we'll show you your capital gain, both in a percentage and a dollar terms on a per annum basis. We'll show you the impact of dividends. So you can see in this case that I'm not too much of a dividend investor, which is why they've only contributed 3.7% to this portfolio's return. We'll show you the impact of currency as well. So Sharesight, very importantly, is multi-market, multi-currency, multi-asset class. And so we can track local shares, overseas shares, managed funds, custom investments, any currency, cryptocurrencies, and we'll combine all that back into the base currency of the portfolio you choose it. So you can see in this case that I have a bit of a bump from US dollar movement against the Aussie dollar. And you can see my total return then is comprised of those three components, which is 65% per annum return compared in this case to the benchmark of 39% per annum. Moving down the page, you can see the constituents inside the portfolio. So you can see here again, we're we're looking at shares from local markets and overseas markets. And then finally, we also help investors keep tabs on their cash accounts as well. And you can see in this case, I have a cash reserve account that I use for funding trades, receiving dividends, and also as perhaps a defensive play if that's my particular asset allocation as well. So if I just jump into one of these holdings specifically, you can see here, we'll just jump to our friends at Zero. You can see we have a very similar, I suppose, look and feel for the underlying holding page as we do the portfolio. We show you the performance of the particular company, and then we'll show you all dividends and news as well. So if I just jump over to, say, a company that has paid some dividends, we'll grab Magellan. You can see the level of detail that we go into regarding dividends. And so all of this is automated. So we receive all this information from the ASX, which allows us to then accurately populate all of the components, most importantly, like franking credits for investors as well. And so the way Sharesight works is that basically we know when you buy and sell because of the connections we have with brokers, and then we automatically populate dividends and corporate actions as well. And just on those, the way we connect with brokers. So you can import your trading history from brokers. You can import spreadsheets into us as well. And then the most popular feature, though, is our contract note feature, which basically you can add Sharesight as a recipient of trade confirmations and contract notes, and then we'll update the portfolio for you in real time. That's all very, very easy to set up. Just moving quickly into the reports that we offer. So we kind of group our reports by performance and then by tax and compliance. And so there's some obvious ones up here like performance and contribution analysis, multi-currency as well. A new report that we just released on a multi-period report where you can kind of set up a multi-period analysis and comparative scenario with multiple time periods. And our tax and income reports as well, which are very useful at tax time. So all the reports are very, very flexible. So if I go into contribution analysis, for example, let's say that I want to, we'll just leave the date range here as the widest it can be. Let's just say that I don't want to group my investments, or I can use a custom grouping if I've defined my own asset class assumptions, for example. If we just don't group, we can get a nice view as to what has contributed or detracted from my portfolio. And you can see in this case straight away that my investment in Amazon has really carried this portfolio through and describes a lot of that 60+% return that we saw on the previous page. And so these are some of the analytics that we provide. And we do have plans to kind of keep building out our asset allocation capabilities, our risk capabilities, and we have a lot more sort of insight heavy reports coming down the track for investors. And then just on those tax reports too, might just show, we'll grab the unrealized capital gains tax report. And so we apply all the taxation rules and calculations based on the domicile of the portfolio. And so you can see in this case that we're just looking at some short-term capital gains in a US company called Workday, some unrealized long-term capital gains that are here as well. And if you're thinking about unrealized CGT, this is obviously a great way to understand what your tax exposures might be if you were to make some sell trades at this time. And likewise for the capital gains tax report, it's a similar report. It just shows you the impact of what's actually happened. On our capital gains reporting, we also allow you to change the sale allocation methods, which, as most of you would know, is a really effective way to minimize or optimize your tax position when it comes to filing time. So either at the portfolio level or at the underlying holding level, you can choose a FIFO, a LIFO methodology. You can maximize or minimize capital gains. And basically, this is kind of an automated new take on the old kind of parcel selection that you or your accountant might have done in a spreadsheet back when. A few other things just to kind of to highlight before I conclude. We do have an email alert feature where you can get price alerts and company event alerts, as well as portfolio summaries. I mentioned before our integration with Zero as well. That's all done right here from inside of our application. And then finally, our portfolio sharing feature is quite popular. Most of our customers will share access to their portfolio with their partner, their spouse, and certainly their accountant come tax time. And what we know from experience is that this will greatly reduce any kind of bookkeeping or data preparation fees when it comes to getting everything organized for tax, which we think will have a the impact of sort of helping you have forward-looking conversations with your tax professionals, as opposed to kind of backward-looking ones, just in the spirit of kind of getting your taxes prepared. So that is a very, very quick demonstration on the platform. I will conclude there. There's a lot more that it can do, certainly. But again, if you'd like to give it a try, please just go to sharesight.com or just Google Sharesight, and you can sign up and try it for free. From there, our pricing structure is flat. It's a subscription-based product. We do not care about the size of the portfolio or the complexity of the number of holdings. And I think you'll find that our pricing, if you think about, say, the pricing on an asset-based basis on a platform or a wrap, our pricing is extremely competitive in comparison. And so that's really what we tried to do. We tried to take out the professional performance and tax components from a wrap or a platform and provide them directly to investors. So with that, I'll say thank you very much and appreciate your time, and please give Sharesight a try.
Hi, I'm Wes Hall, CEO and founder of Tomorrow Super. For the past 25 years, I've learned from the best, leading large wealth management businesses across 4 continents. And I'm passionate about the intersection between digital and wealth management to drive better consumer outcomes. In this presentation, I'll provide a snapshot of the Tomorrow business model and also outline the tremendous opportunity resulting from the significant changes that are occurring in the financial advice and superannuation industry. Looking at the problem that we're trying to solve is that most Australians are disengaged with traditional super. And I think that's not because people don't care, it's just because traditional super is so confusing, opaque structures, and it's just too hard. So how we're solving this problem is that Tomorrow provide greater choice, transparency, and control to help Australians better connect and manage their super. And we do that through education. We do that through an understanding and appreciation of the underlying assets. You'd be well familiar with the rise of the self-directed investor. And certainly this is an undeniable trend, and it's something that is absolutely a strong proof point that people want to care more about their investment and have more of a say about where their money's invested. But sadly, this doesn't apply. It applies to investment vehicles, but it doesn't apply in the superannuation environment. We've learned from the evolution of platforms in the US, including Charles Schwab, which is designed for the consumer, but also enjoys mass financial advisor support. And you'll be familiar with the changes that are, the high level, the changes that are happening in financial advice. A lot of financial advisors leave the industry. But when we speak to financial advisors, what they're telling us is they want to have an alternate service model to complement their very best clients. And also you have their clients that are saying to them, I don't necessarily want to pay you for your advice every year. I want to pay it when I need it. So an episodic advice model, transactional advice model. And so whilst the platforms of today, like the Macquarie's, the Hubs, the NetWealth, the B2 Panoramas, do a good job of helping advisors service those clients that they see every year. The platforms today don't help the advisor to be able to provide an alternate service model. And that's where Tomorrow comes in. The Tomorrow Managed Account platform has a unique user experience and value chain participation. And so as a result, it delivers it's a high margin business, but at a very low cost to the consumer. We've designed a great user experience, and it's absolutely digital to its core. It's been likened to a neo-banking experience, and one where it doesn't require paper through the process, uses two-factor authentication to be able to help the user to be able to make decisions, to be able to work through the change they want to make to their portfolios. Importantly, it's a superannuation, pension, and non-superannuation platform. And for otherwise well-educated people who don't necessarily have a great level of financial literacy, we actually help guide them in selecting a portfolio that's suited to their individual risk profile and also an investment thematic that they care about. And so it might be an ESG portfolio, might be innovation, might be index portfolio. Within those portfolios, there's a blend of exchange-traded funds, managed funds, and direct shares. And for those people that really want to lean into their savings, they can also invest directly in Australian and US shares. So the platform offers many self-managed super fund attributes, but without the hassle and high costs. Tomorrow's target market is what we call the SMSF consideration set. So this tends to be more about stage rather than age, but to help you, it's typically people aged around 35 to 50 who are otherwise considering setting up a self-managed super fund. They tend to have a partner, their retirement savings are starting to grow to a meaningful amount. And so for a lot of those people, they kind of almost decide to get off the bus and they feel like existing industry funds or retail super doesn't do it for them. And so they choose to select it or set up a self-managed super fund. So that segment, unfortunately, finds that a self-managed super fund is not all it was cracked up to be. And so it's tends to be admin heavy and too much cost. And so that the serviceable attainable market just for that segment represents $3.9 billion per annum. And we will target that segment via a digital campaign, SEO and PR. And that provides a high ROI, return on investment, given the expected lifetime value of that customer. When you do a quick comparison of the new entrants in the space, Tomorrow is very different, both in the breadth of the offer in terms of the tax structures that we support, non-super, super and pension, but also the breadth of the underlying functionality, but also importantly, the low cost. So we're lowest cost amongst all those new entrants. Our go-to-market strategy is this, that we have already have 3,600 people on our pre-registration list, and they're expected to be early adopters. We'll have targeted digital marketing campaigns, and we've already established a contracted strategic relationship with the group Crescent Wealth to become the first white label of the Tomorrow platform. In addition, we have contracted third-party relationships that provide access to hundreds of thousands of potential clients and over 1,000 active financial advisors. The break-even of the Tomorrow business occurs at just 3,550 clients, so you can see that's well within our reach. How we make money is in three parts. There's on a $250,000 portfolio, there's a super fund charge, there's an account keeping fee and admin fee that represents 26 basis points. Depending on the complexity of the portfolio, the blended cost is at 47 basis points, and the transaction fees of 7 basis points. So all up 80 basis points, including any indirect costs from fund managers. And that represents to Tomorrow and its shareholders a gross margin of 59 basis points. So as you can see, it's a highly scalable and capital light business with an absolute aspiration to become a multi-billion-dollar business. And so with a 5-year view of our EBITDA forecast to be $35 million, and looking at a comparative valuation of other ASX-listed entities, that extrapolates out to a valuation of $1.6 billion. So you can see pretty exciting opportunity. We've got an experienced, resilient and stable team with combined 43 years of working together. And so why that's important is because we've got great diversity in the skill sets within the team, but also the fact that we've worked together before and we all get along means that when there's pivots or there's kind of challenging parts in our journey means that we've got a really solid base to be able to build from, to be able to address any challenges that might emerge. We're conducting a $5 million pre-IPO raise of $5 million. So the $5 million will give us sufficient working capital for the next 12 months, which includes a significant portion of sales and marketing effort to be able to tell our story and to be able to help get new clients onto the Tomorrow platform. In terms of future business milestones, we've recently completed a $1.2 million funding round, which included a strategic investor joining Tomorrow. We're now commencing a pre-IPO raise of $5 million, I mentioned. This is ahead of our expected super and pension product in market in December, with the non-super product in market in around June 2022. And sort of looking sort of further ahead, we're expecting a liquidity event, most likely in the form of an IPO in the second part of 2022. So with respect to investment highlights, the $3.3 trillion industry is absolutely ripe for disruption. Talk to your friends, your family, you'll know that they're otherwise dissatisfied with superannuation. We're the first fully digital consumer-led platform positioned for both the rise of self-directed investor and the new financial advice models. The platform's built and ready for launch. We've commenced implementation of our first B2B client. We have compelling commercials in place with key suppliers, Equity Trustees, FNZ, and Citi for global trading model. And importantly as well, the business is also eligible for the EC concessions, which for eligible investors means there's a 20% rebate on your investment and also CGT free on certain conditions. There's our disclaimer. And then finally, if you'd like to get involved, please check us out, our full data room in the Crisp data room, including full financial model. The platform is ready and able to be demonstrated. And if you have any questions, my details are at the bottom of that slide, and please email me. Thanks, everyone.
Hi everyone, my name is Paul Boyd-Skinner. I'm the founding managing director of NoBNK. We've developed a direct peer-to-peer commercial lending platform where the outcome is decided directly between the borrower and the investor via a blind auction process. It's a decentralized system where there's no managed fund, no pooled investment, and no bank involved in the outcome. The issue in lending and borrowing is that SMEs are finding it very difficult to be able to get money. And when they go to their bank and they can't get the money, they usually go and try to find an alternative solution. And a lot of them do not know where to go. So the idea is to get the message out there as quick as possible. On the flip side, investors are always looking for the next investment opportunity. Everyone has their shares, everyone has their property and other bits and pieces, but this is like a whole new investment class for them, which is a very safe class for them as well, with reasonable returns. And at the moment, with bank rates being down near zero and negative in different parts of the world, more than ever, investors are looking for that. We have 3 generations of savers that's been punished by the banks by giving them absolutely no return on them. So the NoBNK solution is our direct peer-to-peer lending platform and phone app. And as I stated earlier, the phone app's driven by a blind auction process. So you decide what sort of return you want. So it's the platform, and that is the first direct peer-to-peer funding solution of its kind in the commercial lending space. There are other peer-to-peer platforms, but they're usually pooled investment. It's a decentralized system that's not crypto. It's a decentralized system designed so the transaction takes place directly between the borrower and the lender. You guys make the rules, you make the terms and conditions, you make the decision between the two of you. No pooled investment, no managed funds, and no bank to decide the outcome. So the competitive edge is that banks are pulling back in the lending space. Their processes are very slow. There's still a lot of commercial lending that's still done through the banks, but the NoBank platform is the first of its kind to match the borrower and the lenders together. The transactions and costs are all included in the process, so there's no trip clauses and no nasty fees and charges that are unknown to the borrower. And all negotiations are taken directly between the two. And the other thing about it is it's fully automated. You don't need to worry about having to be an expert in property or in finance. All that is done for you. So our secret sauce behind this is we we like to deliver the trust, choices, security, and control. We give our trust away to banks, we give our trust away to governments, we give our trust away to all sorts of things. But what I say to people is that who do you trust more than anybody else to make the right finance decision for you? And the answer is you. So why are you giving that trust away? Let's put that trust back in your hands. You make the decisions. Your choices are your choices. You get to choose what sort of investments you want to be involved in, so what deals you want to do, and what sort of returns you want. The other fantastic thing is the security ends up in your name. You physically become the bank on this deal. So you become the mortgagee on the property, on the loan. And you keep complete control of your money. So you don't give us your money stays in your bank under your control. With managed funds and other places, you give them control of your money, not in this system, it stays in your control. You only move that money when you win the deal and we've done all the due diligence and the deal goes through to settlement. You move that money to your lawyer's trust account, the person that you trust as well as yourself. And the great thing about this is the whole thing is automated. There's no work to be done by you. So the case study, we've had over 225 transactions and settled well over 200 million worth of capital. And the great thing is that 100% of that capital has been repaid and there has been no foreclosures in 15 years. Why now and why can we win? The NoBNK platform app is the first funding solution of its kind. As I said earlier on, it's innovative and decentralized peer-to-peer solution. You hear the word decentralized thrown around a lot lately, but this is basically using the system to beat the system. We're not trying to change the whole system with a new crypto. All those are great, but what we're doing here is using the system. The banks have made it loud and clear they do not want you to save because they're not paying you to save anymore. Both parties choose their target rate, so the borrower will choose how much they're willing to pay, and the investor obviously chooses how much they want. Clear security of asset and control of investment. The interest payments are paid monthly in advance. I can't stress that enough. You're paid monthly returns in advance. I'm not sure how many other investments there are that do that. And it's a B2B solution where borrowers are currently excluded in that process. So our key milestones is we want to launch a platform within the first 3 months. The app is all finished now, so we are ready to launch this platform. Australian focus, the Australian market is the initial focus for the first 12 months. We want to dominate this market before we start moving to the others. We want to onboard 90 investors and complete 50 transactions within the first 6 months, which is really achievable. Roll out 2 additional products. So there's many more products to come onto this platform. So we want to roll out another 2 products in 6 months' time, which gives you more choices. And then we're looking at global expansion within the next 24 months via licensing agreements. So the revenue model is that the investor lends their funds through the app. So that's really as much as the investor does, and then the rest of the work is done via NoBNK. So we do all the processing, all the bits and pieces in the background behind the scenes, and our fee for that is 2% plus GST of the settled loan funds, which is included in the loan amount. So that does not come out of anybody's pocket other than the borrower. And the borrower pays back principal and interest. So they pay interest only over the term of the loan, and then they pay the principal back at the end of the term. Some of these loans, most of these loans usually only go for 6 to 12 months. Some go as long as 2 years. So there's strong financial potential for this system. We're looking at 4.5 million in fees settled in the first year based on that 2% ex-GST, and up to 12 million in the second year. That can go beyond that. It just obviously depends on how busy it gets. And the other part about it is we have a broker platform that attaches to this that does all the other types of business finance, which is also more revenue that gets added on top of this. So the experienced team is myself. I've been involved in the finance industry for 18 years. I've only done non-bank business and commercial finance. I've never ever put anybody with a bank deal. I'm highly respected, and I have a genuine passion to change this finance system so that it's fair for everybody. Hector, his background is he's a very good technology officer. He's tested tech for routers and others. So you can look up Hector's experience. He's very experienced. And Fastlane Solutions are my tech partners. So they're the ones that's built the the app and the back-end platform, and building the future platform as well. So I'm very pleased to have them on board, and anybody that needs any tech solutions should have a chat to those guys. So the funding program that we're looking at is we're looking to raise initial funds via a convertible note, $500,000 to $1 million, and we're willing to pay a 10% coupon on that up to 2 years. We'd like you to stay in there for 12 months. We'll pay that coupon monthly. And we'd like you to stay in there for 12 months. And at the end of 12 months, you can exit if you want, get all your money back, or convert that to equity at valuation at that time. So it's a really good opportunity for investors. And the funds will be used to build, 40% of the funds will be used to build the next stage of the software. We want to employ 3 BDMs to bring in a stack of business. So that'll be around about 20% of the funds. And we're going to do an extensive marketing campaign. So some of the highlights: 15 years, no loss of investor capital under our manual system. It's the tipping point to disrupt this industry, this part of the finance sector. Everybody goes after the consumer sector, so we're going after commercial. And we're the first mover with this type of fintech platform. We're also seeking to invite investors interested in registering for free on the platform to start bidding on the loans as they come in, where you physically become the bank. Please feel free to reach out to me directly via my email or go through the Wholesale investor platform, where we've got a whole deal room there with frequently asked questions. So yeah, if you have any questions, please feel free to get in touch. Thank you so much.
Welcome to the NZ Fintech Investment Presentation. I'm the founder and CEO, Edward Ricard. Thank you for your time today. Here at NZ Fintech, we leverage design, innovation, and technology to disrupt the traditional approach to consumer finance, a market worth $6.2 billion in New Zealand. NZ Fintech is an award-winning financial leader driven by an underlying vision to provide everyday Kiwis with easy access to digital financial solutions. We launched our market-leading brand Moolah in 2013, and since then we've processed over 400,000 loans and are now expanding into secured vehicle finance with our new brand Zuma. The problem is there are almost 5 million Kiwis in New Zealand and 4 million cars. Finance models have not progressed. Lenders are unknown, they provide poor access and lack transparency. They still misunderstand how to price risk, often relying on credit checks. They offer a quasi-online process, 48-hour turnarounds are normal, but the worst part is pricing is often driven by the dealers. Here at NZ Fintech, we have invested substantially to create brands that differentiate from traditional lenders whilst connecting with a range of core audiences. Zuma is next-gen car finance, designed to be a one-stop shop for car dealers, brokers, and the public direct. We offer a 100% frictionless digital experience and use proprietary algorithms to credit score customers into one of 6 risk tiers. As you would expect, we offer pre-approvals in 5 minutes and same-day settlements. It's all really simple. What's our secret weapon? We're a design-led, marketing-driven fintech. We design our own software. It's built in-house, it's scalable, it's cloud-based. We produce it, we own it, it's our IP. We have an expert team of 45 staff with proven credentials across technology, marketing, compliance, and finance. We have dynamic brands positioned around speed and simplicity. We understand our customers and we create targeted dynamic brand portfolios like Moolah and Zuma, and soon to be launched Cred. Our company has a very simple vision to provide everyday Kiwis with easy access to digital financial solutions. So it's our job to break down the barriers and make the process as frictionless and transparent as possible. It's our mission to be the top-of-mind digital lender in every market we enter. And we will do this using our deep understanding of how lending, technology, and marketing need to interact with one another to create a top-of-mind brand and finance product. I've been in the game for over 10 years now and co-founded New Zealand's first digital lender back in 2008. Around 2011, I started work on the design and development of what would become the NZ Fintech software platform. The platform has now processed over 400,000 loans and won numerous Deloitte Fast 50 awards for technology and growth along the way. We have been fortunate to be funded by a group of high net worth individuals throughout New Zealand and Australia via debt and convertible notes. Having proven the concept and gained scale in 2019, we brought on board institutional investor from Silicon Valley Partners for Growth, and we are looking forward to welcoming Australian investor Halcyon very soon. Zuma has now completed its pre-launch testing and settled around 500 loans and is due to launch at the completion of this capital raise. We also have expressions of interest for the next tranche of funding from large institutions to the tune of $150 to $200 million. The group are targeting a lending book of $500 million within 4 years. This is achieved through providing a one-stop shop for car dealers, brokers, and the public direct. Achieving this target will see us hold around 10% of the market share in the vehicle finance market. We're currently raising $5 million in growth capital in the form of convertible notes or fixed-term debt. We're offering attractive yields of 12 to 15% paid monthly or capitalized over terms of 3 to 5 years. Your investment will be secured by an existing joint first ranking general security agreement. The additional $5 million of growth capital will go towards expanded personal lending and auto finance books, supported by our institutional funding lines. This includes funding of loan originations, working capital requirements, fit out of additional office space, and brand expansion. We have an experienced and long-standing executive team with proven credentials across technology, marketing, compliance, and finance. Supporting the executive is additional oversight provided by an independent chairman with extensive governance experience and an advisory board experienced in creating high-growth fintechs. And to recap on the investment highlights today, we're offering attractive fixed secured yields of 12 to 15%. We're an award-winning financial leader. We have an experienced team across technology, marketing, compliance, and finance. We build disruptive fintech. We design it, we produce it, we own it. We create dynamic brands positioned around speed and simplicity in a growing $6.2 billion market. Thank you for your time today. And if you have any further interest, you can take a look at our website at nzfintech.co.nz or go to the wholesaleinvestor.com.au site. Thank you.
Good afternoon, everyone. My name is Jerry Kominos. I'm the CEO of Hydracell International. It's a pleasure to present to you this afternoon. In terms of who we are the world's preeminent developer, innovator, and provider of mag air technology. And I'll provide you with an overview of what that actually entails from a technology perspective. We believe we're about to release a clean tech revolution on the earth, which will materially help the people and the earth to become more sustainable. From an investment highlight perspective, this presentation will deal with many of these aspects. So the problem, we all know that traditional alkaline batteries contain poisonous and toxic chemicals. We also know that 15 billion batteries get manufactured every year. We also know that the recycling of batteries is relatively insignificant in terms of that number. So depending on where you are in the world, anywhere between 0 and 20% of batteries gets recycled. So that's a whole lot of batteries that end up in landfill. We know that the toxic nature of those landfills is obviously not environmentally friendly. We know we have safety concerns about batteries in terms of them leaching those toxic chemicals, whether that's in the application, in landfill, or when someone is touching them. And we know, from a child perspective, that swallowing batteries is a particular issue. Traditional batteries suffer from poor performance, which is twofold. Number one, in terms of their ability to retain their power in the shelf when they're not used, and then they also have a relatively low cycle life when used. And in the developing world, we also know that there'd be anywhere between 850 and 1.3 billion people that use carbon-based alternatives as power sources for their lighting needs. So the solution, we've created a Hydracell battery fuel cell. So just think of a normal battery, a C cell, D cell, which goes into a torch. We've created a battery which is environmentally friendly and is activated in water. Obviously the solution is the exact opposite of the issues or the problem that the world faces. So as we said, our battery is clean and green. It doesn't contain any of the toxic chemicals and poisons. It is a much safer alternative in terms of the given the fact that it doesn't contain any of those toxins and poisons. We have a much higher performing battery, particularly around longevity of shelf life and then extended usage time. And given all those factors, we believe that with scale and as we build this business, we can provide the developing world with a very positive solution. The technology, really just think of a battery. It really is as easy as rip open the fuel cell, dip it in any kind of water, and then put it into the application, and it creates electricity and it creates light. Key advantages, we've spoken quite a bit about the environmental friendly aspect of it, and that's in terms of our mission is probably one of the most important aspects. But from a consumer perspective, it has infinite shelf life until activated. So the cell retains 100% of its power until such time as it's dipped in water, and then it has extended usage time. So as you can see on the right-hand side there, we have two form factors. One of them provides 70 hours of continuous use and the other 200 hours of continuous use, which is the equivalent of anywhere between 8 and 30 batteries. So the impact is significant. As you can see, our cell is completely recyclable, and as we continue to innovate the cell, it'll move to become completely biodegradable. I won't spend too much time on this slide. Suffice to just show the difference between a normal battery that loses power as soon as it's manufactured and within a couple of years is down to 25% of its power and effectively will provide very, very limited or unuseful power output, whereas the Hydracell has it retains 100% of its power until such time as it is activated in water. As you can see on the right-hand side, we have a recyclable plastic casing around the outside. We will be moving that to a bamboo composite, which then makes the whole cell biodegradable. From a competitive advantage perspective, as we illustrate on the slide, and as I've shown earlier, we have extended performance over carbon-based alternatives. So we've developed a range of products to get the technology out there. These are our own proprietary torches and that use our own proprietary Hydracells. From a commercialization perspective, we have significant interest from all the people that are on this, or all the organizations that are shown on the slide. We have a very comprehensive strategy around the Australian and US retailers, and we have a strategy around Japan and Germany, and the global NGOs. From a competition perspective, consumers obviously have a lot of alternatives. So, they can go and buy batteries at the moment. They can, in the developing world, as we've spoken about, they have other carbon-based alternatives to choose from. And over time, other clean tech alternatives are coming to the market. But we don't know of any direct competitor in the primary battery sector. From an addressable market perspective, as we commercialize our proprietary Hydracells, we're playing in the global torch market, which is worth about $8.2 billion every year. And as we develop our battery substitutes, we believe we can move into a market which is closer to $30 billion per year. Our roadmap is well defined, and we're well on our way, and we've got working prototypes of the cells that you see on the right-hand side, the battery substitutes. We're in the exact form factors of a C cell and a 6-volt battery, which means that those cells could be used in any torch or any lantern or any application that uses those kind of batteries. Primarily for the moment, we're commercializing our proprietary Hydracells and torch range. From a financial forecast perspective, we have a significant growth profile, which we're very confident we can deliver. The revenue of $6.7 million in FY22 is effectively in production at the moment. So we've got 3 production tranches going through our factories for delivery in September, November, and January of 2022. And when we sell those into the retail networks where we're getting soft commitments and growing commitments from other retailers, we believe we'll deliver that revenue. And our loss-making position for the first year and a half is a function of the significant marketing spend that we believe this technology requires to really start delivering momentum so that we can hit the targets in the latter years. As we deliver the battery substitutes to the market, we believe that the growth profile around those particular batteries will increase significantly. From a personnel perspective, I've put a high-performing team around this business. I've been here for about 2 years. I was previously the CEO of a global software business for 4 or 5 years. In the time I was there, we doubled the size of that business and won 2 of the biggest hotel contracts in the world. Mark Dancy and Brian Dunster are original founders of this business. Mark is still responsible for our technology roadmap and the development of our technology. And Brian has spent the last, since the business was formed, developing relationships around the world and showing various interested parties the first and second generation of our technology. Tim and Chris are relatively new into the business. Tim, significant experience with McKinsey and other large corporates, and has also run and grown his own businesses. And Chris O'Neill comes as a commercial director with significant experience in some of the key markets we're pushing into at the moment: hardware, toys, not necessarily liquor. Chris really is the focal point from a business development perspective. And as we've illustrated earlier, we're starting to deliver significant relationships to the business and revenue opportunities. We've got a fully formed board. Michael Beer and Peter Buttigieg, Australian, Mark Hamilton, John Lee overseas, Mark in the UK and John in Asia, and they are both instrumental in opening up opportunities for us. Investment opportunity, we're looking to raise $5 million through a safe note. The parameters around the safe note are pretty standard. Importantly, our major funder has committed $1 million to that safe note already, in support of the management team and the business, the technology, and where we believe we can take this business. From a use of funds perspective, it's all forward-looking funds. So it's all about production, sales, and marketing. As we said, at the moment, we've got a significant number of production runs happening, which will deliver sales, which will then deliver margin, which will allow us to market the business and therefore flow back into production and allow us to scale the business. So the more we can get into production, the more we can deliver, and the quicker we can deliver profitability and revenue and value realization events for our shareholders. So thank you for your time. I hope that this presentation has given you a quick overview of the technology and the issues that the world faces, and the fact that Hydracell is the solution.
Hi, my name is Dean Gillespie and I'm the CEO of IBA Group. We're creating the first Islamic bank in Australia to service the 3% of Muslim Aussies that identify of the Islamic faith. The best guide to the size of the market and the number of Muslim Aussies is the Australian census. And if we go back and look over the last 15 years, you can see that the number of Muslim Aussies is significantly increasing every time the census happens. The next census results that we have just completed are expected in June next year, and we're expecting it to show that 3% of Muslim Australians now identify of that faith. But there's a problem. There's currently no Islamic banking products in Australia. Unlike places like the UK, where there are 7 or 8 different Islamic banks already, there's none in Australia at the moment. So we're going to be creating differentiated banking products for the first time in Australia that are aligned to their faith and will allow them to do their banking without being concerned about their moral repercussions. We've worked really closely with KPMG and Dentons, our lawyers and our tax advisors, to ensure that all of the products that we're bringing to market are completely compliant. And that will mean that we can launch into the market and we can assure Muslim Aussies that the banking products they're taking out are indeed in line with their faith. So once we move from being IBA over the next few months, we'll become Islamic Bank Australia. We've done a massive amount of work with APRA, the prudential regulator, over the last 12 to 18 months in finalising our application. And in fact, we've sent them more than 1,000 individual pages of documents, about 80 different documents that they've asked us to provide, everything from whistleblower policies to financial forecasts to liquidity risk policies. An enormous amount of work has gone into getting to this point. People think it's easy to start a bank, but it's actually quite challenging. But we're right at that point now where, based on the feedback we have from APRA, it's very likely we'll get our first licence from them over the next 4 to 6 weeks. So what are we building? Well, actually, we're building a bank that you can bank with no matter where you are in Australia. So Muslims tend to be sort of concentrated in Sydney and Melbourne, but in actual fact, they're all over Australia. They're in Brisbane, they're in Adelaide, they're in Perth, they're in places like Darwin. And so what we're building from a technology perspective is the ability for someone to download the app, for them to instantly identify themselves through the app, and for them to open their transaction account, and they'll get a virtual debit card, which they can use straight away with Google Pay or Apple Pay, and they'll be able to do that no matter where they are anywhere in Australia. We do already have a customer help centre, which is set up in Auburn, and as you can see, if you look at the map of the concentration of sort of Muslim Australians in Sydney, heavily concentrated around that part of Sydney. So we've decided to put our customer help centre there, and that already is operational in our Auburn space. In terms of what we're actually going to launch to market initially, we're being razor sharp with our focus. So we'll have a transaction account so that Muslim Aussies will be able to do their everyday banking, things like BPay or going to the shop to buy things. We'll also offer Sharia compliant savings products where we actually pay profit share instead of interest, and home finance. So they'll be able to buy properties all over Australia in a Sharia compliant way, and again, continue banking in line with their faith. After a year or two, we're going to go into small business and we're going to go into commercial property. So indeed, we'll be bringing business banking services to the Muslim community around Australia as well. And we're well advanced on our journey. So we've actually got more than 5,000 people that have already signed up onto our customer waiting list. And we've got a financial model that's been signed off by PricewaterhouseCoopers. We've selected our core banking and our payments partners. We're using the same vendors that 86400 are using from that perspective. And what that means is that as we build out our executive team and the whole staff across the business, it means that we've got a really great foundation to really launch in 2022 with some test customers. And we're being noticed. So we've already done some promotional work in the Muslim community. In fact, you can see our TVC that we run on YouTube on that slide. But you can also see Muslim press, like the Australian Muslim Times, is very interested in what we're doing. And of course, we run advertising from time to time on places like SBS Arabic as well to really promote what we're doing to the Muslim community. But interestingly, there's a lot of broader interest coming through in terms of the launch of ethical Islamic products in the market as well. So the ABC, for example, interviewed me only a couple of weeks ago on the business, talking through what the opportunity is in Australia, a market that's supposed to be somewhere around $250 billion in terms of the Islamic finance market in Australia. And the Sydney Morning Herald as well has noted the work that we're doing. So there's a lot of interest from the broader community around the fact that we will be offering ethical, different banking products for the first time. It'll be the first time in about 100 years where a traditional bank has not offered conventional banking products. And that makes it really exciting, not only for Muslim Aussies, but for anyone around Australia that can choose to bank with us as well. So in terms of the journey to here, we raised about $10 million from a company called Enegra about 18 months ago. That gave us the impetus to sort of get started in earnest, and we had our first board meeting. But more recently, we've had a lot of interest from offshore. And in fact, we've got a letter of intent from the Islamic Development Bank, which is a AAA rated international bank. It's composed of 57 member states, and they've expressed interest in putting $10 million into our business. And of course, the next big step on our journey, which we're hoping to happen over the next 4 to 6 weeks, is actually getting the first banking license from APRA, at which point we'll move from being IBA to Islamic Bank Australia. As I mentioned earlier, we wanted to build the bank in a really robust way. So we've worked closely with PricewaterhouseCoopers to build the financial model, and that underpins all of the financials. And you'll be able to find them in the crisp dealing room, as well as the due diligence report that PwC completed for us. So please feel free to have a look at that. And of course, one of the things that's very important whenever you put together a business venture is the team. And what I would say is you're getting people that have done this before. So Anthony Wemstecker is our chair. Anthony was the CEO that started ME Bank about 20 years ago, one of the last big retail banks in Australia. In terms of my background as CEO, I previously ran home loan distribution for the Commonwealth Bank, so the largest home loan business at the largest Australian bank, and took them to record levels of home finance. So I think between Anthony and I and the fantastic executive team that are already in place in the business, from a diverse set of backgrounds, including Islamic banking, we've got the people on the ground that can really make sure that we deliver this project. So what are we looking for? Well, we're seeking $10 million today really to power our growth. And for that $10 million, we're offering 16.7 million shares, which is about 18.1% of the company. And we'll be doing that at a share price of 60 cents. Why do we think that's justified? Well, we think this is just a huge opportunity, and it's a once in a lifetime opportunity. It's pretty rare that you get a really simple business opportunity that comes across, and 3% of the population with no bank that supports their needs is a really clear business case. And as you can see on the right there, it almost ticks every strategic McKinsey, BCG sort of box that you would expect. Strongly growing market, no competition in the banking space, high barriers to entry because it's really hard to get a banking license, but we are almost there because we've done all of the work over the last year or two. And then an easily replicable business model. Once we build our tech stack up, there's nothing to stop us going into places like New Zealand, places like Canada, even expanding into other markets offshore. So we think it's a fantastic opportunity. We'd love to have you on board. Of course, all of the information is in our crisp deal room. We are IBA over the next couple of months. We're hoping to transition to being Islamic Bank Australia. But of course, if you've got any questions about our opportunity, feel free to give me a ring. I'm happy to take your call, or otherwise drop us through a note. And we'd love you to be part of our journey as we transition to being Islamic Bank Australia over the next couple of months.
The venture capital market is notorious for its illiquidity. Unlike that of public markets, investors don't have that power to buy and sell with speed and transparency. As an investor with existing equity in a company, this means 1, it's harder to restructure and rebalance your portfolio as you would in public markets, and 2, it's near impossible to liquidate equity ahead of the business's intended exit. Essentially, your cash is stuck in stocks. On the other side of the coin, there are investors who are looking to enter later stage opportunities. However, those opportunities have already closed their doors to funding rounds, and if they do reopen, they're usually reserved for venture capital firms, existing investors, or private equity firms. This means there is a high and expensive barrier to entry. So, with both these problems in mind, we have worked to launch the WY Capital's secondaries platform, utilizing our network of 30,000 plus high net worth and sophisticated investors and combining that with the crisp software, an underlying technology that helps streamline and facilitate these transactions. And it's already working. We are open for business and our clients are well underway in establishing their own secondaries markets. So, if you're looking for options to sell existing equity in a company, or you want to see our most recent catalog of secondary investment opportunities, feel free to contact us via the email on screen or reach out to us via the Brella booth for the remainder of the VNC conference.
Hello, good morning, dear friends. It's my pleasure to welcome all the participants today for the panel session opportunities and challenges in CTO, NFT, and DeFi. I welcome all the eminent speakers and guests from all over the world to share the knowledge and vast experience with the professional community. Today we will discuss what are the most interesting ways of decentralized finance being applied, what are the biggest opportunities, and what sectors do you think should consider implementing NFTs? What challenges do NFT face, and what are the prospects for DAO funds? How are DAO funds formed? Professionals invited on the conference will reply this once and the other questions. Now I'll ask the speakers to introduce themselves. Let's start with Felix Mago.
Hi everyone.
Hello, Felix.
Felix, pleasure. Thank you for inviting me. Great to be here with you all. My name is Felix. I'm from Dash, specifically Dash Next. As you might know, Dash is a completely decentralized network. So we are all around decentralized teams pitching into a DAO. That all sounds very abstract, I know. So let me try to break it down very simply. What we do, we're a payment-focused cryptocurrency that is built in a very unique way with all these teams all around the world. I think we're number one when it comes to cryptocurrency payments. By now, we started in 2014. So we're kind of an OG in the crypto space. And I'm very happy to see crypto adoption, coming to reality now in 2021. We have just onboarded another 155,000 merchants in the US with our new app called Dash Direct. I suggest everyone to check that out. And yeah, happy to discuss, to help people to understand why this is so exciting. And yeah, happy to discuss with you guys.
Thank you, Felix. The next speaker is Lee Tang. Hello, Lee. Could you introduce yourself?
Hi, Marina. Thanks for inviting me, and very happy to be part of the panel. I guess my background is in technology. I worked in telecom industry for about 10 years. Then I went into research, academic research, and as part of that, I looked into using blockchain and blockchain technology in general. Got really interested in 2017, although I started looking at it since 2014, because a lot of my other PhD students and professors getting started leaving the university and joining startups at the time. So I was like, wow, this is something's happening here, even though I don't know about the investment part of it. Now what I'm currently doing is really investing more, looking at it from an investment perspective. I manage my own family office fund, and I do advise certain high net worth and private companies in terms of how to manage their crypto, and also look at how to invest into cryptocurrency. It's relatively new especially for family offices. So mainly from a technical perspective, but also looking at the broader market and giving them some analysis and see my point of view of how that goes. In terms of the why I joined this panel, I think it's very, very interesting, the NFT space, especially also STO. These are the kind of companies that I'm looking to invest in. In fact, I recently invested in an NFT company, Sport Moment. They're looking at bringing NFTs to sporting codes in Australia. And it's just so exciting in terms of what they're working on, and where they're going in this whole space. So very, very excited and happy to share my experiences in terms of securing wallets and those kind of things. Thanks.
Okay, thank you. And the next speaker is John Basilios. Hi, John.
Hi, Marina. Thanks for having me. Yeah, John Basilios. I'm a partner at Hall & Wilcox Lawyers, and I sit primarily in the financial services team, but I do a lot of corporate commercial work. My day-to-day practice is primarily financial services, funds management, AFSLs, but I've also developed a bit of a niche in the crypto space, having advised people how to set up cryptocurrency funds, crypto exchanges, and providing advice on token sales. I'm also a director of Blockchain Australia, which is the peak industry body for blockchain and crypto in Australia.
Let's introduce Beck Jones. Hi, Beck. Could you introduce yourself?
Hi, Marina. Yes, of course. Thanks so much for having me. My name is Beck Jones. I'm the co-founder of Clutch, which is an early stage startup that is focused on building a crypto wallet for women. My background is in finance, in banking, and in marketing. I've spent the last 2 years as a CMO for 2 different crypto projects. The first one was a social media app called Vid, which paid its users basically who were using like a social media app, creating videos, sharing with the community in their native currency in crypto. And I've since, in the last year, started working for a DeFi project, which is actually an anonymous one. So I won't share that one with you, but being a CMO in both those spaces, and now starting to look to go out on my own and build my own company, which is trying to bring women into the future of finance, specifically focusing on education and really getting women invested into crypto.
Okay, thank you for the introduction. So, dear colleagues, let's start panel session. The first question I'll ask to Felix Mago, and the question is, what do you think needs to happen to drive usage and adoption of NFT and DeFi tools? How long will it take for this happen in your opinion?
Thank you. It's a fantastic and a very, very frequent question that I'm getting like all the time, because DeFi and all this crazy blockchain stuff seems to be very far away for most people. One tip I always give is just sit down and try it for 2 hours. Make yourself a little challenge. For example, have the challenge to get your first crypto on a crypto wallet, make a first transfer, buy, go to a DEX, install MetaMask. These are small challenges, and I promise you, if you take 2 to 3 hours on YouTube, you will master any of those. In terms of how long it will take, I think we're on a good way. That's the good news. I just said we connected 155,000 merchants with Dash, so you can, if you look at the global map where crypto is accepted as a payment, it's growing and it's all over the world. The downside is it's a bit, 2010 to talk about crypto payments, and now we are here in 2021, and now we finally have big news that now the corporations are coming in, which honestly, if you work in blockchain and if you work in DeFi, it's a very boring news, right? It's like, oh my God, it's like finally these guys are making it in 2021 to accept Bitcoin for a Tesla. And okay, it's like, it's super exciting, but at the same time, super unexciting, because the truth is we are right now already building the next financial infrastructure to, to get rid of NASDAQ and Wall Street. And we can already do it, without having any banks, without having anything in the middle. So long story short, I think there is no way that, that we are not coming to mass adoption at one point. When is even a bit, is it so relevant when it's going to happen? For me, it's a bit like the internet. We had 20 years before the internet, we had forums, we had games, and then suddenly email and AOL made it all go viral. We will have this point at one time in blockchain. When this will be, I don't know. What will be the catalyst? I don't know. But I feel all the payment options, the yield options, financial freedom, and now just recently we see all these NFT play to earn games exploding, where suddenly, like billions of people potentially can get a job by just creating an own job, by just playing a game, essentially, is creating a lot more opportunities for everyone. So I don't worry when it will happen. I think we're on a good and fast way. If you look at numbers, how much money is coming in, how many users are coming in, I don't worry at all that we are already taking off.
Good. And Lee, what do you think about the mass adoption of crypto and NFTs? What's your opinion?
Oh yeah, I think what Felix is saying was spot on in general. I think in 2007, just thinking back, there's a lot of the rails in terms of on-ramp, off-ramps, a lot of the, like, for example, payment options weren't that available, I would say. You can still do it, but it wasn't as easy to use for consumer. But now all these rails are in place, and also the community has grown. So I think that we're on the precipice of mass adoption. I would say that DeFi, it would be, in terms of using it for swapping and finances, these play to earn Axie Infinity type projects is very, very interesting. I think that just the fact that it actually has a use case for people is very, very exciting. That it hasn't really shown to be that in 2017, 2014, but now I think there's a lot more mass awareness of this, especially when in terms of the NFT for sporting codes that I mentioned, Sport Moment. I think a lot of people have heard of NBA Top Shots, and that's one use case. But what I've seen with startups and what they're working on now, in terms of how to monetize brands and monetizing, sporting fan interactions with via NFTs, is very, very exciting. So all of this is very positive from my perspective, and I think there's a lot of investment opportunities in those spaces.
Good, but how you should hold and safeguard your crypto assets from the loss? Okay,
yeah, so I think that's a very big topic. My research is in human interactions in my PhD, and the problem is that everybody have different levels of knowledge and technical expertise, and so if I'm talking to a big audience, I suppose. I think that in general, you are much more likely to lose the passwords and your private keys for most people. So I would suggest, in terms of if you're talking about safeguarding your crypto asset, especially if it's a percentage of your wealth, I would say that you use a custodian. I use a company called ZeroCap. They're Australian-based. I like to support Australian companies. They're Australian-based, very secure, has actually one of the only companies that have insurance on crypto assets. So if you have a sizable portion of your wealth in cryptocurrency, I would say do that. Obviously, play around with self-custody, understanding the processes, and only do so with when you're very confident at storing and holding your own cryptocurrency. So I understand that there could be concerns with trusting, centralized exchanges, trusting a third party with, your crypto assets. And I think a lot of people in the crypto community are kind of like that, very libertarian type thing. But I would say in general, unless you're very, very confident, you're much more likely to lose your access. Imagine, and a lot of people don't really, generally the crypto investors are quite young and they don't really think about estate planning. So what if something happens to you, and how would your loved ones and your family actually get access to potentially a large amount of crypto asset? So I would say that, do your research, don't think that you can handle all these yourself until you're very confident and practice at it. As Felix was saying before, you can learn how to do all this with a few YouTube videos, but to be systematic and secure with handling your own large amount of assets, that it's better that you use a professional first until you become very confident. And it's very interesting, actually. Your later when Rebecca, there would be a question for Rebecca in terms of in the third world, or in a lot of situations for women, having custody is actually, or handling your own cryptocurrency is actually could be an issue. So that would be a very interesting question for her, because like how there are some situations where it is different between men and women in terms of how they need to secure their assets, their crypto assets. So that would be an interesting thing to talk about. And NFTs is essentially, technology-wise, it's very similar to securing any other crypto asset. It's essentially, most of them are Ethereum contracts. So that's why I don't separate them when I talk about NFTs and general crypto assets. Yeah, I hope that answers your question.
Okay, thank you. And now I would like to ask a question for Beck. Beck, you are a founder of Clutch. It's a crypto wallet built for women to invest in digital currencies. Clutch is a way to invest in digital currencies, yes. And what was been the most exciting thing or experience you have come across your journey? Have you seen an increase in interest in crypto and blockchain by females in the recent times?
Good questions. I think, look, we're early on in building this idea out, and especially in doing some research, and that's been the first kind of port of call that my co-founder and I have kind of looked into, which is getting as much data as possible into females, their current experience, how they're thinking about money, what kind of money they have put aside in terms of savings, how they're thinking about investing, and what their perception is around crypto, and kind of reasons as to why they may or may not have considered kind of investing in it. So for us, the research has been the kind of first port of call, and the data that's starting to come back in is very much leaning towards education being the prime kind of core reason as to why women haven't engaged into crypto yet. They just really feel like they don't understand it. There's a tidal wave of information to get across, and they don't know where to go to first. So for us, that's been a really interesting insight. And I guess in terms of thinking about a crypto wallet for women, what kind of features we're going to be launching with, is it going to be a transaction feature first? Is it going to be a learn and earn? Is it going to be some kind of community chat room? And I think, from what's coming in, we are leaning towards more of a learn and earn to kind of get that base education. And that's something that we're kind of building out already. We've started with a Facebook group, onboarding women into that Facebook group and starting to share resources and educational kind of modules from our website to start taking them through a kind of education series, which is tailored towards very kind of base level understanding of investing, of money, and of crypto. So that's probably been like the most insightful piece of research that we've found that we've done ourselves. But since I've kind of started looking into this idea more recently, there has been a study that came out in August by CBNC, and they surveyed in America around 5,000 Americans, and what they found was men were twice as likely to invest in cryptocurrencies. They found that the gender gap is actually bigger in crypto than it is in traditional finance. And they found that white women investing in crypto outweigh Black women that are investing in crypto by 15%. So there's definitely some kind of big disparities there. And for us, that kind of just reconfirms this is a real issue. This is something we're really passionate about, and we're really glad that we're kind of on the right track to addressing an issue, hopefully.
And one more question, what UI UX works is needed to make crypto products more user-friendly?
What UI UX? Yep.
Yes.
Yep. UI UX improvements. Oh, where do I start? This is a bit of a bugbear for me. And I think, you know, the crypto space has built really quickly, and we've had a strong kind of 10 or 12 years of growth, and possibly the design aspect and experience aspect for investors, users of products has been lagging a little bit. For a lot of people, they're coming to exchanges, they're coming to new products and getting really overwhelmed by the data and information. And I think thinking about going back to education and thinking about where people are coming from and how we can tailor product experiences towards the user, and understanding actually where they're at, and possibly creating unique experiences as they're coming onto platforms, whether it's through education or kind of understanding where they're at in their kind of education journey, so that when they're coming into products, it's not this kind of overwhelming tidal wave of information. I think simplicity as well. Like, for example, you land on a site like Binance, and there's just so much going on. So, you know, looking at products and how they can kind of simplify the user experience to kind of make it more straightforward for users.
Okay, thank you. And now I would like to ask a question for John Silius. John, what do you think about needs of education users for mass adoption of crypto? And could you tell us what are security tokens? Why do we need to speak more about security tokens, John?
Yeah, from a security token perspective, I think that's an important discussion to have, because the way I see it, I think that traditional securities are going to be the way of the future in terms of being blockchain-based and tokenized. So I think that's just the way of the future, and that all securities will be blockchain-based and tokenized. But a question arises in relation to any blockchain-based token as to whether or not it is a security. From a commercial perspective, a lot of people refer to payment tokens or utility tokens and assume that they are not securities. However, an analysis needs to be undertaken in relation to the actual features of each particular cryptocurrency or token or whatever you want to call it, to determine whether or not it actually meets the criteria of the security. And there are securities laws in all jurisdictions around the world, and there's no uniform definition. So it's something that you need to look at on a jurisdiction by jurisdiction basis. But a really good example of that is XRP. So XRP, I think, you know, the crypto market sees that as a payment token and not a security. But the regulator in the US is actually taking action at the moment, making a claim that it's a security. So it's not an area that is, I guess, black and white. And I think that the way that issue will be dealt with in the future going forward is to have crypto-specific laws in each jurisdiction which define what constitutes a non-security token as compared to a security token.
Okay, and how security tokens differ from utility tokens or normal currencies? Could you explain for our audience?
Yeah, sure. So as I said before, it really depends on the definition of what constitutes a security in a particular jurisdiction. What generally differentiates a security token from a utility token, and this is an obvious example, is where there are voting rights or a right to income that are generated by just virtually holding that token. But it's a bit more technical and complex than that, because for example, in Australia, we have the concept of managed investment schemes, and in other jurisdictions, they might be referred to as mutual funds or collective investment vehicles, whereby there isn't necessarily a criteria that you actually have a right to revenue or that you have a right to vote, and you can become a managed investment scheme and therefore regulated and need licensing. If you meet if you meet 3 different criteria in Australia, it might be different in other jurisdictions, but people pull money or money's worth in order to generate rights or benefits or interests in the scheme, and they have no day-to-day control over their contribution. That's a definition that's really easy to meet, so it's really difficult to get around the concept of what constitutes a managed investment scheme under Australian law, and I imagine similarly under other jurisdictions. And I think the way that that needs to be dealt with is that we introduce specific laws that define what constitutes what is commercially referred to as a utility token, so that the designers of tokens have that in mind.
Okay, good. And how do you see CTO involving in the near future?
Look, I just think that it's the way of the future with respect to all securities. So what we refer to as traditional securities these days, or it could be shares in any company or interests in a fund. I think it will all be tokenized and it'll all be on the blockchain going forward. And that's independent of the concept of, you know, when a utility token might otherwise be construed as being a security. I think we're going to see that all shares and all financial products in the future will be tokenized and on the blockchain.
Okay, thank you. And now it's time to speak about decentralized finances. I would like to ask the question for all the speakers. What are the most interesting ways of decentralized finance been applied?
Oh, look, I'm probably not the best person to answer that question, but I can see that decentralized finance certainly has a place in the future. And it's, I think it's catching on very slowly, but it is also a bit of a threat to existing centralized finance systems. One issue that we really need to contend with when we talk about decentralized finance is whether or not, notwithstanding that it is decentralized, is it otherwise still subject to existing financial services laws under the jurisdictions of each country. And I think it's an important question to be asked in the context of talking about DeFi, because a couple of years ago, the SEC took action against Ether Delta, which was claimed to be a decentralized exchange. But they went after the person who effectively set it up, saying that they were the mind and controlling mind and person behind it all. Even just last week also in the US, I think the regulators there came out and said that they are looking at investigating Uniswap and whether there are any breaches of securities laws in the operation of the Uniswap platform. So yeah, I might pass on to someone else who has something else to say about DeFi. Thanks.
Thank you. And Felix, do you agree with John? What do you think about decentralized finances and the sector of crypto business?
First of all, I think we are in a very fantastic panel here. John coming from a legal lawyer perspective, Rebecca being part of an anonymous team and we don't know what, and I don't even want to ask what it is, but it already shows where we at, right? And everybody has a fair perspective. If there is a right or wrong, I don't know. My perspective is definitely different than the perspective from a lawyer, I guess. I think the first part for DeFi to understand, and this is exactly the analogy for what I said before with the internet, right? We realized, cool, I can send an email back in what, 1996, 1998. And 10 years later, suddenly, you know, you can build like Facebook and then you can build Uber, and who would imagine that in 1998? So I promise you the same is going to happen with blockchain, because now we have a completely new way to build business models. So let me give you an example. The whole, you know, world economy is depending on trading stuff from A to B, be it Forex, be it stocks, be it derivatives, it doesn't matter. So, there's like huge markets for euro, dollar, for example, or, whatever. And all of these infrastructure so far is relying on intermediaries, right? So there's like a stream of value. If I trade US dollar versus euro, I pay a fee, and that fee goes usually to the exchange where I trade it on. The same happened in crypto. Now suddenly we can build financial products that don't need a bank, that don't need these intermediaries. So what is happening that we can take this money that I paid for a fee, and we can use it in a different way. What Uniswap has done and all the other DEXs are doing right now is that they're taking this fee and essentially redistributing it to the users, right? So it's not the exchange anymore that earns money from the fee, it's the users. And that incentivizes people because people are not stupid. They see that, they can see they earn money from other people trading, Ethereum versus Bitcoin on Uniswap, and they can make they can make an income out of it or a buck out of it. So this is why it's happening, this is why it's massive, and the same principle goes for a million things around DeFi, right? It's everything from taking a loan to buying an investment product to buying a futures option to whatever, right? So it's already happening, and it's already happening in a massive scale, even though it's completely unregulated, as John might critique. I said before, now regulators are talking about regulating payments and how to pay taxes on Bitcoin in the US. Like, yeah, okay, no, we are already trading derivatives from Facebook on on Mirror, for example. So there's a lot of things happening right now. Long story short, it's happening. I think it's not going away, and it's really about understanding these new business streams and these new business models that come with it. I have no doubt, that it will take off. And right now there is a million different, I would rather say niche, for people to go in on different blockchain with different products, but there's a growing community of people that make money and businesses that understand how to create something on it. And I think we are, on a long way still to go to understand what are the best practices in this business creation. And where I definitely agree with John is that regulation is good when it comes to user protection. And this is definitely something where we're very far away from right now. There's a lot of risk involved with everything. I mean, I'm super hyped about it and I'm super convinced it will stay. But as of now, there is high risk involved. Lee also said it great, right? Like use professional help to save your assets. But if you put your money in a DeFi smart contract, even professional help will not be able to help you, let's be honest. So, it would be good to have some regulations, but there's crazy topics. Another one, maybe last point I want to make is DAOs are taking off, and staying with the example of Uniswap. I mean, just look at what they did. They released the governance token, and they put aside some of this governance token to fund different projects. Right now, they have around, I think, $40 or $15 billion laying around, right? So just think about what they did. They created a token out of nowhere, essentially airdropped it to a lot of people, put aside 15 million, and now everybody in the world can apply for this money. So one group just came in and said, hey, how about we are paying some money to lawyers that now help us figure out how to write the laws for DAOs that currently don't exist, right? I mean, the question is how to regulate a machine in the internet that is unstoppable. And, it's a difficult question. So we are on the way, hopefully, to get it answered.
Okay, and let's speak about NFTs. Some of the businesses might be interested in NFTs, but they struggle to get the basics and where to start. What is the best approach to start investing in NFTs?
Yeah, so I think with NFT investing, so I'm looking at all these DeFi and crypto and NFTs from the perspective of an investor, rather than, let's say, a protocol builder or an institutional regulator. So from an investor perspective, I'll just go back to talk about a little bit about how I see the DeFi space, and then that'll tie into the NFT. In that, I think that it's massively bullish for regulators to actually look at regulating, because it does look like regulators, in 2014, 2017, there's just been regulators just shut things down, right? They're very negative because they're afraid of people getting hurt, getting wrecked, and now the industry is $3 trillion, $2-3 trillion. Regulators are coming on board, having a look, and I think that from an investor's perspective, this is what you want. You want people to know exactly what you're buying and what you're investing in, and you want the certainty of or clarity of what regulators and governments see as a asset or as a security token. So now coming back to the NFT space, this is a very I think from a getting started perspective, it's actually very easy, right? You go onto a website and you buy a digital art, or you buy the NBA Top Shot moment. Essentially, what you're buying is a signature of a video, and in many ways, it is very similar to buying, in my view, buying, let's say, collectibles like baseball cards, basketball cards in the past, except this is on the in digital on the blockchain, and there's a whole industry that has grown from this. Now, from an investor's perspective, we can talk about the utilities of it, but from the investing perspective, this is it is still very early, I would say. So I myself only dabbles. I just buy some just to play around with. I wouldn't invest a lot of money into it. Again, the reason is that I don't really know the regulatory perspective, from the regulatory perspective, how these are going to be treated. So, for example, art. Let's say if you collect fine art, in many cases that is not treated as a financial product or an investment. It's treated as personal property. Now, how is that? If you invested $1 million in an NFT, how is that going to be viewed? And if you traded that, or if you traded derivatives of that, what does that mean, right? So this is it's all very interesting from my perspective, from the investor perspective. But I would say that it's still very early. If you're if you're looking at NFTs as more of an investor rather than, let's say, someone who really likes the digital art or something like that. Yeah, so that's my view on it.
And how can you make money of NFTs? Could you share any cases?
Yeah, there has been. I mean, people make a lot of money from selling anything that other people value, right? So that's kind of if you're talking about making money, is you're buying something at a certain price and selling it at a higher price. So if you're talking about making money as an investor, which is this is how I would look at it. Now, if you're an artist, or if you are a musician, or some kind of creative person that actually creates this, or if you're a brand, let's say you are like MBA or certain things, what the NFT really does is it tokenizes your brand, or tokenizes the value of what you provide. So I think that will be different. That is how you will make money as an artist. But as an investor, is essentially, from my view, it would be like buying and selling any other asset, buying a piece of fine art and then holding it for a number of years or months and selling it on. That's how I see that from that perspective.
Marina, I can jump in there. Yes. I've actually got an example of a way that one of the projects I worked with used NFTs, and the investors in those NFTs had more of a recurring income from them. So while I was working for Vid, which was the social media app I mentioned before, the investors into Vid, they purchased the VI token. And after that token sale occurred, there was a second sale of NFTs, which were basically the hashtags that were used alongside of the video content that users would upload. So the way that it worked was any of the users on Vid would create a video for the day, and they could attach up to 3 hashtags alongside of their video. For each video, you would earn some kind of income from the daily distribution, and the hashtag owners, basically the hashtags were listed on OpenSea, and our investors were able to purchase those hashtags. And since then, whenever those hashtags are used, they get a small percentage of the token that's paid out to the user. So that's kind of like a unique example of that an NFT has been used in a crypto project that's been able to provide kind of recurring income for those investors.
Good. And I would like to ask a question. What challenges, in your opinion, do NFT face? Investing is a good opportunity, but what are the challenges?
Yeah, so actually, I would ask that question about that example that Rebecca just made, in terms to John, in terms of if I was to purchase that NFT and and I earn income from it, is that a security? How does John see?
It's a really good question, and I don't think that the law is settled on it. I think that NFTs where there is no income attaching to it and it's one person owns a particular picture or whatever it is that is the NFT, I don't think there are any regulatory implications there. Where you have regulatory implications are where there's a number of people that own a particular NFT. So then there's a collective ownership. So that potentially raises regulatory issues. And where there are royalties attaching to a token, again, that's where you have regulatory issues, and where you're at risk of it being a security. Now, that's kind of the theory, but at this stage, luckily, and maybe because it's only a new concept, I'm not aware of any of the regulators having taken any action in relation to NFTs at this particular point in time. But I would say it's watch this space with respect to NFTs that have royalties attached to them.
Yeah, also just on that, I remember CryptoPunk, the company that made CryptoPunk, they actually hired the talent agency to promote the NFTs, right? So that to me sounds like a collective investment action.
Well, but isn't it though that the person who buys a CryptoPunk, they own, like it's one person that owns the particular token, as opposed to a collective of people owning a particular token?
Yeah, so they are promoting CryptoPunks, or they have agents. Essentially, the agents are promoting and placing those CryptoPunks into movies, and I imagine into movies and music videos and such. So each NFT is unique in a way, but there are NFTs that sold, let's say, I'm not talking about cryptocurrency in general, but like specifically, but let's say you have a NFT that has 10 issuance or 100 version of those, 100 of those, although each one is unique, and one can argue each Bitcoin is unique. How is it going to be, viewed? That will be unknown at this stage. But that's why, like as an investor, I hesitate, because it's not clear, right? What it means.
Yeah, but in the example that you give, I think it is relatively clear that it's not regulated, where one person owns a particular NFT, or if multiple persons own a similar NFT, I don't think that raises regulatory issues. It's only if, one, there's a royalty stream, or two, there's a number of people that own the same NFT, which is rare as far as I understand it. Because it's just like it's owning digital art, right? If you own
I think
art
the
or digital art,
derivatives of it.
Sorry, what was that?
Sorry to interrupt. What I was thinking just now is, if someone created a derivative of, let's say, the Beeple $69 million NFT, and then start selling that token, potentially that could be considered a security token.
Yeah, definitely. If you create a derivative out of something, that's definitely going to be potentially regulated. And that's something that's actually on the radar of regulators in Australia and overseas, where crypto exchanges are now offering crypto derivatives. So the securities regulators in relevant jurisdictions are going after the crypto exchanges that are offering crypto derivatives. And I think it was just today that Binance announced that they're going to stop offering crypto derivatives in Singapore.
Yeah, also Binance got in trouble with offering those share tokens. I think they delisted those as well.
Security tokens, yeah.
Yeah, that was quite obvious that was going to happen, actually. But I'm surprised they did it. Super interesting, guys. I think from my perspective, the challenge is to make people understand what the hell we are even talking about here. And there's so many use cases. I mean, honestly, I even think we should go away from, like these nerdy terms like NFTs and blah, 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 because there's a million different things you can do with it. Let me start with a few examples. You mentioned art. Obviously, I can now create a piece of digital art and tokenize it, or create a real art and make a photo of it and tokenize that in terms of a unique identifiers. And this piece of art, there is one original and it's not the copy from a digital product. So this is the first thing, but there's also many, many other things you can do. Gary Vee just came out with a huge campaign to say, I'm running a conference. This conference has 1,000 tickets. So I'm selling exactly 1,000 NFTs. And now some of these tickets are just a normal ticket to enter the conference. But some of these NFTs, let's say 900, are just a normal entry ticket. 50 of them will give you access to the exclusive VIP party with Gary. I'm just saying it. I don't know if that's really the case, but the principle is like that. And one of the NFTs will give you a private dinner with me after the conference event, right? So you can really make an event. You tokenize that event, where you usually were selling entry tickets, just in a different way, right? And then everybody can buy this NFT and trade it with someone else. So it's a completely different use case. Then we just talked about where it becomes even more crazy, right? It's like it's all about playing a game, but in order to play this game, you have to buy a team of 3 NFTs. And these NFTs are called X's. These are little monsters, so in order to play a game, I need to buy 3 different monsters that are unique monsters and don't exist 2 times in this game. So everybody has this, so in order to play, I have to invest in that. And then, if I don't want to play anymore, I can sell them on an open market. So there's a lot of completely different use cases with these NFT. But now I guess the problem is even less a regulatory problem as of now. It's number one, make people understand what the hell is even happening there. And again, it takes time to digest that. And there's a million different use cases where the story is completely different. The second question I realize it's even more challenging right now is how do I pay taxes on that stuff? And for that, depending where you are, you will have a completely different answer. In the case of X's, it becomes even more complicated because now you buy an NFT, you play a game, and you earn SLP, an ERC20 token on Ethereum that you can then sell. So, it's like you play a game, so I earn a reward from the game that normally would be some fantasy game money. And of course, I don't pay taxes on fantasy game money, but now this fantasy game money can become real money. So, how is that? And depending where you are, you maybe should stay away from playing X's because it will get you into big trouble with your tax advisor. In some other parts of the world, you just do it. The Philippines, for example, we're just discussing on a law because now so many Filipinos are playing this game. So now the government is smelling tax money coming in and already started regulating. So it's a complicated world out there, but if you break it down to something specific you can do with it, it becomes much more tangible.
Okay, and I have one more question about regulatory and risks. Have you heard about the case with Rammstein headliner Lindemann and St. Petersburg's Hermitage? Lindemann tokenized his song and video from Hermitage Museum in Russia, but Hermitage told that Lindemann hadn't license to tokenize this video made in Hermitage's interiors. How to protect the interests of NFT holders in this case, if Hermitage Museum will win the judge. What do you think about this case, John?
Sorry, I'm not sure I understood everything that you said there, and I'm not familiar with the particular matter, but I think the issue that you raised is that someone has issued an NFT, but the actual original artist didn't license the IP attaching to the NFT. Is that what you said?
Rammstein's headliner Lindemann created an NFT. This is a video made in interiors of State Hermitage Museum in St. Petersburg. Hermitage officials told that Lindemann hadn't licensed to make this video and to tokenize it, but Lindemann sold his NFT made in Hermitage for more than $100,000. How new NFT owner can protect his interests if Hermitage will win the judge, and if this owner would like to resell this NFT.
Sorry, I'm not sure still that I fully understood what you're saying, but I think what you're saying is that someone created an NFT without having a proper license to do so, and you're asking how the purchaser of that NFT can protect their interest. They can't protect their interest if it was never properly licensed in the first place. Does that answer your question?
No, not. Do you know Rammstein group?
No, I don't.
It's very popular in Europe, and the headliner of Rammstein group with millions of subscribers in Instagram created NFT. This is a video made in Hermitage State Museum in St. Petersburg, Russia. The officials of the museum tell that Lindemann hadn't a license to tokenize this video. The video made in Hermitage interiors, masterpieces of Hermitage Museum are placed in this video. Hermitage will have a judge with Lindemann, but Lindemann had already sold his NFT made in Hermitage Museum. How new owner can protect his interests if he would like to resell this NFT?
You can't. If it was not properly licensed in the first place, you cannot protect your interest.
Yeah, I think even technically, from a technical perspective, there's nothing that you can do because of the transaction and the custody. But I think it goes back to the question of what is an NFT, right? Because the NFT itself didn't really make a copy, like unlicensed copy, like a CD. All it did was it's like a stamp of the of that video, right? So I would say that it's probably they couldn't get anything back in terms of, unless they sue them directly or something. I don't know the legal what the legal ramifications are, but technically there's no way that they can recover because in the first place, I don't think there is anything to recover from a technical perspective. It's literally.
The possibility is this: if I followed the facts correctly, the museum would sue the creator of the NFT for royalties for using some of their IP, and then the person who purchased the NFT would sue the person who sold them the NFT for selling them something that didn't have all of the correct intellectual property rights attaching to it.
Okay, good. And it's time to finish our panel discussion. I would like to ask every participant to answer one more question. What advice would you like to give for the audience, people who would like to invest in NFTs, in STO, in crypto?
Do your homework, research, and learn a lot. I guess it's easy as that.
Good. And Beck, what's your
I guess I would echo Felix's suggestions. To kind of add to it, I think you've got like a plethora of different media sources available, and it's really easy to get stuck in an echo chamber that reinforces your investment or what you like to believe. So challenging your biases with looking at Twitter, looking at media articles, jumping into Telegram groups, looking at Discord, looking at Reddit is going to get you across a whole range of different perspectives and opinions. It's going to take a lot of time. Making sure as well on top of that, you're looking at actual financial data. So going onto CoinMarketCap to actually look at the data side of what you're investing in as well, I think kind of gives you a holistic view of what you're investing in. But actually taking the time to do that is timely, and we don't yet have a space that kind of brings all that together. So that would be my advice.
And Lee?
Yeah, so from an investor perspective, again, if your cryptocurrency, NFTs, all of these are highly volatile assets. And the solution to volatility is what I always say is, or a lot of people say is position sizing. So make sure that you don't invest more than you can lose. That would be my number one advice. And number two would be to keep a good track record of everything that you do, because let's say if you do invest something small and whatever you invest in blows up, become very expensive or become very valuable, there will be tax implications. There will be regulatory implications, especially if those become really valuable, and you need to have very good records, especially provenance of where did you get that cryptocurrency, what did you do with it? So those are very important records to keep. So I would say that's the other thing that I want to add here.
John?
Probably don't have any specific advice to add for investors in addition to what's already been said, but if anyone's sort of involved in any project, I do recommend that you get legal advice up front just to tick off and deal with any regulatory issues that might arise.
Okay, thank you. Thanks everybody for participation in panel discussion. Goodbye for the audience.
Thank you so much.
Thank you for attention.
Thanks, everyone.
Bye.
Yeah.
Bye.
Welcome to Ecom Capital Investment Opportunities. My name is Sasha Karabat, CEO of Ecom Capital, and I'll be guiding you through this presentation today. So, executive summary, Ecom Capital is a full-service e-commerce firm helping people start, grow, and invest in e-commerce businesses. Our team helps aspiring entrepreneurs to start on the start side, a brand new e-commerce business. We also help existing e-commerce brands and businesses grow with a profit share partnership. And we also help investors intelligently invest in a digital asset for monthly cash flows. Start, grow, and invest. The problem overall is really this $4.9 trillion market, as validated by Shopify in 2021, is disrupting the bricks and mortar and retail business worldwide. COVID pandemic is just amplifying this, and people are now more than ever aware of the need to get online. Consumers are facing the problem of how to start, how do I begin? Entrepreneurs are facing the challenge of how do I compete, how do I grow, how do I take market share? And investors are thinking, how can I invest for a passive return on investment, time poor, and not really having all the time in the world to learn. On the further analysis, the pain of the consumer is broken into lack of knowledge, how to can be unclear, steep learning curve that can be hard to navigate by themselves. The need there really is the how to, yeah. It's a proven system, formulas, templates, and the element of the done for you to allow that individual consumer to essentially learn how to fish, but also have a few fish just for the road to begin with. The entrepreneur is facing challenges around lack of capital, strategy, innovation with ideas and application and implementation needing some support. The need there is really the resources, the expert talent on marketing, product, logistics, and scaling, as well as the capital and advisory. The investor pain comes down to opportunity costs, right? Knowing that it's there, knowing the need to get into it, not knowing how to or where to invest with, who to trust, and the proven track record. And the need really is like I mentioned, the proven track record, partnerships, automations, aligned interests, being focused on the same goal, profit partnerships, and things of that nature come in very handy with that model as well. Now, the solution overall is innovation through an approach that is very unique for each division. So in 2019, after a call with my business partner, Fletcher, discussing some of the frustrations around the coaching industry that I was heavily vested in myself, I mentioned how I really had this deep desire to do more for people, right? And go above and beyond for our clients and serve them above what anyone else in the market was doing. After much kind of back and forth and discussing different concepts and ideas, we looked through multiple different offerings in the market and came to the conclusion that specifically in this e-commerce market, which is the make money online market, the desire that all of these clients have, everyone was delivering subpar services. We went through and bought and purchased and invested in all the programs, courses, training materials, how-to manuals, everything, and it was very, very poor. So we launched with this value of preeminence and really essentially in essence what it means is leaving all people, places, and situations in a better state than which you find them. And we carry that across every single division, every single department, and it really is the governing principle to any and all business operations. So the solution for the start side, I'm going to break these down individually, start, grow, and invest, so we can really have a lot of clarity around that. A done-for-you website, which is built within 30 days to house the products. This is personally branded, custom design. Everything's built by our development teams. Product research and market analysis that goes into the back end of that, the coaching, the support, and the guidance to be able to use and facilitate that machine that we build 3, 6, or 12 months, as well as the training program and the resource materials for lifetime access so that the clients can get in there and learn and understand how to. Goal is 10,000 per month in the first 120 to 180 days. Very, very much achievable. And then growing within that model to 30,000 per month. The solution with the grow side is then once you hit that 30,000 per month, moving more into a private labeling situation and really taking the products that are selling well, private labeling them and beginning to separate further into the market. We then offer clients at that capacity an equity position for us to put our resources, our marketing team, and all of our strategy that we use on existing businesses into their business to help them grow as well. Solution on the invest side is simple. It's building that grow model out to 100 plus businesses through the incubation of those grow clients, as well as acquiring new businesses that are existing in the market, and then providing investors with monthly cash flows, putting those businesses into an early stage venture liability partnership, and then being able to pay out monthly dividends on those positions for security and long-term growth, as well as further down the line, looking to potentially sell that entire asset to an institution if that was the case, or even just keep it as a constant recurring cash flow source. So the secret sauce, in essence, is the done for you for the start side, taking all the guesswork out, and based on overall 10 years plus of cumulative results that Fletcher and myself have been generating, result-backed formulas proven across hundreds of e-com businesses across various different landscapes, taking them from 30K to 300K, taking them from 300K to $2 million per month, and various different projects we've worked on. Supporting coaching, making sure that the accountability aspect and holding your feet to the fire is there for the clients as a fundamental pillar of success, and the proprietary process. So the launch strategy and the training and the IP that goes into this program consistently yields results. When we look at it from a comparison basis, what we provide versus a couple of other competitors in the market in terms of comparisons around done for you elements, the profit share arrangements, the investor opportunities, affiliate sales forces that we have internationally that constantly are selling overall, provides a very dynamic model. Current market size is 4.9 trillion, as mentioned by Shopify in 2021, estimated to be over $8 trillion in 2023. So some really, really explosive growth. The dynamic divisions of our model really allow for us to cater to such a wide audience. Essentially, every consumer is a potential client. You might walk down the street and ask anyone, hey, have you ever wanted to make money online before? I haven't yet had a conversation that someone just says no. So a lot of opportunity there. Every potential e-commerce business owner is a client as well. And every investor is a potential client also. So a few of the partnerships that we've had either currently or in the process of building out and continuing to build. Current team, this is a brief snapshot. There are quite a fair few people missing at the moment on this photo. It needs to be updated, but a snapshot of some of the team that we have. Now, look, what we're seeking is 500,000 in exchange for 10% of ordinary shares. This is for the valuation of $5 million based on a combination of monthly revenues, agreed contracted clients, projected growth, and third-party valuation. Some of the capital allocations to team development, operation expenses, marketing, and infrastructure development would be allocated as follows. And some of the key milestones that we're looking to push out and grow into the back end of 2021 as well as 2022. So getting the core team refined and the processes across the board very, very much in a position to scale. And December 2021, 6 million per annum run rate with commencement of the development project, which is essentially a custom built portal to be able to facilitate, house, and grow all of our clients. We have about 700 odd clients at the moment, or 800. March expected 50% of the UI component to be complete, with the build out of the sales force of affiliates to 250. And then June 2022, 12 mil per annum run rate with a 35% margin. Overall, in summary, some of the key highlights are strong monthly revenues, dynamic, scalable service, huge market potential, and a very strong and united team. Thanks so much for watching. I look forward to speaking to some of you after this.
I'm Charles Sidman, the founder and managing partner of ECS Capital Partners, a venture fund focused on very early stage technology-based positive impact investments. And I'd like to give you a brief summary of what we're all about. So the opportunity that we address, as I said, we focus on early stage investments, which I consider to be a unique asset class. They are different from traditional and later stage venture capital because they're so early that they are often pre-revenue. They're still working on their product or their service, and they certainly don't have the extensive history and set of data that traditional venture capitalists use to decide where to invest. Because this is a different beast, and needs different ways of evaluation, it has a correspondingly high rate of return. All the studies put together indicate a rate of return of 25 to 30% per year or better. It's a very desirable asset class for anybody who has a portfolio of investments because it is minimally correlated with other assets. It doesn't go up and down at the same time as other traditional assets. And another feature of it is, although it is relatively illiquid, the value grows steadily in good times and bad times. Thus, patience is required and it's rewarded. And finally, I focus, and ECS Capital Partners focuses on sophisticated and science and technology-based enterprises, so-called deep tech, because that allows explosive growth and creation of value. It allows some protection through intellectual property, and it allows a great degree of impact on the world. Now, why doesn't everybody do this? There are three major problems. For larger investors, they lack the patience, tools, and outlook. I could call it the entrepreneurial outlook itself versus an institutional one, to find and work with and profit from this very numerous, kind of murky, uncertain universe of initially small opportunities. So bigger investors have a hard time dealing with this. Smaller local investors, like angels, are very used to dealing with these things, with these young companies, but they lack the money to carry many of these ventures through to completion. Many financing rounds are often required, from an idea on a napkin to a unicorn success, and smaller, earlier investors usually drop off and are compromised along the way. And finally, whether large or small, most qualified investors simply don't participate in this asset class. They don't know about it, they're not equipped or prepared for all the work. So the entrepreneurs don't get the support they could use, the investors don't get the rewards and the returns that they would like. So how do we solve this problem? We have a focused and very unusual approach to this early stage asset class. I've told you that large investors have trouble. I've told you that early small investors have trouble. So we are a VC fund that operates with both of these groups. We make initial investments early alongside of angels and angel groups and early stage VCs. And then we continue to participate later with the larger and wealthier VCs, family offices, high net worth individuals, etc. Thus, we maximize returns by beginning to participate very early and continuing to participate later on, where deal terms often change to the advantage of the later, larger investors. And what this results in is a broadened franchise for even the smaller investors, but the large ones too, and it allows synergy and integration for all of these populations and benefits to the entrepreneurs and to the host societies. Our goal, which we feel is eminently reachable, is to return 10x our investors' capital in 10 years. That's a 26% compounded yearly IRR, but that's what we feel we can reach and provide all of our investors, whether they are small investors or larger investors. And a matter of choice, every single investment that we do is one of beneficial, positive impact for the world. Every one of these companies makes the world a better place, doesn't harm it, and doesn't leave it just neutral. It makes it positively better. Now, how can we do this? It seems simple, but why doesn't everybody do it? We have some secret sauces. First of all, I come from a background of technology and science experience and resources. I worked in a laboratory and I taught for more than 50 years. And so you can hire experts with quotes around them. They're a dime a dozen. They can say anything you want, but if they don't have skin in the game, their advice or views may not be definitive. I'm one of those experts, but I have skin in the game. So I'm on the line with every one of my investors. Secondly, I've been investing in this early stage space for more than 20 years. So I have the resources, the connections, the partnerships, the experience, and the positive track record. Over the last 10 years, I have returned about 5.5 times my capital with the investors, with the investments that have exited during that time, and many others are still cooking very successfully. I have an extensive global network for angel network, basically, an early stage VC for company discovery and selection. And I know from a lot of experience that we have to be humble, that investing is a complex system, and thus I take a multi-stage investment strategy. I start with small investments, and then I put more and more money at work. I'll tell you more about this in a moment. In those investments, companies that are succeeding. And in the end, all the data says that new managers, which I am, even though I have a lot of experience, and small funds, which we are, even though we're not a micro VC, are hungrier and more successful. Certainly the network and organization of our fund is unconventional. The approach is unconventional, but we are very agile and we align interests across the board. So now some practical details. We do charge the standard 2% and 20% management and carry fees, like most venture capital firms. But two important provisions are that all of our LPs' money is invested. We don't take fees off the top and then just invest part of one's commitment. And we don't take any carry at all until all committed capital has been returned with interest. So all of our limited partners get theirs before we get ours. We have a very generous range of investment amounts possible, as little as 25,000 US. If people or institutions invest at least 250,000, they are allowed co-investment opportunities in the larger later rounds. So that allows an active strategy as well as the passive work that we carry out. We have an approach where we divide every investor's capital into 4 quartile buckets, quarters. And so the first 25%, the first bucket, we use for hundreds of small initial investments done alongside of angels. And I consider these investments the best 1% of the best 1% of companies. They are the jewels in the startup ecosystem. But as I said before, we know that even all of these jewels are not going to succeed. So we reserve 75% of our capital for successive investments in up to the 50 most successful companies. You can call these de-risked, you can call them proven successes, but this is a search strategy. And this just recognizes and aligns with our experience and necessary humility. We feel that this is the best way to maximize our return from the earliest investments through the later investments. Our structure is an evergreen or account structure, which allows very flexible money withdrawal or further investment or reinvestment at any time. And finally, we are aware, we don't let the tail wag the dog, but we are aware of the tax benefits and opportunities that the US tax law provides for generous treatment of losses or gains or exchanges. And we try to do that intelligently to minimize tax burdens. These provisions are in US law for US tax returns. We do a lot of investing in the US, but we also work globally. So I can't pretend to be an expert for all countries' tax law, but we certainly are intelligent and aware about US tax law. And so This is our contact information. I'd be very happy to talk with people further. This has been a very short presentation. There is a longer deck that I'd be happy to walk people through, and let's work together. Thank you very much.
Hello, I'm Michael van Carlenberg, Director of the Ricard Group. Our aim in business is to be a primary source of investment-grade transactions. We find and present selected investment opportunities in property, emerging companies, and we also manage some investment funds. The universal problem in investing is that opportunities can always look good, or can frequently look good. But the devil is always in the detail. The main game in investing is to enter and exit safely, with capital intact and a return that reflects the risk taken. Of course, this is frequently easier said than done. So what risks matter? Principally, ease of entry and exit. And this is addressed by liquidity in a transaction. Getting in is easy, getting out can be difficult. You need to avoid a situation where you are trapped in an investment that you can't exit as you need to. There are always general risks, economic risks, interest rates, legislative changes, etc. And then also specific risks that are connected with a particular investment opportunity. If there are universal problems, then there's also a universal solution. And to guard against the loss of capital, we suggest that you invest and don't speculate. Invest safely. Look to invest mainly in less complicated risk-assessed deals. Invest in situations that you can understand. Invest for the long term, and remember that diversification is essential. We see ourselves bridging the gap between opportunity and outcome. In other words, we find the opportunity, present it, and then manage the implementation on your behalf to deliver the expected result. We are not an introduction service where we spruik a deal and then leave you to your own resources to find an outcome. You have at your beck and call a trusted and skilled team behind every transaction. Apart from myself, there's Graham Lavelle, a forensic accountant, Ange Durick, a property development or project management expert, years of experience, and Dennis Danaher, partner of Danaher Moulton, who look after the legal aspects of everything that we get involved in. In property development, of course, you can earn money from land subdivision, the building and selling of townhouses, apartments, commercial and industrial, and special purpose residential such as the NDIS. But we're focusing not just on the typical property deal, but properties that make a difference. There is great opportunity to get involved with high-yield, ethical, green property investments that have positive environmental and social impact built into the agenda. This involves things like construction-friendly, carbon-neutral materials, reduced water consumption, a low carbon footprint, net zero energy consumption, and as necessary, certified as an NDIS compliant build. Many existing ethical property initiatives are ethical in name only. There is significant commercial and social benefit in a meaningful ethical initiative. Property projects in a townhouse, for example, can typically mean an 18-month exposure with a return of around 30-odd%. It varies, of course, from transaction to transaction, but typically that's not difficult to extract in a deal. As far as emerging companies are concerned, we look for and promote targets that have a sustainable competitive advantage, large unserviced markets, established revenues, strong management, and importantly, are profitable and are primed for growth. That's where the opportunity is. In that regard, we are currently supporting the Pharmacal Health Group. We've been appointed to assist them in raising some commercialization capital and then oversee or take them to a listing on an Australian exchange. You'll find the details in the Ricard deal room, but Pharmacal very quickly has a clinically trialed and approved formula, patent protected of course, that releases an active nanoparticle-sized drug into the bloodstream. And pain relief products are faster, stronger, safer, and easier to use. It's a remarkable story. It is a young company, but it's not a startup. There's 15 to 20 odd years of research that have gone and been completed. And the company now, with patents in place, is ready to commercialize. And we are really looking forward to seeing this organization grow. It has potential, I believe, to be a substantial player in the pharmaceutical market. So the opportunity there in terms of this capital raising is a present raising of around $800 to $1 million at 20 cents a share. There'll be a pre-IPO offer in the second quarter of next year, targeted at 28 cents a share, and upon listing, the estimate is about 38. So for those that get involved now, there's an approximate 90% gain in 9 months or so. As far as property is concerned, to give you a bit of an idea, the investment ranges can be as low as $10,000 contribution. Indicative returns, say, under 5.9 odd percent. With a larger contribution, say $50,000 or so, the returns are slightly higher, around 7%. And for larger contributions of, say, $1.5 million or more, there is opportunity to extract about 22% or more in transactions. So thank you for listening to this little introduction. Hope it's been informative. The investment opportunities are at the Wholesale Investors platform, the Ricard deal room. And if you search there, I'm sure you'll find it. Thank you for listening, and I look forward to connecting. Bye.
Good morning, everyone. My name is Grant Colthorpe, and I'm the CEO of Mind Digital. And welcome to the Venture and Capital event hosted by Wholesale Investor. I hope you enjoy. All right, we'll go into it. I think over the last 12 months, 18 months, we have seen a massive seismic shift change in the crypto markets globally. We've seen the emergence of decentralized finance, DeFi. We've seen the emergence of decentralized exchanges, DEXs. And we've seen the emergence of DAOs, decentralized autonomous organizations, step up from their first iteration back in 2016, when we saw the most famous one linked to Ethereum be hacked and compromised, and the whole DAO movement sort of take a step back at that point in time. this movement has really invigorated the market and invigorated, I think, capital flow into the crypto space more broadly. And I think that's why it's very, very pertinent and important to this event, basis that we're talking about allocation of capital to new technologies and new projects. And the reason why we've seen that is this whole movement of decentralization has engendered two things, essentially. One, it's allowed for capital to flow into these projects more easily. So not necessarily meaning less due diligence or less transparency from the approach from investors getting transparency into these projects from point of view from operational, legal, financial due diligence, technology due diligence. It's just the fact of the matter is that the funding mechanisms can be done via non-traditional methods, obviously mostly using crypto, oftentimes making use of smart contracts. And then there can also be a lot of escrow rules put around those that also give investors comfort and safety. I think the other aspect of it that really has supercharged it is the fact of the matter at the moment is it's playing into a regulatory arbitrage situation. And that is that the current regulations globally essentially exclude a significant portion of the activity that is going on in the decentralized DeFi world, which is allowing projects to get out there, get product market fit, iterate quickly, and be able to achieve a lot more in a shorter time frame, because not necessarily always having to build and develop product with regulators awaiting regulator approval. And we've obviously seen that very topically just this week with the SEC attacking Coinbase, who Coinbase approached the SEC voluntarily about a new product line that they would like to issue to users. It's a product line that there are several other large competitors who already have similar products in the market. So it wasn't that it was, a first of its kind. Coinbase obviously have had a good, track record of compliance with regulation, successfully undergone a listing. So from that point of view, everyone would have thought they would be successful in their interactions and discussions with the SEC about launching a product that is, as I said, is market standard and has been is well understood. Yet what happens? Not only did the SEC not provide lack of useful feedback or discussion to Coinbase about how they actually might want to go ahead and launch this product, they actually then start taking action against them and basically say that they must cease and desist on going down this track. If not, they will face SEC action. And this on the flip side of it is the massive advantage to decentralized organizations. They are not having to be concerned with going to the SEC about getting ability to be able to issue these new products, the ability to have to change design on products, the ability on basically having to ensure that are all the users fit and proper for this product. What the DeFi world is basically relying on is I go out, I launch a new protocol or a new product, and it's basically it's the consumer and the population who decide on how that on its fit for purpose and also its success. And whilst we've seen, yes, there have been scams and there's been rug pulls, which is the insider's term for scams in the DeFi world, is largely though we've seen a massive influx of capital. The amount of assets in the DeFi ecosystem now is significant. I think some of the protocols alone, they're over past $1 billion in totality. I'd have to check the numbers. If you exclude the DEXs and you just look at the DeFi protocols, I think we're well over $10 billion US at the moment, and that grows every day. And then if you include the DEXs, obviously that number is a portion higher again. In the DEX space, obviously we've seen the original Uniswap continue to go from strength to strength, and then SushiSwap, the largest competitor, also come in and be very prevalent in the space and driving a lot of innovation. So it's just that contrast is significant, and that is what investors are looking at, and that's what projects are looking at. Because from a project point of view, from a company point of view, I look at ourselves, we're a a centralized exchange that offers fiat crypto services. We offer some other auxiliary services as well. Where AUSTRAC, we're registered, enrolled within the AUSTRAC program as a digital currency exchange. We also have previously looked at potentially needing an AFSL for certain requirements and certain activities that we've considered. But from our point of view, is it's we feel very comfortable under the DCE arrangements, but also at the same time, we also recognise that there are activities that our users are starting to ask about, are starting to become interested in. And, as being in this space, I think it's important that, we take on that feedback and that we are able to iterate ourselves with a fair bit of freedom and to be able to do that fairly quickly. And I think at the moment, again, I think we're very lucky here. I think the regulatory regime in Australia, personally, I think we feel it's well understood. The bodies involved, ASIC and AUSTRAC, obviously ASIC more if you do go into the derivative or security angle, obviously not needed for spot crypto. I think the AUSTRAC requirements under the DCE system is very well understood, and compliance is certainly achievable if you're a reasonable organisation who dedicates reasonable resources to it. Compliance and but sticking within the lines is certainly doable, achievable. And currently we see there's probably about 10 to 15 operators in Australia who have very good track records of doing so, and that's giving obviously confidence to people here in Australia that they can use these exchanges and can do so knowing that they've got, as I said, good track records of compliance with a regulatory body. But from our point of view, though, as I said, we've started to have users ask more questions about certain aspects of I guess the decentralized universe, whether it be DeFi or decentralized exchanges. And I guess for us, that's really led us to this point at the moment, and that is we're on the cusp of launching 2 new products. So we've decided to step away from our limit order book exchange and move towards Mine Trade, which is a fiat crypto. Basically, it is a top of book exchange. So instead of showing the whole limit order book, it shows the best bid, the best offer. And we think that for most users, that's going to be really, really simplified, but also delivers to them what they need. The other platform that we're developing and very interested in is MineSwap. So essentially, MineSwap uses 0x protocol, which is a decentralized protocol that aggregates liquidity across certain other decentralized exchanges within the crypto space. By using the 0x protocol, we can tap into liquidity across multiple DEXs and without having to do all those API integrations ourselves. So this means that our users on MineSwap get access to strong liquidity and also strong performance, because it's basically underpinned by the 0x protocol, which is was one of the it was a fairly original crypto project. It's been well developed. It's got a very, very strong set of developers, and they continue to work on the protocol extensively. The protocol is well funded. So again, from our point of view, when we were looking to do something like this, to use a solution like 0x was very attractive and made a lot of sense from the fact that point of view, it is a open source code. The protocol, as I said, has been tested many times and operated without blemish, basically. And so essentially what MineSwap will allow is users can come onto the platform and essentially swap ERC20 tokens for ERC20 tokens. And we've seen, in Australia and or abroad, some other exchanges have had a swap type functionality, but essentially what that is, it's still just an exchange doing a centralized trade. It's and oftentimes it might not even necessarily have to doesn't even go through a limit order book. It can oftentimes just be more like a broker. The exchange just quotes a price and the user says yes or no. The beauty of the model that we've got here with MineSwap is that the liquidity is coming, as I said, from the other decentralized exchanges and liquidity pools. So users are not having to be are not going to be contingent upon, pricing of the exchange. Also, it allows us to have, the token offering can be extensive, because basically it's only limited by the amount of liquidity that's available on the other liquidity pools globally, on other decentralized exchanges globally. So from that aspect, it means for most users is their ability to access coins will be greater. We think much easier. And also what it means is, from an exchange point of view, is we don't have to really worry about listing criteria from the point of view that if the token is in a liquidity pool, it's on a major decentralized exchange, it's most likely that 0x will add it to their asset list. And then once it's added to the 0x asset list, it's really up to us to add it to our list. But again, barring any concerns about the token being a security or being of dubious quality, is we will most likely add that to our list, our tradable list, very quickly. So essentially what that can mean for users is, for some of these larger tokens that have been launched recently, where you see them launch on Uniswap, and then they get they have significant liquidity pools already to support them. Their pricing is then supported by other aggregating protocols such as 1inch. We could potentially see the token launched, and then within 24 hours it added to our list of tradable assets, which I think is very interesting, and I think for users is something that traditionally has been a challenge for centralized exchanges. And knowing this from operating ourselves, is that it's not always easy to be able to integrate those new tokens quickly. You have to be concerned about where you're going to get your liquidity from, how many users do that, how many users do you think actually really want to trade that token or want to buy that token or sell that token. You have to be concerned over a whole bunch of other things that are sort of come part and parcel with being a centralized exchange. Also then, depending on what type of protocol the coin is on, you obviously need to make, questions around the wallets, the security relating to that, etc. Whereas the beauty of a on-chain solution, such as using 0x, is that is, all bedded into the protocol itself. And whilst, we continue to see the protocol go from strength to strength, as I said, not suffer any major attack or error, we think we can feel very comfortable in using it for this purpose. I think the interesting part of that becomes the extensions that come out of that, which is parts of which we are, as an organization, really working through currently at the moment. And they're not, even to us, they're not all obviously clear at the moment, etc. Is where those extensions go, what they all look like, what they, what we might ultimately end up offering to our users, and how we might end up offering it. So I think one of the things for us at the moment where we're having to consider is, again, coming back to the whole decentralized movement is, are we better served by, operating as several entities? So whilst it might be part of the Mind family, Mind Digital family is that might essentially have a Mind Digital decentralized, and that entity runs a certain amount of different products and suites, and that is done, to optimize, the offering that we can have to users, and also what we can, from a functionality point of view, from a business, what can it allow us to do vis-a-vis, being a Australian domiciled company. From our point of view, what we do want to do is, where it makes sense, we obviously still always want to maintain an Australian domicile, where we want to be part of a regulatory regime that we feel comfortable with, that we know gives both us protections but also our users protections. We're very keen, obviously, to remain within that jurisdiction, i.e., in Australia, we're very keen to still, obviously, crypto to fiat transactions. As I said previously, we like the Australian regime and think it's solid, and would want to continue to operate under it for the foreseeable future. But where it becomes really interesting, I think, is these extensions, is into other products that we've seen, become quite popular over the last 12 to 18 months. And some of these things are, some elements of them are interconnected to each other, and some of them are standalone. And I think that is the place where we're going to continue to see further growth globally in both the DeFi world and the TradFi world, or the centralized finance or centralized exchange world. So, and I think essentially that brings us to this concept, which we're starting to see grow in usage, and I think in people's interest, investor interest especially, is what's being deemed CDeFi, which is centralized, decentralized finance, which obviously sounds like an oxymoron. And in reality, it requires a little bit of explanation to probably make sense. But the best way I can put it is it's essentially taking the best elements of the centralized world that we know well, that we've been operating under for obviously really up until the last 12 months, and then taking the best parts of the decentralized world, which, sort of are very still new. Everyone's still sort of trying to figure out what, and how to do them and what they all mean. And I think that's where you can get some, the synergies really are very strong and are quite substantial. And so, yeah, that for us has become the thesis and the main theme and concept as a firm that we are really trying to orientate ourselves towards. So we would say MindSwap is a good example of that. It offers the benefits of centralized wallet management. So users don't have to manage their keys. Users can still use support to, query, why did I do this? Why was that price that? How do I go from this coin to that coin? Why can't I, for example, another query which we've already had in our beta testing is, I can't trade Bitcoin on MindSwap. Well, no, you can't, because Bitcoin's on its own blockchain. It's not an Ethereum-based blockchain. But what you can do is you can trade, wrapped Bitcoin or Ren BTC, etc. So, things like that. Having a centralized support team that can still provide people with, answers and replies is something that users like. One of the big issues that users have with decentralized wallets and interfaces such as MetaMask is the fact of the matter is there's no one to talk to. And oftentimes, even if there is a Telegram or a Discord channel, it's quite, it requires quite a high level of domain expertise. The answers sometimes are quite, there's not really much detail given. And the other thing is ultimately as well is for, users really looking at these products and these, methods of transacting for the first time, they really are not the most, easy to understand things. So from that point of view, we, as I said, I think we look at it and we really think the fact that we can merge together those benefits is something that users will find really attractive. And I think from an investment point of view, I think the beauty of it is that investors can get, I think, comfort around the fact that you're not investing into a purely decentralized thing that exists as a foundation in Switzerland that then is managed by a governing council, et cetera, et cetera. It is a incorporated entity that operates out of a, depending on what it is, but out of a, oftentimes regulated, understood jurisdiction, a jurisdiction with a strong rule of law. And as I said, it's more about then using the best of those decentralized elements to provide an enhanced product and user experience to users. And so I think we're just going to see that aspect of the market continue to grow. It's something that's really sort of only really dawning on people at the moment. And I think the reason why it's really coming to the fore at the moment is potentially looking forward to what are the regulatory requirements coming out of the US. So earlier this year and also end of last year, there was, some proposals put forward by FATF, which is the International AML Task Force, around, potential requirements on decentralized exchanges, on decentralized protocols, on DeFi protocols, on DeFi apps, essentially. And some of those would essentially require these protocols and exchanges and apps to conduct KYC and AML checks on users, which obviously they're not currently doing. The reason why that is such a seismic change would be, it's these elements have been constructed such that they have not encountered or not counted for this within the process of development in the first place. And also there's other challenges, i.e. the team really is decentralized. There is no one in the team who wants to conduct and have that compliance and risk oversight and capability. And also, again, these organizations don't have compliance and risk staff, operational staff like centralized exchanges and centralized finance companies and organizations already do. And so that's the part where I think, as I said, you look forward, maybe it's not 6 months, maybe it is 12 months, 18 months down the track. If some of these regulations start getting pushed through and adopted, I think, something like CDFI is going to become a bit of, is almost going to become the norm, where you're going to be, as I said, in the background will be these decentralized protocols and products, but at the front will look like the normal, very look like the user experience that people are used to at the moment. And from a regulator's point of view, it's really then meeting their requirement. It's where, there is consumer protection then in place, because the same level of regulations that apply currently to centralized exchanges and centralized offerings would still apply across, from a AML counterterrorism financing point of view. There's requirements are being met because people are being scanned. Most likely they're going to have to probably whitelist user addresses, and you're probably one of the models I saw put forward was that where users would voluntarily come forward and nominate addresses and nominate wallets that they want to use on these on these venues, and then that way regulators, whether or not they be securities regulators, taxation authorities, or AML authorities, they can have that visibility there, and it's all provided. So I think that is, as I said, I think that's going to be the next big thing we see. And I think what's that going to do is lead to a bifurcated market. So we're going to have a regulated CDFI market. I think we're going to have an unregulated DeFi market. And I think what will happen is I think we'll continue to see the unregulated DeFi market probably not grow as quickly in terms of assets as the regulated space, because I think once some of these elements of DeFi do get regulated, you could see institutional money flow into them relatively quickly, because they are offering very, very good investment opportunities. But I think what the unregulated DeFi market will continue to do is be the source of innovation, the thing that is developing at breakneck speed, that is just iterating itself, very, very quickly, and really delivering all this, all these things we're seeing just explode out of this very, very short period of time. And I think there's room for that to continue for quite a period of time. I don't think there needs to be an amalgamation or a merger between those two segments, because I think, that is ostensibly what is the decentralized revolution. That is decentralization. That's a movement, that is a concept that is not going to reverse. People have seen the power of organizing in this decentralized way. It has incredible implications for running firms, running large firms, small firms, running firms across multiple offices, multiple sites, all this case. So I think we just see that they can go hand in hand. I think, again, there's oftentimes, I think, a lot of misnomer or misunderstanding that they have to be antagonistic to each other. Yes, there obviously are going to be times where it is antagonistic and it is one or the other, but I think in most of the cases they're not mutually exclusive. They can both coexist. They can both offer their own things to different users. And I think then longer term, though, I just do think that the decentralized element will take over. So I think we see essentially a explosion in this centralized regulatory DeFi world in the next 3 to 5 years. And I think past 5 years, I think we see the decentralized world just comes back and becomes the dominant force as regulators get comfortable, as users get comfortable, investors get comfortable, developers get comfortable, and I think that then that's the big leg up again in this space. And then obviously the buzz at the moment and it really is game changing again is the application of NFTs to the decentralized world. Again, regulation cannot keep up with the level of innovation that is going on. I mean, at the end of the day, is an NFT just a physical good? If you have an NFT and that is a representation of a painting, it's hard to argue that the regulation on that token is anything other than what would be the regulation, that relates to artwork, the sale of artwork, the commissioning of artwork, the distribution of artwork, everything to do with that being a physical good and a physical item of art that people can, either look to own from an investment point of view, from an enjoyment point of view, or a mixture of both. But where the line becomes super interesting and blurred is when that NFT is no longer just a piece of art, where the NFT has certain elements to it that actually give it financial value over and above the artistic value. Again, we're not going to get into an argument over what is artistic value. It's just, I think it's just easy for us to say in this context, artistic value is the fact of the matter is that there is piece of art that's been done, whether it be musical, visual, or something in between, a combination of both, that has some value to someone. But, we can consider, and already there are elements of NFTs where they also have, links to profit shares, or they have other elements to them that make them, financially valuable as basically securities, or as, an alternative form of cryptocurrencies. And this is the part where then, from a regulatory point of view, it becomes really super interesting, because it's how does that then work? How do regulators go, okay, if it isn't an NFT wrapper and it is an NFT as in there is some visual representation tied to it, but it also has this security type element to it, like say it is a profit split, the holder of the token gets some, share of profits. Well, traditionally, if that wasn't in this wrapper of this NFT and it wasn't an artwork as well, I mean, if that was just a contract on a piece of paper, ASIC would have no problem deeming that to be a security, and would look to regulate it as such, and would require the person issuing that security or piece of paper to meet certain requirements. And on the flip side of it, investors would need to, would have protections, but it would also need to understand, is it only for sophisticated users? Is it only for, retail users? Have they read the PDS, etc.? All those types of elements, which I think become, in this space, in this NFT space, then are not, completely obvious from the get-go, and I think then become really, really interesting again. And I think we're just seeing the start of this, NFT explosion and evolution. And obviously, again, it seems like everything in the crypto space, it's happening at breakneck speed. And we're seeing, people really consider how they could use NFTs as a functionality for, bringing to life basically new assets, because there can potentially be the combination of many elements into a singular token, into a singular thing. And I think that is the part that has everyone, waiting to see what happens. But I think also is the part where, from an investor's point of view, potentially, obviously very, very exciting opportunities there. I think one of the hard things is for most people at the moment is to get their heads around is on the opportunity side is how do you go about actually, identifying these opportunities, but then, analyzing them. How do you, then how do you participate in them? So again, some of these, mostly at the moment, most NFTs are then only trade, bought and sold on marketplaces. They're not obviously on exchanges, even though they could be. And it's things like that, I think, where, it's so new, and we're so at the start of this whole process that there are everyone has more questions than they have answers. And as I said, that is by definition almost the opportunity for investors. So I think for those who are savvy, who have the capability to spend time, to spend resources into that space, I think they will be well rewarded. I think there is a lot of really interesting things going on there that will continue on to the future as well. I think again, people at the moment very much confuse the difference between, well, NFTs are a bubble. Well, yes, there obviously are certain elements of the NFT market that have skyrocketed in value and probably do display elements of being a bit frothy. But it's I think, again, from an investor's point of view, I think it's the most crucial point is to separate out the specific asset versus the concept. And the NFT concept, regardless of whether or not you think a rock, a computer-generated picture of a rock is worth anything or not, the fact of the matter is it's the underlying technology. It's the fact that they are being computer-generated images. Some of them are quite good. The rock one is done very much tongue-in-cheek. But the whole then technology wrapper around an NFT, the regulatory wrapper around an NFT, those things is without doubt, that is not a bubble and that is not frothy. That is a new way of conceiving assets, a new way of conceiving concepts, and a new way of combining value, that is the truly exciting part of this. So I think we've seen, I guess the theme of this keynote has been, the last 18 months is the Cambrian explosion of DeFi, decentralization has finally happened. I think people were thinking that may have happened 2-3 years ago, but now it's here. It's firmly out of the box. It's progressing at a great rate of knots, and I think for anyone who's serious about allocating assets and resources into the digital asset world, into the crypto world, this probably has to be your main point of focus. I think understanding the protocols, tick, very important. But I think even the protocols, they still all rely on this concept of decentralization to some degree. So I think that is really the theme for me that I think people need to take away, is understand the different flavors of decentralization. How is it being treated globally in different regulatory regimes, different taxation regimes, different banking regimes as well, obviously becomes important. And then just understanding how it is going to drive the next 20 years of investment markets and investment opportunity. And I think we're all very lucky to be involved in it at the start. There's still plenty, I'd still got obviously a long way to go. And I think there's some really quality persons building quality products in this space, which I think for most investors, again, I think they, even the, those who are the most pessimistic or questioning about the space. Yes, there is a lot to question about the space. That's a given. There has been a lot of bad actors in this space, but that's getting cleaned up rapidly. And the amount of good actors building, high-end protocols and products and platforms that, any traditional financial market engineer would be proud to build and to facilitate trading on. That's where we're at. I think we're at an amazingly exciting time, and thank you. And I hope you enjoy the rest of the day.
Good afternoon, everyone. Just wanted to welcome you all here to the crypto panel discussion led by Venture and Capital. The discussions and topics today will be trends in exchanges and infrastructure. And I just wanted to formally welcome the audience watching here tonight. This is such a great opportunity for all of you to not only see what's happening behind the scene here in Australia, but also have an opportunity to discuss the changes in trends and the opportunities for investment potential and everything else combined moving forward. So If it's all right with you guys, would love to get started if that's okay.
Absolutely.
Sure, mate.
Beautiful. So, look, I'll start with you, Matt, if that's all right. Let's get right in. Now, this ecosystem, it's more of a primordial soup at the moment. We don't really have any regulations, but the market cap is edging that $2 trillion now. So it's here to stay. What emerging technologies and trends in blockchain and crypto have you observed personally and suspect might continue unfolding moving forward?
Yeah, look, mate, undoubtedly, because of the industry, there is just constant change. It is continual change. And I suppose, depends on which part of the market we're talking about, I think. So I think in the in a part of the market where we operate mostly, which is with institutions and larger allocators of capital, the major thematic remains sort of regulation and the requirement for ongoing clarity of regulation, I think. A good example of that is ASIC's paper, consultation paper a couple of weeks back, looking at the the potential regulation of exchange traded digital asset products. The constant, we see that across the region, right? Constant sort of positive regulation. I suppose with respect to new technologies, it's probably not surprising that in the last quarter, I mean, we're getting more and more interest in hearing about NFTs and access to NFTs, and and you're starting to see, I guess, some fairly sizable and credible institutions sort of starting to demonstrate their interest in the space. Like Visa, for example. They bought an NFT, for their collection, a couple of weeks back at 150 grand.
Yeah, a crypto punk.
Yeah. So, it sort of depends on which part of the market you're looking at. The great thing about the market is there's always some part of it evolving and moving, and some sort of new technology evolving across it.
Yeah, good answer. I couldn't agree more with that, in particular with the NFT space. One that I've noticed as well that's seeing a lot of explosive growth recently is DeFi, decentralized finance. I personally think that's here to stay, and it's going to completely revolutionize the way traditional finance is occurring. What do you think are the biggest threats to DeFi? And do you think at some point there's going to be a bridge between both centralized and decentralized finance where they merge together so users can access DeFi through a centralized system?
Yeah, look, I think there's the major challenge for DeFi going forward is how to bridge the regulatory gap. Once again to see. I mean, there's obviously, there's quite a lot of crypto hedge funds that and individuals obviously who invest and stake directly with DeFi protocols. To move that into the up into the multi-trillion-dollar formal sort of asset management industry, sort of you need the regulation to sort of tag along behind it. I think we're probably really only at the front end of that.
I couldn't agree more. I think despite Bitcoin being around for close to 10 years now, the ecosystem, I'm sure you're all aware, is continually expanding. Every boom and bust cycle, there's a new pool of cryptocurrencies that enter that top 50, top 10. And I think you really hit the nail on the head there. Moving forward, the NFT platforms, some DeFi ones, pending regulations, will be probably the best types of opportunities in the space moving forward.
Sounds right, mate. But that's the thing about the space. We don't know what's next.
Yeah, and that's exciting, but also quite daunting, isn't it? Could be a bit of a double-edged sword.
Yeah.
All right. Now, Caroline, what I really wanted to ask you was the lack of regulation moving from what we just spoke about with Matt. Do you think that's potentially harming the innovation? And do you think that the regulations that are obviously being spoken about now could positively influence the industry moving forward?
Yeah, absolutely. But and also, first of all, thank you very much for having me. It's really good to be a part of this event. From my point of view, appropriate regulation, proportionate regulation is going to be an absolute boon to the industry. I think that what it gives to investors, both in cryptocurrency, but also in the entire industry sector itself, gives it that surety, gives it that comfort. As we've already said, we already know that crypto is here to stay. It's not going anywhere anytime soon. But we still need to give the investors the confidence to put their money into this sector, to really grow it out and take advantage of the situation that we talk about with DeFi, NFTs, et cetera, et cetera. And that's both, as I say, both in crypto and in the infrastructure piece itself. But, you know, it's not just a trend, you know, that good regulation is a trend to spur on investment that's been noted by the likes of the World Bank and by the Bank of International Settlements, you know, the OECD. They've all conducted studies at various degrees that kind of confirm that this good regulation has a positive impact, particularly around financial services, which really and truly is where crypto comes into its own. So for us here in Australia, and I know that obviously Adrian and myself are both on the board of Blockchain Australia, who've been really active in trying to push forward a proportionate regulatory response here in Australia. And I think, you know, that seems to be the way the wind is blowing. And I think for ourselves, the Independent Reserve and other exchanges, even the good solid exchanges that are looking to stay around for some time, will welcome it when it finally comes through. But likewise, I mean, I think there's always a sense of people getting a bit concerned when they hear regulation. I think there is this sense of impending doom, like it's going to smother all that's gone before it. But I don't think necessarily that that's going to be the case. And I'm certainly quite positive about the scene here in Australia, that's for sure.
Yeah, I agree with that as well, in the sense that a regulatory body like the Securities Exchange Commission needs to come out with definitive guidelines for a lot of ICOs to follow. You know, are they a sub-commodity, a sub-utility, or a sub-security, for example? I think XRP is currently battling a lawsuit right now that will determine the outcome of whether or not it's a security or a utility token, for example. Now, I think that type of regulation will bring a lot of consumer and investor confidence to the space, and that's what you need to see more big institutional players take that extra step forward. What I really wanted to ask you about was, in particular with the DeFi space, how do you regulate something that's decentralized and not really owned by anyone? If no one owns the network, then how can that be regulated with no access to the code base, for example?
Yeah, this is really exciting. And I love the fact that we now get to discuss things like DeFi and DAO and all these really fantastic concepts as they're being rolled out. And it's a real puzzler. I agree. I don't think any one framework has yet come forward that people can say, oh, yes, this seems to work, you know, best for DeFi. With the scenario that you had indicated when you were talking to Matt there, where people using centralized exchanges such as BTC Markets, Independent Reserve and others to then access the DeFi world, where you obviously have to pass AML KYC through an exchange such as ourselves, but then once you're in the DeFi, you know, you've got that anonymity, is one potential scenario. So that the regulation from an AML KYC certainly will be in place. In the actual DeFi itself, that is for smarter brains than myself to tell you how they're going to regulate that. But also, it's also, I mean, how can you do something like that? It's instantly global, it's instantly international, it's instantly multi-jurisdictional. And I think you're going to be looking at the likes of, I suppose, regulatory leaders and the US, probably out of London. You want to look at where Europe is going, and other major powerhouses of regulation to see how they're going to tackle it. It's really interesting to see what's coming out of Wyoming. And fair play to them, they've had a good punt at it. And I think that that's a really good start to try and tackle some of these issues around DAO and all the rest of it. But for me, I'm quite thankful that all I have to do is look after an exchange and not have to respond to these trends from a regulatory point of view. And all we can do is try and contribute to, you know, through bodies like Blockchain Australia and others, to the conversations that are happening nationally. And that's the thing here in Australia. There are so many top class DeFi projects that need the support and need the surety of understanding where the regulatory winds are blowing. I think the big mistake would be for any jurisdiction, and I know some jurisdictions have taken this approach, even just with crypto, where they've put in some kind of blanket ban. And I don't think that that's a sensible approach. And I don't think that's going to work with something like DeFi. But good luck to the regulators trying to deal with it.
Yeah, I totally agree. You can't hit this space with a very broad stroke. You really need to scrutinize the underlying technology and the potential of said technology without obviously stifling the innovation being born here, but also how do you stop things like rug pulling in DeFi liquidity pools, for example? Right. I mean, it's happening and it has happened. I know of a few people that have bought into something and anticipated that the yields would have paid them out, and then before they had the chance to, it got rug pulled because of a flaw in the code. So yeah.
Do you think then that something like, sorry to interrupt, but do you think there was something like the smart code, those smart contract reviews, those code reviews that are happening, that's going to become a sort of micro industry to kind of feed into all of this and perhaps attach to regulation in some sense?
Absolutely. And in that sense, the definitive guidelines for how the code should be brought about and built and expanded upon with the development, it really needs to be, like you said, heavily scrutinized. You can't just hit it with a broad stroke of the brush there. And, you know, in saying that, aren't we still so early in this space? You know, Bitcoin, I think, has been around since 2011. You know, that then led to Ethereum in 2014, and fast forward close to 7 years later, you've got over 9,000 cryptocurrencies. I can only see that number growing. Wow. And eventually these regulatory bodies that are more or less sitting on the bench at the moment, they really will need to step in. So it's good that you've got that belief, that ideal, and we need visionaries like all of you sort of openly discussing this and maybe even giving them a few ideas to come out with a regulatory framework that benefits the cryptocurrency ecosystem.
As I said, smarter minds than my own.
Oh, don't sell yourself short as the CEO of BTC Markets. Now, I suppose, Adrian, this more or less ties in with both you and Caroline here as you know, leading the front charge for exchange services, not only in independent reserve but BTC Markets. What trends have you noticed with a lot of the accounts being opened? Are they still on that retail side, or are you seeing like that self-managed super, that institutional grade of account and clients starting to show more interest?
I think the main underlying trend that we've seen over the last year or two has just been one of growth. So I guess I'd say the last year was probably our busiest year ever. And I guess I'd pretty much say that every year, except maybe 2017 was particularly busy. But I guess last year was about as busy as 2017, except I think the main difference is now the industry is a lot more mature than what it was back then. So everyone's got much bigger teams and everyone can kind of absorb the growth a lot better, which is great. And I think overall, like I've been in this space now for about 8 years, so I've kind of had a long-term view of all the trends. We're seeing more and more sophisticated investors enter this space. So when we launched, I think back in 2013, 2014, like if you were to go to a crypto, you know, if you were going to go to a cryptocurrency meetup, the people that you'd meet would be a lot different to the people you'd meet now. And I think this reflects in our customer base as well. So we're definitely seeing older customers now. So, you know, back then they were kind of the early technology adopters. Now we're kind of seeing more the forward-thinking investors. You're seeing SMSFs. And yeah, definitely the average age is increasing, as is the size of the investments people are making and the level of, I guess, due diligence they're doing. And yeah, just more mature, more sophisticated investors. I think that's kind of the underlying story.
Mm-hmm. And you were saying independent reserve, and I'm sure BTC Markets would have seen a record number of people signing up to purchase cryptocurrencies through the exchanges. What is the next big thing for you guys? Would you be offering users the opportunity to maybe stake their cryptocurrency in the wallets you have online, or maybe even considering introducing debit cards for them to sync these wallets and even transact with the crypto? That's what this is all about, right?
Yeah. So, I mean, I hate to sound like I'm in an echo chamber, but I think we're going to see the regulation begin to come in Australia over the next year or two. And I think this regulation will really dictate the products that we're able to offer. So, you know, a lot of Australian exchanges would love to offer a richer suite of the products that they're offering, but, you know, the directors tend to be a little bit risk averse. They don't want to go to jail, which is pretty understandable. So you'll find that the offering by Australian exchanges maybe isn't as exciting as that of some other international exchanges who don't care as much about the regulation. But I think as we see the regulators start to catch up to the products that we can offer, we will begin to offer these slightly more exotic things as well.
Great to hear. It's really amazing to see that Australia is sort of really taking a bold stance and adopting a lot of these technologies moving forward, and then offering them to both retail and commercial clients. I agree with you. I think that the way our government is looking at cryptocurrencies, it won't be too much longer before we do start to see a regulatory framework into this space. And moving forward, do you think that's going to maybe shake out a lot of the weak hands here, and then that will cause some volatility, and then might take another 6 months or 12 months for that confidence to come back, and then this next bull market that may come in coordinates with the BTC halvening cycle will be the one that you sort of don't want to miss out on?
Yeah, number go up, I guess. In the story, like, look, we don't really speculate on the price of cryptocurrencies. We just kind of provide people to trade. But there's definitely a lot of excitement in the market right now, and if you listen to the market commentators, I think a lot of people are predicting a bit of a run over the next few months. But let's wait and see what happens.
Yeah. Like you said, let's not speculate. We'll just sit back and enjoy the show and see how it all unfolds. Well, I do. And I suppose that brings me to my next question. And Matt, if you don't mind me including you and starting with you first, and then working through the ranks, do you own any cryptocurrency, or? Yeah,
I do. Yeah, I do. Yeah. I've been, I guess, my background's traditional sort of finance, long time at Macquarie Bank and ANZ Bank. But I first was interested in crypto back in 2013 by a pure accident, actually. We'd sort of put in a trading system into the bank using GPUs, and we're sort of sitting around working out what we'd do with all sort of the computing power overnight. And from that really sort of led to learning about mining and understanding about sort of BTC, and just from that became a lot more interested in just the underlying technology and the distributed ledger technology and just what it does. And again, having been inside traditional banks and understanding the flaws in traditional payment rails and everything else, it became pretty obvious to me sort of fairly early that this was a technology I needed to not only understand, but also to own some of. So like everyone, don't own enough, of course, but that's that's a usual story.
Did you say you were mining in the bank, like using the bank?
No, conceptually, there was no way, right? But
bit of an arrow in the servers.
But it was just, it became a philosophical discussion with the quants in the bank as well. Where, this actually makes a lot of sense. Like, if we could do this, but from just every possible reason you could imagine, it would never happen. But so that's how I got involved, and then invested sort of after that.
Yeah, good to hear. And Fran, if you don't mind me asking you this, in terms of crypto adoption and blockchain being used by non-technical users, would you like to elaborate on your vision for scaling and crypto adoption? What would be the biggest sort of honeypot that would bring more adoption in?
Sure. Yeah. Hopefully, a connection here is stable enough. And thanks for having me.
Pleasure.
Well, look, I've watched this space mature from an anarcho-capitalist dream in 2010 to what it is today, and it's gone through all these epochs where a lot of infrastructure and middleware had to be built out. So in 2017, late 16, we kind of realized that DeFi is going to be a thing. Before that word sort of existed, and what that meant to us was the automation of value, so that you could digitize any type of value, and then you could do stuff with it. Like I could say, pay Griffin $50 if it's sunny next Tuesday. Or you could take a picture of a pet rock and digitize it and sell it for $1 million as an NFT. It's outrageous.
It's
actually
crazy.
I saw an invisible pet rock sell for free BNB the other day. It was literally just a blank picture. So, be careful of NFTs or anything that's gone up sort of 2000x in the space of 3 months. But that's beside the point. The adoption requires infrastructure and solid on-ramps, right? So that comes through the formal conventional ways of having this inside your brokerage accounts at a click of a button, buy Bitcoin ETF, whatever it is, or at a click of a button through something Grammar could use, which is almost where MetaMask and DeFi have sort of gotten to, so that once you hold some crypto, once you've onboarded to crypto, you've got digital value, and now you can tell it to do something like go and earn me more money than my bank is giving me as interest rates. That's why stablecoins in particular are very interesting, because what do we get, 0.5% annual returns or something in your typical savings? You get that almost per day in a lot of DeFi projects. And they're not far off the same risk profile. It just really depends on counterparty risk and technology risk, and even that is becoming more clear. The true adoption will come from the elephant in the room, which is the central banks printing an unimaginable amount of money. It's completely and utterly sustainable, and it simply won't last much longer. So you're going to see a huge influx into crypto just simply because of inflation, uncertainty, societal and geopolitical uncertainty. September and October are going to be the beginning of the brutal period, and I expect to see trillions flowing into anything that can be quickly and easily moved around. I'm already seeing mass inflows into gold and silver and other precious metals, as well as obviously crypto. So I'm sticking with my 112K USD per Bitcoin by December 20th call that I made earlier this year. Just depends if there's anything worth buying by that point in the real world.
Yeah, Fran, that was really eloquently put. I agree with you there in the sense that the Federal Reserve is playing one of the biggest reflation games of chicken that this financial system has ever seen, and that in essence with the money printing and the asset price inflation that's occurring because of that will inevitably force people into hedging their bets. And
it's out of ammunition. It's completely stuck. It can't unwind. It can't print more. It will print more. And there'll be a point where it just collapses. There has to be a new system put in place. And then, we can speculate on what that is, but it's kind of like Plan B is already there. Crypto and programmable money is already there.
Well said. Well said. Now, just on that note, I think Ethereum personally is going to be one of the biggest cryptocurrencies that adds a lot of utility through that alone, through DeFi, NFT platforms, smart contracts, being able to settle vast amounts of money for a fraction of the cost of what you'd see in traditional finance. Do you think Ethereum, as it currently stands, as it moves across from proof of work to proof of stake with the layered Ethereum 2.0 upgrades, do you think this eventually will have the capability to become a large part of our future financial system that turns completely digital?
Well, I think it's already begun. I'm already seeing smart money view Ethereum as a store of value for the first time in years, as opposed to just a programmable sort of money base. It's doing what Bitcoin did in the sense that the transactions are getting very expensive on the main layer. But unlike Bitcoin, we have seen a lot more developers and layer 2 solutions and interoperability solutions. So you've got Binance Smart Chain, which is not quite decentralized enough, to say the least. You've got Solana, which is just proving its throughput at this time. Ethereum is strong and steady. So I think there's a role to play for a lot of these currencies where you might see some that are, for niche purposes, like money remittance or cross-bank, cross-country and interbank, settlement, and others for, dApps of all kinds of dApps in the spectrum that you could imagine that we can't even imagine at this time. But yeah, I just view it all as a sort of 2-decade wave of the digitization of value. And Ethereum has a very strong role to play. I see it being at least 8K by the end of the year. We've been bullish on Ethereum and we're accumulating when it was below $100, and we will continue to support development on that.
Yeah, good. Ethereum, I would like to say is my nest egg too. I wish I could have accumulated a little more of it when it was under that $100 mark. But like you said, there's always new innovations being born. I love that Uniswap and version 3 has just been patented, for example. I'm also a massive fan of Matic, Polygon. I think their scaling solutions with the Ethereum network are going to be very, very important moving forward. And eventually, like you said, the gas fees with the Ethereum network at the moment, I mean, that's the whole point of moving across to proof of stake, isn't it?
Yeah, absolutely. Look, I think that sort of within 5 years, if not less, you won't even know what blockchain or need to know. It'll kind of be like Intel Inside, a little sticker on your laptop, right? And its liquidity will just simply be aggregated and cross-chain and super easy to deal with. So liquidity will just move around to wherever the yields are the safest and the highest. Look, just today I launched something which is the world's first or industry's first fully customizable automated market maker.
Wow.
So just like PancakeSwap or Uniswap, you can actually choose what swap fees you want, and you can choose what to do with those swap fees. You can go and add to your APY or reduce supply or pay affiliates or whatever you want. And we're really surprised no one's done that yet. So I think liquidity kind of finds its way to the most efficient use of capital, just like in the real world. But now it's happening in such a radical hypersonic speed in this industry, and it's really exciting.
So I think we can all agree moving forward that this space will only keep growing and becoming more and more viable as a solution just to transact from person to person, but also settle vast amounts of money moving forward, but also the inflation hedging side as well. That was the reason I decided to delve into cryptocurrency. I mean, you guys all would have had the golden decade and real estate, and my father, who's quite traditional in that sense, wanted me to pull my funds into something like a Vanguard ETF, and that's when I sort of discovered cryptocurrency in early 2017, and I will always be involved in this space moving forward. So it's been such a pleasure to chat to all of you visionaries. It's great to see you leading the charge here, and keep it up, please. I really hope this is the first of many future conversations with all of you moving forward. And thank you so much for giving us your time here today. If there's anything else you guys would like to say or have any, not necessarily advice for our viewers, but in terms of industries to keep an eye on and things to watch out for moving forward, where would you like to guide people?
Okay.
I can jump in that one.
You go, Caroline.
Okay, well, mine's just going to be very simple and straightforward. I think a lot of people, this isn't financial advice. I don't have any financial advisor qualifications. But what I would say, though, is that for a number of people, there's a concern that they've missed the boat. And I think it's to kind of reiterate to people that this is just at the start. There is still time to get in and get involved. And also not to be too overwhelmed by the sheer scale and breadth of the technology and where it's all going. It can be very easy to be, I suppose, intimidated by what's happening in DeFi, what's happening in NFTs, what's happening in all these different sectors. Just start off by getting familiar with the big kind of crypto, the Bitcoins, your XRPs, your Ethereums, and take it from there. And don't feel too intimidated to learn, because that's how all of us have started. And it's still so early in where it is in its adoption cycle that anyone who comes in is still in at the early stages of crypto. So that would be my advice, is not be too intimidated. But Matt, you probably got something far more sage and wise to share.
Oh, of course. No, I was just going to say, no, what I find useful is just getting involved in new stuff as well. Personally jumping in and making the mistakes. I opened an OpenSea account a week before last and just bumbled my way through sort of NFTs and starting to experiment, and I think that applies to anybody, no matter where they are in sort of the journey of adoption for digital assets. It's just experiment. Clearly don't blow yourself up, but just do little bits. Start to understand how how the market microstructure works, how the protocols work, how how different parts of the ecosystem operate. And I think people that are, no matter where they are on the journey, that's once you start doing things, it becomes quite clear to people. It's I shouldn't say it's not that hard, but it's it's rewarding, enjoyable, and hopefully adds to portfolio value.
Yeah, I agree. And I think in that sense, spend the time researching, start with the Bitcoin white paper, even understand what blockchain is, how Bitcoin works as a peer-to-peer network. And I think above all else, patience does pay here. The space is very, very aggressive. I don't think we've ever seen another asset class that's been so aggressive and volatile. So I think you hit the nail on the head there. Don't FOMO, which is the fear of missing out. Start small, get to understand the macro cycles and the structure of this space, and then slowly dip your feet in and see how the water fills before jumping in. Adrian, were you about to say something on that note as well?
Yeah, absolutely agree with everyone. If you want to be your own bank, you really have to take the time and the effort to educate yourself about how to do that. It's not that hard, but it's also not that easy. You don't want to be one of those people trying to figure out the password to an encrypted hard disk. You don't want to be one of those stories. So I think the real key here is education.
Yep.
And the information is out there. There's a lot of information out there. You just need to really take it requires a little bit of effort, but I think it's well worth it. And it's not just education about the cryptocurrencies that you invest in, but also the platforms that you use, because this is an unregulated space. There's a lot of exchanges out there. I'd recommend using one in Australia, because even though the regulation here maybe isn't quite complete, I'm quite sure everyone in Australia is doing their best to do the right thing. So yeah, I think the real message is education.
Yeah, absolutely. And I definitely back up and reinforce that using an Australian exchange, despite the space still being unregulated, you do get a lot of protection with ASIC law here and compliance with the Australian exchanges. So that's good to see. And you mentioned that there's a lot of free information out there. And for some people in particular, the older demographics that didn't really grow up with the new technology, it can be quite daunting. So in the most educational way possible, where would you honestly start if you were looking to get involved in this space?
So we actually have a book that a co-founder of mine who wrote in 2014. It's available on our website. It's actually a really well-written book. It explains basically what cryptocurrency is, what Bitcoin is. It explains the risks, and I think that's a pretty good place to start. But there's a lot of other resources out there. There's some great YouTube videos. Andreas Antonopoulos is one of my old favorites. He explains Bitcoin in a way that I've never really heard anyone else explain. I remember watching him like 2013, 2014 once. I watched him live in Australia, and I just walked out of there and I just wanted to buy more Bitcoin. I just wanted to this guy was just incredible. An incredible public speaker. So yeah, he is definitely one that I would recommend.
Mm-hmm. And Fran, as last but not least, someone who's really involved in the space, literally when it comes to writing code and even building and developing certain projects, where would you start if you were looking at value-based investing and looking for potential investment and growth moving forward?
Value-based. Well, there's a lot of decentralized ETFs coming to market. It's been 5 years building those, so they better be coming to market. Sort of like index-based funds, but you simply buy them and custody them yourself. So you can buy something that gives you exposure to the top projects and, say, the NFT landscapes, if you want sectoral-based exposure and a sort of thematic thesis that way. Or if you want DeFi, we have LitiCapital, again, self-custodial DeFi products where it's relatively easy to just hop in and have somebody else, an entire team sort of deal with the hard yards of figuring out what to buy and rebalance and all the rest in a sort of more active strategy. But yeah, my final thoughts are just simply, I agree with everyone. Education is the most important. Do it quickly, do it well, and don't expect to know everything immediately. It's a journey. And for financial success, just basically read everything the World Economic Forum says and does, and do the opposite.
Yeah, as with the Fed, I couldn't agree more. Listen to what they say and focus on what they actually do when they say it moving forward. And yeah, I couldn't agree more with everyone here. I think this space is just getting started. Don't worry about rushing in too brazenly with everything that you do have. Be patient, get to know the space. Obviously, focus on the education piece. Do it quickly. Use the resources you can. And I think in essence, that's another thing regulations really need to hit the nail on the head there is you can't stop someone coming out with a false announcement that Amazon's going to start accepting Bitcoin, for example. Bitcoin rallies maybe 10, 20%. And then on the day, like a Sunday, for example, when the majority of the regulated exchanges like CME and CBE are closed, the price of Bitcoin goes up 10, 20% because there's less liquidity. Then come the Monday open, Amazon acknowledges that the announcement isn't true, and it just gets absolutely hammered down. So I think regulations need to come in. You need some really powerful guidelines to stop people manipulating it. And yeah, I think moving forward, we've got such a beautiful space here being born. 2 trillion market cap, in my opinion, is still just the tip of the iceberg. There's 50 trillion in the stock market, even more, I think, with FX. The Fed alone has printed, I think, a third or a quarter of the US money supply this year alone, just to stimulate the markets with the liquidity. And I think with the tapering talks that are starting to come into the window now, and then what they'll have to do is obviously take that liquidity out of the market through reducing the bonds that they purchase. And that's more or less the first thing they do before interest rates rise. And Fran, I actually would like to go back to you for this. The Fed has really put themselves between a rock and a hard place. And yeah, where do you honestly see this going, if you don't mind me asking? And that's open to all of you, in particular, Matt, Adrian, and Caroline as well. Where do you think, where's the next step for this entire financial system? Hyperinflation, disinflation, interest rates?
Well, look, I mean, it's just so up in the air right now. They wanted their great reset, and it's falling off. The wheels are coming off all over the show on that one. Just watch Klaus Schwab and read his book, and you'll sort of see the vision that they had for humanity and how they got all the different stakeholders to sort of drum the beat for the last 20 years and really pushing it hard over the last 2 years. Economically, they want something called stakeholder capitalism, which frankly is just a fancy word for fascism. So honestly, I don't know. I expect a extreme volatility over the next couple of months because they're just running out of tape. There's not much they can do. And it just depends on what infrastructure and systems are ready to go to replace that. I would love to see a sort of basket of precious metals underlying some form of new greenback of sorts. But it just really depends on where this kind of world shift from a unipolar to a multipolar order settles itself. It's not going to be quick, so it's going to be chaotic for at least a couple of years. Hence why crypto is doing so phenomenally well at this time.
Yeah, instead of the Nixon gold standard, you have the Biden Bitcoin standard. Matt, yeah, I couldn't agree more with you. Matt, where do you stand with this? Where do you think things are heading at this rate?
Yeah, look, I'm probably not as bearish on global financial system as is Fran. Look, I think the US balance sheet is now on a point where it's it probably just needs to be deflated away over the next 2 decades. It's clearly the size of the sheet can't be taken off. So I suspect that we wind up in a period of just very, very low or zero interest rates for a very protracted period. that is going to just result in, you know, some very strange behaviour, both in bonds, in other, you know, bonds of other governments, so other govies globally. I think there's going to be, you know, very interesting to watch sort of dislocations between sort of US balance sheet and, you know, China balance sheet, for example. Almost unequivocally, we'll see a digital renminbi in the next 5 years.
Yeah.
You know, we're going to, you know, there's, I think the point is it's going to be very, very different. I think this dislocation is going to be very different to the one that, you know, we've sort of seen in the 20s and 30s. I think it's going to be very, very interesting next 10 years.
Yeah, I agree with that. Like you guys all say, it's best not to speculate and just let the market do its thing. And you do have to participate, unfortunately. Otherwise, you will get left behind. And I suppose this is a question for Adrian and Caroline. If you're on the fence with cryptocurrency, but at the same time, you know that banks, you know, with dismal interest rates, and then the inflation on top of that doing everything to corrode the value of that dollar, what cryptocurrencies would you like to start off with, or begin taking the plunge into before you then start increasing that risk appetite, for lack of a better word, with different cryptocurrencies?
Look, I mean, it obviously depends on your risk appetite, but, you know, I think people should learn to walk before they run, and I kind of start with the major cryptocurrencies. So, but I guess by doing that, you're, you know, less likely to have problems with liquidity. You're less likely to invest into a scam. And then I guess as you get more comfortable with this whole space, more familiar, then you can try to invest into something a little bit more exotic. But as you do that, the risk of that obviously also increases.
So in other words, don't start off with a blank JPEG NFT that's selling for about $10,000, $20,000.
I probably wouldn't, but then again, you know, I'm not the best investor. So.
Hey, someone out there thinks otherwise, they wouldn't have bought it. Yeah. And Caroline, just on that note as well, do you agree with Adrian there? Start off with one of the big cryptocurrencies, your Bitcoins, your Ethereums, Ripples, for example. I mean, maybe not Ripple at the moment because they're going through the SEC lawsuit to determine if they're a security. But when it comes to just taking that plunge, do you see that most people, when they sign up to the exchange, BTC Markets or Adrian Independent Reserve, do they buy into something that's caught in a hype cycle like Dogecoin, or do they try and rationalize their preferences and start off with something like Bitcoin or Ethereum?
Sure. Well, there's probably a couple of points I can respond to on that, but probably I would absolutely echo the sensible kind of points put forward here about investment, and obviously all the usual caveats around not a financial advisor, but taking that more tempered view on investment is always a good place to start. And we see that with our investors that come onto our exchange. The majority of them, actually from research, we know the majority of them do their own research. That often used phrase, but they do read the white papers. They do the investigation themselves because they have to, because there isn't many financial advisors that can assist them. Where we found it of interest is when we look actually at SMSF investment activity. And we looked at the top 4 cryptos that SMSFs in particular would invest in. And as expected, it would be Bitcoin, Litecoin, Ethereum, XRP, all the standards. But interchange with that, we would also find hitting into the top 4 would be projects like BSV or ETC or others that would be outside the top 5 anyway on any given month, generally on the exchange. But for some reason, these SMSF investors, and they're moving in relatively considerable shapes, were trying out these other projects, not every month. I mean, the top 4 generally would say the top 4, but they would be interchangeable. And that to me said that these investors, as our research has said, are taking on board to do their own legwork, to get comfortable into these projects before you're putting money in. And SMSFs, the way that they have to operate as well with the risk appetites that they have, you know, that sometimes can be constraints. They've obviously taken a considered view. But to go back to the earlier question where you kind of talked about where the financial system is going. And this is the thing that kind of gets me when I hear Bitcoin contrarians. And and I'm not necessarily a plus or a minus, people can make up their own mind, do your own research. But when I hear Bitcoin contrarians talk about how fallen back to fiat, to the current and existing system always as being the best that we have. History teaches us that money has changed in its shape and value continuously. It's like the purists around language. Language likewise throughout history has changed. Its inherent meanings may not, but the actual words and language that we use has changed all the time. We're always reinventing the wheel. And the people who are like the grammar purists are often the ones that get caught on the wrong side of history. And if you look at how slang has become mainstream, adopted within language, but likewise, if you look at the different currency systems, and more importantly, rather than currency, value systems that people have used to interchange with in the history of economics, that tells us that this isn't anything new. What we're doing with cryptocurrency isn't anything new in the history of humanity. And if you want a use case, you just have to look at countries in the third and second world, where their economies aren't as advantaged as ours here in Australia, in parts of Europe, in the US. They don't have the luxury of a well-formed financial services system that meets all of their needs and is actively looking to develop more. They don't have that luxury. And so particularly as we go into maybe the kind of economic setup that Fran's talking about and that Matt is discussing too, then you see the case of something like cryptocurrency becoming increasingly relevant. My personal view is that you won't necessarily have to choose. I don't necessarily think it'll be an arbitrary black or white system. I think that there will be room for both. But this idea that it needs to be binary and that only fiat can win, I'm sorry, but history tells us that is not the case. Mm-hmm. And so it was kind of dependent on economists, and it's dependent on these economic historians, it's dependent on market commentators to get up to speed with that and to be open to change. Humans don't like change. We all know that. And to the case in point about the speed at which cryptocurrency has come through, it can be really unsettling for people, particularly if you've come from traditional finance and have got all your horses are backed in this one particular race. It can be quite intimidating. But there's some fantastic literature, fantastic books written by esteemed historians. Don't take it from us crypto fanatics, but they will tell you, history tells us the future every single day. And all we need to do is go back and look at what direction that's pointing us in and look at the unique circumstances that we're sitting in, both from an economic point of view, but also geopolitically, and also with the likes of the pandemic that we're all going through, changes in the air. And something like cryptocurrency and specifically Bitcoin, Ethereum and others, they seem to be the future direction that we're pointing in. But I leave it with the caveat that in time, they too shall change. So don't get too entrenched in those and keep your mind open for what else could be out there. That would be my view on it.
Yeah, and I agree with you in that sense too. It's human nature to be resilient to change almost until there's a pivotal moment where your back's against the wall. And Fran, this is where I agree with you again with what the Fed's doing. Something has to change. Everyone knows this can't go on. It's just a matter of what happens first. And in that sense, it's probably not best to speculate. And if anything, this has just made me so much more keen to go and buy and trade some cryptocurrency now. I'm probably going to do that after this. Fran, I'd like to finish off with one question for you, mate. You've got some really nice predictions or forecasts with Bitcoin and Ethereum in particular. Do you think this is the birth of a new asset class taking over, or is this maybe an element of tulip mania through FOMO, or is that maybe certain facets of the cryptocurrency ecosystem that are quite bubbly, like the NFT space, for example?
Well, I like to use the analogy of, think of a highly overinflated balloon A, and a limp, uninflated balloon B. And the most amount of chaos and destruction as if one balloon pops. And so it's much gentler and better if the old world kind of deflates and the new one inflates. And we've been seeing that for 10 years now with Bitcoin. So 10 years is nothing in the space of time. And, I fully agree with the analogy that crypto and money is similar to language and how that's perpetually changing. I think it will be a point when the air gets sucked out of the old balloon and rapidly into the new one, slowly until suddenly. and we're reaching that point through just necessity. So, I mean, I'd like to see some form of new structure proposed years ahead of time. And we've heard about central bank digital currencies for eons. And we're now sort of seeing pilot programs, and they look terrifying, frankly, tied to political and other agendas where people can just literally delete your money if they don't agree with you, if they have power over the people in that sort of heavy-handed way. But I'd like to describe it as kind of a battle between ideologies. So it's not a bubble, it's just simply a inflation of a necessity. And it's a battle between fully unstoppable decentralized financial automata and basically using the blockchain to streamline the old world. But there's too many stakeholders that are made redundant if it's streamlined completely. So CBDCs are basically just centralized ledgers with efficiency gains for supply chain, this, that, and the other, but not for the freedoms, essentially, that's crypto offers. So I like to walk in the middle and do things compliantly and build things that offer people a plan B and avoids the anarcho-capitalist lunatics on the far end of the decentralized spectrum, because a lot of that stuff is exciting because it's experimental and radical, but all technology is weaponized, so you just have to be careful about where each path leads. So absorb as much information as possible from the entire spectrum and then make up your own mind about how you choose to spend your time and capital.
Mm. You've all got such beautiful perspectives. It's been an absolute pleasure chatting to all of you. And Matt, sorry, just one last question, if that's okay, because you're on the front line here with the banks and the institutions. You mentioned something about a digital yuan, okay? And you would have noticed that earlier on in the year, Facebook tried to launch their own cryptocurrency, Libra, but it was not back in Congress, I believe. And I think half the discussion was, if I don't know why I'm getting spam emails for clicking a link, then what makes you think we're going to allow you to start transacting a digital currency, a stable coin through the Libra? Eventually, it becomes a game of someone has to make the first move, and then very, very shortly after, you'll see someone make the second move. Do you think this current financial system will introduce something like a digital dollar that's meant to work cohesively with cryptocurrency, or it's one or the other?
Oh, unequivocally, I think every central bank globally will have a digital version of its current fiat version in the next 10 years, unequivocally.
And if that is true, and I believe that will be true, the amount of liquidity that could come into cryptocurrency would just be absolutely exponential, right?
Look, I think what again, in my view, what central bank digital currencies do for public blockchains is it legitimizes them, and it just brings, I think that's your point, it just brings people into, to the extent that they are not already using what they think is digital money, using fiat payment rails, it's going to bring more and more people into the sort of the digital sphere, and that can only be good. In my view, that can only be good for digital assets, crypto generally. That's again, I don't think there's any. I think it's very, very difficult now to regulate out, public blockchains and cryptocurrencies. I think the clear view from regulators now is this is an asset class that needs to be regulated alongside of, other asset classes and central bank digital currencies as they come online. A couple of interesting data points about Libra, or DM as the artist is now known. A number of the banks that we talk to a lot of banks in a lot of different guises, and what was very interesting over the last 12 months is that the feedback from a couple of banks and their sort of digital digital vertical innovation hubs was that the bank boards were not interested or didn't even have crypto on their radar at all until Libra was announced, because I think that was the money moment that they realized just the penetration of Facebook and what that could actually mean to, frankly, to bank competitiveness and the ability to, move from a, largely sort of centralized onto a more decentralized sort of framework. So they're very interesting, data point from inside the banks.
Yeah, well, I think we can all agree here that the cryptocurrency is the future, and you've got plenty of time to let this space go from a primordial soup into a legitimate asset class. And there's so much innovation being born. And from what I've seen in my time trading, I've gone through 2 halvening cycles now. The pool of the top cryptocurrencies is always changing. You've got your big 4, your big 5, but the threat of innovation alone in this market will always give rise and give birth to new opportunities. And for that reason alone, spend time educating yourself with the technology and the potential that this can have, not only in just the financial system, but almost every system, every digital system that I could think of to date, whether it be social networking, just transacting, and everything else in between. Everyone, to our audience and our viewers, you've been so patient sitting here today. You've got so much time to sit back and get used to this ecosystem and how it behaves. And eventually, I think the more liquidity that comes into the market, the better. The volatility will always be there. But eventually you will notice that with every swing high, price goes higher than the previous one. With every swing low, it's a higher low, and the trajectory of these assets will continue to be up as we move forward. So I just wanted to take the time to thank all of you for watching today, and to our speakers, Matt, Caroline, Fran, and Adrian. I really appreciate your time today. I have no doubt all of you would be so busy with other things outside of this. So your time is very, very valuable. And thank you for letting me have the chance to not only moderate this panel, but also ask you a lot of questions that no doubt our audience has wanted to know or get a feel for, but also allowing me to throw in my own there in the mix as well. So thank you so much for your time today. I wish you all the best moving forward. I'm so grateful. I hope this is the first of many future discussions with all of you. Thank you again.
It's been a pleasure. Thanks.
Thank you.
Cheers.
Welcome again, and it's very exciting to have our distinguished panel today. And as the topic suggests, that all of us are digital asset and crypto fund manager, and I'm hoping to have the feedback, as well as looking forward to learn from each of our panel. And today I'm very honored to be the moderator. Let me introduce myself. My name is Wee Meng. I'm running a family office fund based in Singapore, and we invest in venture funds. We invest into private equity funds, as well as we do direct investing. And I'm a fond believer of venture investor. And with all these crypto and digital assets where it's getting so mainstream, I'm looking forward to also work together with the whole ecosystems and invest to create this vibrant, safe, and high value growth alternative assets to come. So without much ado, let me just allow the floor to give introduction of themselves so that we can kick off this session. So perhaps I would like to invite David first to give an introduction. David, the floor is yours.
Thanks, Wei Ming. So I'm from Monochrome Asset Management, and we are based in Brisbane, Australia, and we are offering a passive investment strategy into Bitcoin. So it's into a wholesale unit trust, enabling people to basically access the digital asset space in a secure, regulated environment. There's not a lot of bells and whistles to what we do. It's just basically providing easy institutional and fiduciary access into a regulated structure here in Australia. And, you know, our view is that there's going to be a need for more regulatory certainty in the digital asset space, and by providing regulated investment vehicles into sort of passive strategies is a good way to help investors in that sort of changing regulatory landscape.
That's good. And followed by Patrick, please.
Hi, everybody. Thanks for joining us. My name is Patrick Tan. I'm from Novum Alpha. Novum Alpha is a digital asset quantitative trading firm. We are regulated by MES. We are one of the first few algorithmic hedge funds that trade exclusively in cryptocurrencies based out of Singapore. And we've been, the Novum Alpha Global Opportunity Digital Asset Fund actually represents the combination of almost a decade worth of experience trading our own monies and our own prop desk in digital assets. And what we've launched is a digital asset quantitative long short strategy with discretionary overlay. So hi, everybody. Excited to be speaking on the panel.
Thanks, Patrick. Irene?
Hi, so my name's Erin Grover, and I started out with a crypto algo fund 5 years ago, and then out of Ireland and moved into just direct client placement. I went through a worldwide search of some of the best funds and did some serious due diligence with my team of advisors who are from the traditional space, working at places like Goldman Sachs and Fidelity, but now they have their feet in crypto too. So after this due diligence process that took about a year, I'm pretty sure I found some of the best funds in the industry. My clients are happy, but the fund that I mainly work with is called Iconic Capital out of Amsterdam. So they're 4 years running and strong. And then I am about to launch a Bitcoin ETF. I cannot say anything more than that. But when it's more public, I will follow up. And then I support people to invest in, VC that is anything related to blockchain and impact in society. So for example, I'm bringing investment to a upcycled paper company in India. And the agreement is that they will put their supply chain onto the blockchain to receive the investment. So that's just a nutshell.
Excellent. I think looks like you are very much a blockchain advocate. Excellent.
Yeah, I'm busy.
Good. And Dominic, please.
Yeah, hi everyone. I'm Dominic, based in Germany, and one of the founders of Blockwall Capital, which is a blockchain VC platform, basically. So we try to invest along the entire scope and offer investors also that access along the entire scope of blockchain. So the first fund we set up was pure crypto plays, so decentralized networks, protocols as such. And secondly, we set up a fund which is a pure equity investment scheme where we invest in startups actually using blockchain technology. And the thesis is around that on the one hand side, the market is becoming more institutional. So we see a lot of necessary services developing around that. And on the other hand side, we see B2B SaaS as a very interesting play where startups are using the toolbox which blockchain offers to solve critical issues. And that can be from supply chain to mobility in the energy market. And we see that very holistic. That's also why we set up the Blockchain Research Institute here in Europe, where we engage a lot on the corporate side to see where the real market need is. And I'm heavily engaged in different consortia, and venture is a passion of me. That's why I'm, for example, also a member of the Kaufman Fellow Network, which is a global VC-focused network.
Yeah, Dominic, we know you've been doing a lot of work, and you should come to Asia and Asia Pac and help us to contribute more in this part of the world.
Yeah, I hope that I'll be able to travel more in the future.
Good. Yeah. And last but not least, our Queenslander.
Thank you. So my name is Grant Colthorpe. I'm the CEO of Mind Digital, but I came from previously have held roles trading interest rates at an investment bank, previously traded at a proprietary trading firm, trading interest rate relative value structures, and then also worked for Australia's largest insurance company, running again their balance sheet and running all their basically head of trading and hedging program there. Since end of 2018, I've stepped full-time into crypto, came into crypto in 2016, have been actively involved across the entire space as an investor, but also as a trader. So oftentimes as Mind Digital, we will be, the start of this year, we were oftentimes in the top 10 volumes traded on Deribit and Ethereum options. And I'm also personally an equity investor into a leading crypto multi-strat hedge fund called Orthogonal Trading.
Sounds interesting. So I think all of us seems to be really excited into this new field of the crypto space. And we know that the past coming to 2 years, we are all very much in the lockdown. And therefore, a lot of the due diligence has been very much limited. So just perhaps share with the floor, what do you think about this COVID-19? How does this impact the investment strategy of yours? Anyone? Maybe Patrick first?
Yeah, maybe I'll take that. So we got started in cryptocurrencies as far back as 2012, not because I'm particularly astute or anything. It was just by luck. My brother happens to live in San Francisco. He heard about it from some friends in the Valley in 2012. Told me about it. I thought it was a scam. Only really started reading the white paper about 10 months after he recommended I read about it. So we've been in this space for coming to a decade, and we've lived through many cycles where there have been periods of introspection because you dedicate your life to this space, and then obviously with the market, which it's doing right now, even as we speak. You do face these periods where you go like, have I made the right decisions in my life? I'm committing to this thing, and this thing looks like it could be gone tomorrow as an asset class in general. So what I think definitely, at least in terms of our business, was that the pandemic just provided us with this incredible opportunity. Of course, the pandemic was unfortunate, but it provided this incredible narrative, which I don't think we had prior to this point, because prior to this point, you could just look at it as one of many different speculative assets. But when now you have the situation where you've got this unprecedented flood of liquidity, both from monetary policy, from fiscal policy, when you have investors getting free stimulus checks, and then now starting to question about the debasement of fiat currencies, which, mind you, all of this is still driven by narrative. That actually creates an incredible narrative from the investment perspective as to why this becomes then a considerable investable nascent asset class, a narrative which you couldn't possibly or probably carry if not for the fact that we're living through such extraordinary circumstances. Now, I don't want to say that the pandemic is good in any way, shape, or form, but in terms of the leaps and bounds, in terms of the advancement of this industry, when we were looking at it in 2018 during the depths of the crypto winter, when Bitcoin was about like $3,400, when nobody wanted to look at it, there weren't many clear catalysts as to what would lead it to push forward and then emerge and evolve as an asset class at all. And the pandemic, ironically enough, was a twist that the plot needed for people to even look at it and take it seriously. And what we've seen then from 2018, which is around the time when we wanted to start a hedge fund, but the service providers really just hadn't caught up to speed to provide us with those institutional grade protections that we now take for granted. And we've seen that movement and that transference. So I don't want to say that the pandemic is good in any way, shape, or form, but in many ways, the pandemic is a blessing that this whole space needed.
Correct. Yeah, fully agree. So what about Irene? You've been traveling a lot. How does it hit you in terms of your investment plan?
Sorry, how does it
affect you with these COVID restrictions? And
well, in my travels, it's just the usual day-to-day of multiple PCR tests. But I mean, as far as my business, I agree. Like, it's an amazing that the COVID has been a silver lining and a complete blessing. Just because it's like, it kind of sifts the oil from the water. And one of the things that happened for me in COVID is that people usually have asked me in the past, like, what's your doomsday scenario and where will my assets go? Will they go down to zero? And March of 2020 was a great test of that. And a number of crypto funds failed and closed down, especially the crypto algo funds. So luckily the main fund that I work with did really well in March of 2020. So that's been huge. I hope that helps.
So, what about, I know, Dominic, you've hold quite a number of American portfolio as well, and you've been investing cross-Atlantic. And so how does it affect you?
Well, we are basically a long-term investor, right? Our first fund is on a 6-year period. Our second fund is on a 10-year period. So we take a very thesis-driven long-term approach. Many of the assets or investments we do, they aren't liquid at first, right? And we still have a lot of illiquid assets in the portfolio. But for us, we always try to keep enough cash reserve so we can reinvest in such times. And for us, it was a great opportunity to double down on those assets we really believe in. And it was an opportunity. On the other side, it made it very difficult for due diligence. So normally we would visit the teams, we would meet them in person, we would do intense workshops to kind of get to know the team better. That definitely that was a twist. And also for fundraising itself, we kind of look to enlarge and diversify also our LP base to go more abroad. And in the end, that makes it also difficult if you can't travel. An LP is very unlikely, if it doesn't know you before, to make a commitment there. So it kind of moved back the focus on a more geographical European level where the cross-border is very close. Zoom made a lot possible.
Right.
Yeah.
And David, you're based in Sydney, yeah?
In Brisbane.
Brisbane. Okay. So how does the Sunshine Coast hit you?
Well, we've been pretty lucky on we haven't had very many lockdowns here, so it hasn't been much like a pandemic like most of the rest of the world have experienced. So we've been quite blessed, but that hasn't really affected our business so much. But that's just been one of the upsides of living in Queensland. So that's probably an advertisement for coming to Queensland when the borders open, more than anything. But in terms of sort of how the pandemic has affected the space more broadly, I mean, I'm sort of the jury's out to me as to whether this is just an experience of a liquidity injection, therefore rising tide lifts all boats, not just in the crypto space, but in the venture space more broadly. So, we're only invested as a business in Bitcoin, and it's a Bitcoin tracker fund. And personally, I take comfort in that simply because there's quite a community of Bitcoin supporters that are effectively dollar cost averaging into the asset class on a daily, weekly, monthly basis. And if you look at the sort of supply and demand dynamics of that, well, we know what the fixed supply of Bitcoin is, and you can roughly estimate what the believers in Bitcoin are doing every time the price of the Bitcoin falls. So, in the event that the tide goes out from a liquidity perspective, I personally feel reasonably comfortable investing in that as an asset. I'm not as confident or certain. I mean, nothing's certain in this world, but I'm not certain what an impact on the broader sort of asset class will be in the event that the liquidity rug gets pulled from the space or from the world more broadly.
Right. So, Grant, would you agree with that? How is this?
I think there's some really good points that have been made there. I think, as David said, I think on the aspect would a broader liquidity timing hit the space? I mean, obviously, I think that's a yes, but how exactly that would trickle down is to be seen. I think the crypto ecosystem overall, those become certain pockets have become much more resistant and much more ability to have some real have real liquidity and activity ongoing in them, which makes them less susceptible just to these one-off liquidity events. But in saying that, I mean, we constantly see that occur, right? I mean, we saw it even last night. We just saw that the market can gap out and have really large moves on the basis of very, very little. So, I think we live in a asset class that is, the best, almost, no offense to anyone, it's almost schizophrenic, and it is still trying to understand its behavior as an asset class. As a person who worked a lot in his career within tactical asset allocation, building those types of models it's not an easy asset class to describe. Obviously, from a multi-generational investor point of view, like yourself, it makes sense that you need access to it and exposure to it. But how you model that within, say, an active multi-asset portfolio is pretty difficult. I think for most people at the moment, it comes down to their liquidity profile, their age, their income, etc., is how much they can really, access it and get into it. I think for someone who needs to get protection against, potentially long-dated cash flows, and you can stay in it for a long time and not have to realise it, I think it's a fantastic asset class. I think for those who require cash flows on an ongoing basis and need those cash flows to meet liabilities, it's probably a very, very less appropriate asset class.
Yeah, absolutely. Now, I think, if you look at the overall investing strategy, I think you can't put, all these eggs into this fast-growing asset. Yeah. And at the end of the day, we still have to diversify ourselves. But I think seeing that, the market is towards so much the growth in this space, and this growth seems to be very consistent despite a lot of fluctuation. So if the retail investors are listening to us today, okay, as a professional investor in this space of us, and would you be giving perhaps your own feedback as to will you be, if you are a retail investors, be putting more money into this area?
I think that's if I could there, I think that's an interesting question. Being a regulated hedge fund, we can only really cater to accredited institutional investors. I mean, that's the law. And I just want to take up something that Grant had said earlier with regards to retirement obligations. It's interesting because I just got off the phone earlier this morning with the prospective client, and he's actually quite a senior gentleman. And he's obviously a retiree. He's a high net worth individual, and he told me that was his first video call he's ever made. So and clearly somebody who's just done his first video call. This is not somebody who's going to be having a ledger or a Trezor or something, stashed away somewhere. He said that, he's never used he said he was introduced to Zoom, but somebody had to set it up for him. And this was his first Google Meet call. He felt really accomplished having done it. And now he wants to invest into a crypto hedge fund. I said, that's a huge leap. I mean, like, we're talking about like walking on the sidewalk to flying a spaceship. And I said, this is incredible. And I said, my hat's off to you, because you're quite clearly quite forward thinking. And that's probably what's helped you. He's an Australian as well. And I said, that's probably what's helped you do so well in your life. And he was like, yeah, I mean, this is an interesting asset class. I heard so much about it, and I want to get involved and engaged in some way. And you know what, I'm willing to stomach the risk. And I think that's to your point, Wee Meng, in terms of like whether retail investors have to look at it. And there's a good reason why so many regulatory authorities protect retail investors from these sort of exotic instruments, simply because is there a non-zero chance that you could lose your shirt on this? Absolutely you could. A non-zero chance doesn't mean that there's a high probability. It just means that it's non-zero. So we've seen, and as we've lived through, as all of us have lived through, the crypto winter of 2018, surely at some point in time, because you'd not be human if you didn't do that, you would have asked yourself, it's like, did you necessarily make the right decisions with respect to this space and investing the time and effort and money into this space and to get involved in this space? And for retail investors, I think oftentimes, but we're seeing a change in that. We're definitely seeing a shift, but oftentimes there's this mismatch expectations because of this whole excess of liquidity. You have all these meme stocks and stuff like that. People have misguided expectations, as opposed to when they look at cryptocurrency, they just think of, I want to get rich quick. If you're going to get rich quick, then you're just going to lose it just as quickly as you approach it. So I think with respect to retail investors, I think it does well for you as a retail investor, just with any other investment instrument. It could be property, it could be private equity, it could be anything else. You do need to invest in the education first before you then make the investment. And if you can be bothered to take the time, I mean, the Bitcoin white paper is like all of 8 pages, and it's pretty easy reading. So even if you're not technically inclined, you at least you'd understand the game theory that goes behind it, because that's pretty self-evident from that in itself. So if you invest as a retail investor, and if you've invested time to do that research, and I do know of retail investors who do very well trading off their own cryptocurrencies as well. And it doesn't mean that because you're a retail investor, it means that you're not going to do well. It just means that, you have to approach it as you would approach any other investment class, which is to take an educated, a rational approach to it, see where it fits into your portfolio. If you want to go sort of like balls to the wall and go all in on this thing, then you have to accept that there are going to be consequences to that, as with anything else. So I understand where regulators are coming from. This is a particularly challenging space to regulate. It's not straightforward. There aren't any, even look at what the FCA did with Binance. They kind of like put up their hands and say, you know what, guys, we would love to, but we really can't regulate this thing. This amorphous, decentralized entity that exists everywhere but nowhere. We're doing what we can, but really, you guys are on your own if you go into these things. And I think that's fair. I think that's all a reasonable regulator can do, because it's honest. And I think that the regulators need to do what it takes to be honest about that. So I think from a retail investor perspective, you have to understand what your liquidity needs are going to be like for the next 3 to 5 years. Because if you're going to start putting in significant amounts of investment into this thing, you've got to recognize that you might not be able to get out. It's like the Hotel California, you can check out anytime you like, but you can't leave. So that's something that you have to look out for.
Yeah, absolutely. Fully agree. But, given this post-pandemic, the case that we see is a lot of retailers are banking on this big time, right? I mean, income, revenues, all these things has been all affected. Jobs is at stake. So the only way for them is to get into the casino and play like a casino, right?
I can see the temptation, but I mean, to be fair to these retail investors, it's not just them. The pension funds are looking at it as well, simply because, you built your pension around the fact that your pension obligations would be able to be paid out on the fact that US Treasury, a 30-year, 10-year US Treasury would be paying out 6% per annum. And now it's paying out what? 1.37%. So, and that with mounting retirement obligations, you see pension funds themselves heading into the casino as well, taking on greater risk. So how can it would be hypocritical for an institutional investor to then say, look, hey guys, we're taking these sort of risks with your retirement portfolio, but no, you guys stay out of the casino.
Correct.
Which
what
I
do
think.
You say, Grant? Sorry.
Sorry, Wee Meng. I think that talks to that idea that the space is going to get more heavily regulated. I mean, it has been a retail-driven market in its early days, and now as you described, there's more and more people sort of turning up to the casino. And, you know, the regulatory sort of purview has always been about, you know, the law around property rights and consumer protections. And that all kind of is directed at the retail part of the market. So to think that this space, the regulators are going to put their hands back and not regulate, I don't think is realistic. And I think for the space to grow, institutions require more regulatory certainty. And you certainly in Australia, we're seeing that coming. You know, with the ASIC consultation papers and the like, we're seeing more eyes on the space with the view that it will become more regulated.
Correct. So, sorry.
I think also
Dominic, please.
Sorry. I also think what we mustn't forget, if you look at of course you have the financial upside, but at the moment we see a lot, and that's also, especially if we look at some business models. Let's take, we looked at one European African remittance business, for example, and the effect and the impact for retail using crypto in that sense to be able to pay remittances between countries. And in this case, it was 500 million in remittance payments between UK and Nigeria within the last 12 months. It's incredible what that can have a positive effect on the people actually using it. And they just come into contact with crypto because it solves a major issue. It helps them to reduce the fees. It helps them to avoid transaction risk between, for example, pound and naira. And that is a huge effect. And I hope that we see more intrinsic usage from retail, and we see those business models really work. And I think that is the real proof that crypto is more than just a speculative casino, and that it can be used for good. But in this sense, also regulation is necessary, right? There is a lot of malicious acting in this space. And if you do it right, and if you take the right regulation from a company perspective, then retailers are, of course, more protected. They can really enjoy that impact it then offers.
Yeah, I'd like to add to that. This is why I do my due diligence for my clients and everything that I'm involved in, because I care and I want to protect people. And now I have more and more of a public platform. So I have to live up to that, tenaciously, pretty much. But there's some really cool products out there. And I, other than working with crypto funds, I really care about transactions and remittances. Electroneum is popular, a popular app, and people are using it all around the world. Just some statistics, just so you know, half of the world's crypto users are in Asia now. And of course, Nigeria is massive, where adoption is the highest amount per capita over the past year. But there's also a product called Cello that's being used a lot for remittances and the unbanked. Electroneum is using European standard KYC AML, just so you're aware. So they're doing a lot of innovation for the unbanked to even be able to go through the KYC process.
And this is, I just was yesterday at a circular event of BMW Group here in Munich, and they recognize this potential, so that you have this massive amount of buy-in from corporate side is incredible. For example, Deutsche Telekom here is, and T-Systems is one of the biggest validators in Polkadot network, right? And you have this, if you look in the innovation laboratories, what is happening, and you see more and more spin-outs out of these corporates, great ideas, great companies in the blockchain world. And we've been talking a lot with Bosch, for example, with Siemens, with Novartis, And many of them, they invest in both, right? They invest in startups, they invest in token, and they understand the intrinsic value which is in these tokens. And so there, I don't see it so much as it's of course you have speculation on top, and you have volatility, which helps many business models work. But we're past this point that we're discussing about intrinsic value of some of these protocols.
Yeah, I think the whole tide is changing towards positivity, and this is all a good sign. But again, there's so much of this regulatory issues, right? So I think why don't we spend a bit time talking about the regulatory trend? We know China is coming big, has really done a big wave of this whole thing. And how do you guys see this whole thing is emerging? Maybe start with Asia Pacific, and then later we can get our European colleague to also talk about it.
Okay, so I'm going to take it that Asia Pacific is probably here. I think that the Singapore government model is probably one of the best sort of examples of test case studies as to how do you deal with something that is not just necessarily from a regulatory perspective, but from a technological perspective, difficult to manage. I think it's if you were to find its analog in traditional digital technology, the best analog would be the internet. It's like trying to bar access to certain sites. It's trying to censor your citizens or your user or your user base from accessing certain content that you don't want them to access. Now we know for a fact that many countries do limit and do censor their internet access, and Asia is one of those regions where that's probably more prevalent than perhaps our colleagues in the West. But that having been said, that's why crypto and blockchain is particularly a tricky nugget to manage from a regulatory perspective, because the blockchain is censor proof. You can't censor it as long as you've got internet access. You can access the blockchain. You can conduct peer-to-peer transactions, and that's what makes it a particularly difficult thing. Even with centralized exchanges, we've seen, even with Binance and stuff like that, even when regulators so-called go after Binance or some of the other exchanges, they find, and once they start to unravel and dig deeper, you find that, hey, actually it's kind of difficult to go after them because of they have this tendency to hop jurisdictions. It has no corporate headquarters. It's a completely new way of doing business, which regulators are just kind of trying to wrap their head around. So the example that we look at least with the Singapore government and the Singapore regulators, how they look at it, I think it's a very pragmatic way to look at it. It's a bit like taking up the Hippocratic oath that doctors take. First of all, you want to do no harm. So as you regulate, you want to ensure that your regulation doesn't harm innovation, doesn't harm the ability of your citizens to use the blockchain for good measures, to do remittances in a cost-effective way, to innovate. So as a regulator, I think you take that first view and you recognize, okay, first let's do no harm. And then after that, let's try to go on and move further and see how we can do preventative work to prevent from harm from being wrought upon it. So what do some jurisdictions do? So like, for instance, Hong Kong just recently made it a requirement that you need to be a professional investor before you get involved in these assets. And that's fair. I mean, because you're saying that, these are investors who presumably have done their homework. They can absorb the losses as and when they do occur. So you protect your retail investors from the volatility and as well as the losses that could occur in this space. So you've seen different countries adopt different approaches. If you look at Vietnam, there were some very large scale scams that occurred in Vietnam. $750 million, essentially, long story short, it's just a Ponzi scheme. Okay, so we saw that happen, but that in and of itself did not dampen demand for cryptocurrency. In fact, Vietnam is the number one adopter of cryptocurrencies in Asia. And if you look, some of the biggest projects, NFT projects like Axie Infinity, is headquartered in Ho Chi Minh City. So we've seen some of our best developers that work for us in Novum Alpha come from Vietnam. They're based in Ho Chi Minh, they're based in Hanoi. So we've seen that they've actually improved in leaps and bounds their technological capabilities. So regulators have to balance that portion which is like, help providing their local populations with access and opportunities, and at the same time with the investor protections. I think in that sense, obviously coming from Singapore, I'm going to be slightly biased, but I feel that our regulators have done, they've approached it pragmatically, as always the case with so many things in Singapore, and that's how. I mean, there are different spectrums. China has gone all the other way, completely banned exchanges, banned ICOs, banned trading, banned everything. And yet we all know that so many Chinese still gain access to these exchanges and still do the bulk of the trading offshore or through the VPNs or through so many other conduits to gain access to it. So I think it's better for the regulators to say, look, you know what, this is a tough space. Let's work together with the stakeholders as opposed to alienating them and pushing them offshore.
Yeah, I would agree with that. I don't always see them working with innovators, and I'm very critical of my birth country, America. And that's, honestly, it's I wouldn't have the career that I have if I had stayed in America. I'm highly concerned right now about what's happening over there as far as the new stimulus bill they're trying to get through. If you guys are aware, they had some languaging that came out making it that if you're a developer, that it was a little ambiguous, but it could make it that developers would have to become broker dealers to even be developing on the blockchain, which absolutely makes no sense. It's like saying if you're a quant developer, for a traditional fund, you should become a broker dealer. That's not what they do. So I definitely have concerns, but I also welcome regulation to take care of investors because that is important.
Yeah, I think it's been very mixed, and I think as Patrick points out, the Singapore model I think is by far the best model we're seeing at the moment. The Hong Kong model maybe potentially too restrictive, and then I think very much as Aaron points out, the US model with the potential rules there is just idiotic and makes it impossible. I think the whole thing is it's really super interesting out of it. And this is a personal thing where it's been something on my wall for the last 6 months is that DeFi will be the answer over the next however long, but I think 3 to 5 years minimum, and that is the amalgamation of centralized KYC elements with DeFi elements, and I think you'll see that that will really take off. I think that is potentially coming back to the question before, Weiming. I think that is the one aspect where you can potentially see some retail flow into the space, and especially into the sophisticated managers, is through that type of platform. So we're incubating a platform at the moment, which will not be obviously technically, within Australia. It'll be a BVI entity that will issue the platform, and on that platform, it will have first-class hedge fund managers from the crypto space that users will be able to access. And from that point of view, we are using essentially regulatory arbitrage. We're using the benefits of blockchain and of crypto, and potentially being able to bring, as I said, world-class product that is that retail users are excluded from to them via an app, which I think that's going to be something that's very interesting. I think we can just see that is going to become. I think it's interesting. So Dave and I have known each other very well now for almost 5 years, and I look at the situation that Dave's in, where they're developing a high-class, excellent product here in Australia. It should be an ETF. It should have been granted the license for the ETF already. The fact that it hasn't is quite problematic in my view, because why should it get that? Well, because it's offering retail users a great way to get Bitcoin exposure. It's being managed in the right way. It's got great technology behind it. It's got people behind it who are serious persons who have invested a lot of their own money and time into the space and the fund. So I think that's an unfortunate thing. I think the regulatory space, the Chinese crackdown, I think was very, very interesting, unexpected, obviously, but also the way that it came about, targeting both users and miners also was quite unexpected. I think Europe's a very interesting case where obviously the UK authorities have been, seemingly quite negative towards it. They've very much taken the viewpoint that it's a CFD-like product and the person involved in it is CFD-like promoters and operators, and therefore we're going to apply the CFD restrictions that ESMA and the UK have put in place now, which has really killed the leverage trading industry over there. But the funny part is it doesn't stop leverage trading. All it does is it just turns again. Leverage trading industry has turned into the DeFi before DeFi existed. It's just a whole bunch of guys run these brokers and exchanges out of God knows where, and people still send us money. We've literally in Australia had a massive round, like we're talking about before. Patrick's talking about a scam that went through Vietnam. Australia at the start of this year had a incredibly large, sophisticated identity theft scam that came through. And the reason was that most of the people getting scammed were getting told they're sending money to, St. Vincent's Grenadine and other, small nations where there is no licensing regime. And people still send the money there because they just want access to these opportunities. So, it's the regulatory environment. I think everyone on this panel is come from a, very, very high-end professional background. We understand how regs work, why they work and how they should work, and why they're good for investors overall and why they're good for the market overall. I mean, again, as a person who, hopefully sees that this is my retirement industry, I'm all for regs because they're just going to get more money into the industry faster, and that's great. That's great for me. So, but I think we just need to make it that they're fair and good for retail users so they can still get access to this high-end product and the high-end persons and creatives that are out there. I think that's the best part. That's one of the best parts of this industry is how just the talent that's come into this industry, like Axie. Same like Patrick, I've been involved in that. It's something I've watched very closely. And as you said, the involvement of Vietnam in that project's blown me away. The amount, how good the quants and the devs out of Vietnam are is first class. And it's, for a country that is really developing itself and bringing itself forward, the schooling, all the things there that other countries should aspire to. Other countries who are in equivalent scenarios should say, that's a great model. We can do that. We can become a powerhouse because of crypto and because of blockchain, and hopefully countries allow regulations to allow that to occur.
Yeah, Grant, you're lucky that the Australians are seeing this as retirement. I think Southeast Asia was seeing this as livelihood survival, just another dollars for the bread,
Yeah.
Okay. Yeah, but I think we'll see this more, and this will come in more and more with NFT. You see the next generation of the people are now banking on their savings from their parents, or they are looking at it as not just as an investment tool, but money-making tool via the NFT gaming platform, right? So with this trend, I think, in my opinion, is going to be more extreme, and this is worrying. Of course, also on the other hand, is accessing to more opportunities for the young people. So how do you guys see this trend emerging, and what is the kind of risk that you had observed?
I think maybe to start off, also maybe in combination to the point before. So from European regulation, this new trend definitely makes it even more difficult for regulators to grasp it. In Europe, they're still discussing frameworks to understand the existing market. So this will definitely not make it easier for them. And the NFT space and the DeFi space is a very, very interesting new development. I mean, it's been around for quite some time. I see that there will also be discussions on efficiency. At the moment, many are still working kind of with Ethereum. Again, there will also be some efficiencies happening. And I think the risk is that maybe as it is such a new form of the market again, it will be overvalued in the beginning, and there will be better NFTs coming, more sophisticated, which bears the risk that those early days kind of are devalued then. So that I think there we will see on the technological side also a lot of innovation coming still.
I think just to add on to Dominic's point, when it comes to NFTs, this technology, the concept of having NFTs is not new. If we go back in time all the way to original Bitcoin, the idea of colored coins, so that you have special colored coin wallet addresses, that was already something that was mooted in the very, very early days of Bitcoin. So the concept of NFT, the ERC 721 protocol standard, none of that is new. What we have seen that is new, and which is perhaps the most important thing with respect to NFTs, is that you have a storied auction house like Christie's now auctioning off a digital NFT. Now, NFTs have the capability to create digital scarcity in what we have come to take for granted as digital abundance. Because a Control-C, Control-V, anybody can copy and paste anything. And now you see that people, investors, traders are willing to put real resources just to prove ownership and authenticity. Now, mind you, that doesn't mean that you've proved scarcity, because anybody can copy Beeple's the first 5,000 days. Anybody can copy that. Replicator, anybody can copy that. It's just any of the, even the one that Visa bought with the red lipsticks, I think it's CryptoPunk 7610. Anybody can copy that. I've got a dozen on my desktop. It makes no difference. But only Visa can own the original NFT. And what we've seen is that there's this shift, this perceptual shift, that people value that. It's a bit like, when China first started off, and everybody kind of knows that China was very famous for the production of inauthentic designer goods and labels. But that economy very quickly moved away from it, because the wearer of such articles and items knew that they were not wearing authentic items. And you've seen that as a society, as economies develop, there is a greater premium put on authenticity, and that's where we see that value proposition that NFTs provide. But that having been said, and again, we come back to regulation. So clients of ours always ask us about NFTs. So I always say that, look, approach NFTs as you would approach art. If you like it and you're happy to part with that amount of money to say that you own that, then go ahead by all means. But if you see this as some sort of speculative play where you're looking to bet on a Monet or something and expect that Monet is going to quadruple or quintuple in price, then you have to recognize that is a speculative gamble. That's not an investment. An investment is where you can have sort of like predictable yields. You can project 3-5 years ahead of time where you expect it to see, is it inflation protected and blah, blah, blah. But with an NFT, you just don't know that. So you've got to like it. You've got to make sure that this is something you are comfortable with, because you might end up owning it for a very long time and you might be the only person who actually values this. Now, then we've had clients who approach us as like, could you then tokenize real estate assets as an NFT, which is, again, the tokenization and fractionalization of rather illiquid assets, including private jets, art, real estate, anything else which you couldn't ordinarily fractionalize. I always stress to clients that the tech stack is not the difficult portion. It's 11 lines of code, essentially. It's not rocket science. But the difficulty is that, what about the legal stack? The legal stack never catches up. The legal stack is always 10 steps behind. So let's say now you own an NFT that's a fractional ownership of, say, the building that I'm sitting in. What does that mean in a legal perspective? If you brought this claim in court, if you brought the claim as a minority oppression, what could you get done? Which court would then enforce to say, hey, you know what? This NFT holder's equity and legal rights, beneficial and equitable title to this property has not been enforced. But and how would it stand? So when it comes to NFTs, it's going to take quite some time, I think, for the law to catch up and then recognize the technological potential of NFTs. But I think that at least from the art perspective, I know of teenagers who paid thousands of dollars to buy NFTs, and I understand that because I'm a gamer myself. I play Warzone, so I pay tons of money on all those skins just so that my character looks different. And it doesn't make sense, but it makes sense to me because I want my character to look different. So if you're like me, then you'll get NFTs. But if you're not into that sort of thing, then and if you're really looking at it as just like a speculative investment, then recognize that that's what it is. It's a speculative investment which you could probably lose everything on. But for me, I appreciate the aesthetic, so I think that's what I'd say.
Wee Ming, I'd throw one other bit in there around them. In terms of what it means to the ecosystem more broadly. I mean, you mentioned at the outset about NFTs being in the gaming space originally, and just what that means for adoption. Like, I personally invested in Bitcoin back in 2015, and then by about 2018, I actually started to get annoyed because I couldn't see how Bitcoin was, from transactional perspective, was going to get adopted. And that's when the gaming NFT started to make sense to me, because I could suddenly see these digitally native kids engaging, wanting to transact or transfer value of the skins they buy inside their games, etc. Like, there was not a lot of harm inside that space. That originally there wasn't a lot of money being transacted, but there was a lot of adoption, or the potential for a lot of adoption. So going from an ecosystem of 20 million people to 200 million people very quickly using this blockchain technology. So from that perspective, I personally think it's a great thing. But of course, as an investor, it's a very different kettle of fish. Like, there's a risk spectrum within the digital asset space. And obviously NFTs in their current form are at one, very extreme end of the risk spectrum relative to some of the other more regulated or more well-known assets like, Bitcoin and Ethereum, for example. So it's just kind of like understanding where these things fit on the risk spectrum within the digital asset space. And there's room for everything. It's a, broad church. But from a regulatory perspective, the more money that flows into NFTs quickly, the more the regulators will have to sit up and pay attention because of the risks to the consumer.
I think it's an interesting. No, that's a really interesting question. I think to be honest, I think a lot of regulators, in best way I can put it, have snookered themselves. So Australian regulators, for example, are a good example of this, where we've deemed Bitcoin to be regulated alongside gold, and then you cannot, from the point of view of an artwork, of course, that would be, at best regulated alongside a something like gold or Bitcoin is in Australia at the moment, and therefore that extends into an NFT. Maybe you can make an argument that it's some derivative or something up, but realistically, it is not. It's a claim, or it's a representation of a physical good, or is a physical good to the extent that it is, on a USB stick, or it's being shown in a gallery via a smart frame. That is the asset. At that point, it is trading in an asset, a physical asset. And the world regulators have always been obviously very afraid of trying to regulate the trade of physical assets, for the purpose of the fact of the matter is the largest speculative market in the world is the property market. Most people might not ever own equities or own FX or gold or crypto or anything else, but they always at least oftentimes they'll own a house and they'll try to speculate upon that house. And so at the moment where NFTs very much sit is in that real world good sense. And I think, it's a real conundrum that they're going to face where you do that. Because I cannot, as a hand on heart person who thinks that I think, like, we've touched on many times here on this panel, like, no one wants to see, investors suffer loss for no good reason in what's a speculative bubble. And, as a person who, myself, I wouldn't say I'm hugely involved in the NFT bubble, but, and definitely somewhat. But do I know some people who are? Yes. Do I know that guys are at the top of the ecosystem? Yes. Are they the smartest guys in the ecosystem? Absolutely. Do they know how to play every game known to man to, move prices in their way they want? Completely. So we're talking about, potentially, retail level persons being involved in, the best way I can, put it, as I always look at financial markets like an ocean, right? You've got, the whales are at the top, and they, cause some splashes, might hurt some people, but realistically they die. The sharks eat them, and then the sharks are the top really of the ecosystem, and then there's the krill, et cetera, et cetera. You need everyone in between to be a good ecosystem. Well, the problem at the moment is that the sharks are definitely in the NFT world are very aggressive and are very skilled at being sharks, and that's going to end badly for, I think, majority of NFT investors. Patrick's point, though, I cannot stress enough, the same thing. If you like the artwork, if you like the object, if you like the sword, the skin, the whatever it is, special, house in Metaverse. Pay whatever you want for it, because again, that is just human. We've done that as humans since day dot. I mean, you can go back to any ancient tribe, any ancient civilization. There was always artworks, there was always treasures, always intricate, things buried with everyone, because that's a universal thing as humans. We value cultural discovery via physical artwork, and that is just who we are. And that's why it's worked, is because this is tapping into a deepest thing of being a human and of human consciousness is the NFT craze. It's not, that's why it's not a craze, actually. That's a bad word to use. To discover digital art and digital goods is amazing. And I think we're just seeing that. We're just seeing humans go through a massive leap forward in our evolution. And it's exciting, but it is very dangerous for certain elements also at the same time.
Absolutely. And I also want to also chip in. I think it's no longer an ocean. It's a big Amazon forest. Everybody's thirsty and hungry. Yeah. So I think in the interest of time, we left with one more minute. How I wish I can have another hour with all of you. But as a moderator, my job is to round up this whole session, and with you guys giving a takeaway. And like always, as an investor, I like to always ask this question: give me a minute elevator pitch of the key takeaway. If today I'm considering your fund, so what is the key takeaway that you would like to share? Perhaps Patrick first.
Oh, okay. Thank you. Sure. Basically, and this is something I just said to one of our clients this morning as well, because he asked, what's the difference between your crypto quant fund and any other crypto quant fund? And I told him very frankly, I said, odds are, given the current stage that the market development is at right now, you're probably just going to do just as well, whether you go with us or whether you go with someone else. I mean, at the end of the day, what you get with us is that we want to make sure that you have a good relationship, not just with us, but with the underlying asset class as well, and that you gain more than just an investment opportunity, but you gain an education as well to understand the asset class, to understand the underlying, to understand the ecosystem as well. Because really right now, where we are in terms of the market cycle, where we are in terms of development, we've got at least a good 3 to 5 years ahead of us easily before the institutions and the regulations start coming in full on, where a lot of the alpha is going to be traded away. So from now to that time, even a discretionary long fund is likely to do very well. So which shop you go to really depends on, and I don't want to pretend like we have this magic black box, because a lot of the strategies that we're using are strategies that were adapted from FX, from commodities, from traditional equities and stuff like that, which we have adapted to suit the cryptocurrency space. And for us, what we believe in is simplicity and transparency, these two things. As an investor, I think you deserve that, because this is your money. So we want to work with you, and we want to cultivate that relationship with you, which is what we've done all these years with all of our clients. We have big gala dinners back in the before times when those were actually possible, and we want our clients to get to know each other, because as you grow, we grow as well. So if you're just looking at us in terms of pure performance, then that's really not the kind of relationship that we're looking to build. We're looking to build in a way that adds value to you, and so that we can grow together as you gain exposure to this asset class in a sensible and logical fashion.
Absolutely, Patrick. Yeah, thank you. Irene?
There we go. So yeah, I would say for the main fund that I work with, LitiCapital, it's an amazing team of experts who were doing quant trading in the traditional world. Our compliance officer came from ING. So they're at the crossroads of traditional and crypto, and have outperformed the price of Bitcoin for the past 4 years. And I just, I love working with them, because we're at the Amsterdam Stock Exchange and we're a registered fund with the Dutch government. We also have a DeFi fund, and it's a DeFi fundamentals fund. And we also have a delta neutral fund, which is very interesting for investors to reduce risk, especially when the market goes down. So we kind of have like the ice cream shop of crypto funds, and we plan to expand that as time goes on.
Good. Dominic?
Yeah, hi. For us, decentralized technologies is our passion, it's our vision. And I think we don't have to discuss that it's going to be the future. And we see that from an investor's perspective, you have to diversify in the space. And to get a holistic exposure in blockchain, you have to consider token investments, more liquid S strategies, as well as equity, traditional venture. If you want to get exposure within Europe in the entire blockchain space, then we are probably the right guys to do that as a partner. And I see that with Patrick as well. You want to build a long-term relationship with an LP. And most of the time, and that's as if we look at our LPs and the relationships we've built, in the beginning, it's more an educational ticket. It becomes more and more serious over time. And we're happy to guide our LPs along the way.
Thanks, Dominic. Grant?
Yeah, well, first off, I'll have to just say basically, if you really want to look at good quality funds, come to Australia. Whilst they might not be domiciled here, I think Australian fund managers are some of the best in the world. I think 3 of the top performing funds in crypto are ran by Australians or Australian guys living in Australia. First of that, I think the secondly thing is, you've got to ask yourself, where else are you going to get volatility? And, we need to get rid of the old, the post-2008 mantra that volatility equals bad is a silly idiom. We need to understand that volatility equals growth, growth equals prosperity, prosperity equals happiness. You need to tell investors that. And the last one is nothing to do with investing, but if you're 17 or under, you need to be learning how to dev in Rust or Solidity ASAP and be reading the white paper and everything you can about crypto, because by the time you're 25, your entire existence is going to be defined by this ecosystem.
Yeah. So last but not least, mate, what about also giving a free surfing lessons?
I'm no surfer, but I'm sure Dave could do that.
Okay, David.
Wei Meng, thank you for hosting the panel. It's been a great discussion. So basically, we are a staid, conservative, regulated, passive structure where any investor, wholesale investor in Australia, can invest in a unit trust to get one-to-one exposure to Bitcoin. There's nothing terribly romantic or exciting about that, but it's a safe pair of hands in a regulated environment, and you can talk to your advisor about us. Many advisors are becoming familiar with Monochrome and what we do. So if you want exposure to the asset class and you're not sure where to start, Monochrome in our Bitcoin fund is a pretty good place to start.
Good. All right. So, ladies and gentlemen, again, thank you very much for your feedback and your contribution. It's been very insightful. And to the audience, if you have any other questions, or if you like to, invest in all of us, please send us an email. We'll be very delighted to serve you. Please continue to engage us via email. We are always here to answer some of your doubts. I think this is a trend that is going to be further accelerated. And I'm hoping that we all will contribute in this growing sector and bring this into a sustainable asset class.
Well, that was the final presentation. Thank you for being a part of Venture and Capital. From a wholesale investor perspective, we work absolutely day and night to create these type of opportunities for you. From day one, we have been about building an ecosystem, about building a foundation, about bringing people together. The core vision of our company is about creating opportunities for tomorrow and then empowering innovation, capital, and ambition. Over the last 5 days, you have seen that in every single thing that we have done. And I'm proud firstly, I want to say a big thank you to our team. When people see virtual conferences, often you may think that this is easier for us to run. I can assure you that running virtual conferences is actually much harder than running live conferences. You know, our team has done an incredible job of bringing this together for you and providing a platform which not only provides professional content, you know, in a way in which you can digest and give you access, give you insights, and help sort of shape your own investment thesis for yourself. But then to be able to provide you with direct access to the people, you know, that are involved in the conference, that are actually the keynote speakers, that are on the panel sessions, and be able to have breakout sessions with them, engage with them directly. So, you know, for me, we've done everything we can to make this as an engaging experience as possible. And that doesn't happen without you as an attendee. It doesn't happen without the amazing speakers who so kindly give their time to not only be a part of the presentations, be a part of the panel sessions, but also give their time to actually be involved in the different live breakout sessions which we're hosting. So from this, there's a whole bunch of live breakout sessions that are taking place right now. Make sure you go into the Brill app. Make sure you go and join them. From the Wholesale Investor team, thank you very much for being a part of Venture and Capital. Enjoy the networking, enjoy the breakout sessions, and see you at our next event.